high-level military contacts that were suspended shortly after the invasion of Ukraine. The agreement came during negotiations in Abu Dhabi aimed at seeking an end to Russia's war. President Donald Trump's special envoy, Steve Witkoff, says that Ukraine and Russia agreed to exchange 314 prisoners as part of those peace talks. Elsewhere, UK Prime Minister Keir Starmer has apologised for appointing Peter Mandelson as US ambassador despite his known links to the paedophile financier Jeffrey Epstein. Seeking to turn the page on the political crisis engulfing his government, Starmer said that Mandelson had lied to him, portraying Epstein as someone he barely knew. Meanwhile, the UK's Defence Secretary says Mandelson played no role in facilitating the award of a £240 million data analytics contract to Palantir. The contract was awarded without competitive tender by the Ministry of Defence in December, attracting scrutiny in the wake of the Mandelson scandal. Palantir did not immediately return requests for comment, and Peter Mandelson declined to comment as well. And emails released by the US Department
Everyone, good morning, good afternoon, good evening to all of you. Welcome once again to this live commodity analysis. स्टार्ट करते हैं commodity analysis. निफ्टी बैंक निफ्टी देखोगे तो कुछ खास हो नहीं रहा है पिछले 3 दिनों से। नीचे मुझे थोड़ा सा निफ्टी में लग रहा है सपोर्ट के आसपास वापस आने वाला है, तो वापस पुल बैक एक्सपेक्टेड कर सकते हैं अनटिल अनलेस कोई मेजर इवेंट ना हो जाए। आज अभी 1:30 लंदन सेशन ओपन होगा, उसके बाद इवनिंग पे 6:30 न्यूयॉर्क सेशन की ओपनिंग है, एंड देन 8 बजे यूएस मार्केट ओपन और 8:30 पे कंज्यूमर सेंटीमेंट और इन्फ्लेशन एक्सपेक्टेशन का डेटा है। दोनों ही डेटा इंपॉर्टेंट है, बट या उससे सबसे ज़्यादा इंपॉर्टेंट डेटा है, आप कह सकते हो, दैट इज़ यूएस और ईरान के बीच में ओमान में आज टॉक होने वाला है। स्टार्ट हो गया है शायद, मुझे लगता है जहाँ तक। तो वहाँ से क्या आउटकम निकल के आता है, दैट विल डिफाइन द मोमेंटम ऑफ क्रूड ऑयल, नेचुरल गैस एंड इक्विटी मार्केट एज वेल। बाकी सिल्वर ओवरऑल तो बेरी से थोड़ा बहुत रिबाउंड किया है। कल $70 को ब्रेक एक बार कर दिया था, क्लोजिंग नहीं आई 4 आवर टाइम फ्रेम की कैंडल पे, अभी भी होल्ड करके रखा हुआ है। बिटकॉइन भी 60,000 को हिट करके वापस थोड़ा बहुत पुल बैक दिया है। नाउ फिलहाल नेचुरल गैस में देखोगे, कल मार्केट एक रेंज के अंदर फंसा था, इन्वेंट्री बेरिस आई थी, मार्केट ने थोड़ा बहुत सेलिंग दिखाई बट वापस रिकवर कर लिया, तो वो कल के रेंज के अंदर वापस फंस गया। इसके रेजिस्टेंस और सपोर्ट दूर ही हैं अभी, तो कल के ही लेवल है, कुछ खास अभी चेंज हुआ नहीं है। कोई नया लेवल बनता है तो वी विल सी, अभी के लिए और कोई लेवल है नहीं इसमें, भी इसको अब पॉइंट ऑफ इंटरेस्ट को रखने की जरूरत नहीं है। क्रूड ऑयल भी देखोगे, कल मार्केट थोड़ा बहुत गैप डाउन ऊपर होने के बाद अपसाइड गया, फिर डाउन साइड आया, वही एक रेंज के अंदर ही फंसा हुआ है। सो लेट्स सी, कुछ ट्रेड बनता है तो देखते हैं इस रेंज में पर्टिकुलरली। अभी यहाँ पर और कोई ट्रेड तो है नहीं इस पर्टिकुलर जोन के अराउंड। ट्रेडिंग सेशन है तो ध्यान रखना। बाकी डाउ जोन्स देखोगे, S&P 500, नैस्डैक तीनों ही नेगेटिव चल रहे हैं। एक्सपेक्ट करते हैं कुछ मोमेंटम अगर होता है वापस से मेजरली, नेचुरल गैस ऊपर रेजिस्टेंस पे आ जाए या फिर कोई नया रेजिस्टेंस सपोर्ट क्रिएट कर दे। कल से देखोगे 4 आवर टाइम फ्रेम पे या इवन 1 आवर टाइम फ्रेम पे बहुत ज़्यादा कंसोलिडेशन में ही है नेचुरल गैस। अभी तो वॉल्यूम डाउन ही है, नेचुरल गैस में थोड़ा वॉल्यूम आता है तो चेक करते हैं। US-Iran talks have been slightly delayed in Muscat, Oman, according to Al Jazeera. स्टार्ट हो जानी चाहिए थी, अभी थोड़ा सा लेट हो गया शायद। ठीक है, दैट इज अ मेजर इवेंट कह सकते हो आज का। We are getting reports from Muscat that the talks are expected to be slightly delayed and not start at 10 a.m. 6 GMT as scheduled, as Iranian state television reporters in Muscat quoted a member of the Iranian negotiation team as saying that they will begin between 10 a.m. and 11 a.m. GMT. ISNA reports the Oman talks are focused solely on the nuclear issue with no discussion of defense matters. आज आरबीआई की पॉलिसी भी आई थी एंड पॉलिसीज रिमेन सेम, कोई रेट कट नहीं हुआ है। 5.25 का जो रेट था दैट इज स्टिल स्टडी। ठीक है, तो आरबीआई अभी भी रेपो रेट को मेंटेन करके रखा हुआ है। अब देखना पड़ेगा आने वाले टाइम में रेट कट करते हैं या नहीं करते हैं। 5.25 तो लेके आ गए, 5 से नीचे बहुत कम ही लेके जाते हैं नॉर्मली, जितना देखा है रिसेंट टाइम्स में। बाकी आज बांग्लादेश में भी इलेक्शन है एंड परसों है शायद, आई थिंक जापान में भी इलेक्शन होने वाले हैं। थाईलैंड में भी शायद इलेक्शन है, 3 इलेक्शन भी कवरेज रहेगी। Pakistan to host 2029 Winter Games, replacing Saudi Arabia. That is old news.
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Doug Krisner. And we begin with the stock market, where it was another day of heavy selling in software shares given worries over the impact of AI. A new version of Anthropic's most powerful AI model can carry out financial research. It's also designed to be better at a range of other work-related functions, and that would include making spreadsheets and presentations, as well as software development. Today, the S&P 500. It's also designed to be News when you want it with Bloomberg News Now. I'm Doug Krisner. And we begin with the stock market, where it was another day of heavy selling in software shares, given worries over the impact of AI. A new version of Anthropic's most powerful AI model can carry out financial research. It's also designed to be better at a range of other work-related functions, and that would include making spreadsheets and presentations, as well as software development. Today, the S&P 500 software and services sub-index fell by more than 4.5%. After the bell, Amazon's first quarter outlook was below consensus, and the company said it intends to spend $200 billion this year on data centers, chips, and other equipment. Now, the market is suspecting that Amazon's massive bet on AI will take longer to pay off than anticipated. Here is Bloomberg analyst Poonam Goyal.
They need to invest, right? We know that Amazon has to continue to invest in cloud services. It needs to invest in AI. So there's a lot of catch-up that needs to be done here. I think the long-run narrative here is still good. The underlying results were solid across both AWS and retail.
That is Bloomberg analyst Poonam Goyal. Shares in Amazon were down 10% in late U.S. trading. At the same time, there was a sell-off today in Bitcoin. It tumbled below 64,000 as an unwinding of leveraged bets deepened. Bitcoin lost more than 12% during New York trading, and Nobel laureate Paul Krugman says Bitcoin is facing a real crisis of faith.
A lot of people sold Bitcoin as being the next gold, and it turns out that in the face of doubts about stability, doubts about politics, the next gold turns out to be gold, not Bitcoin. I think it's a big wake up for people that maybe this isn't actually going to be an enduring asset.
That is Nobel laureate Paul Krugman speaking on Bloomberg Businessweek Daily. Bitcoin has wiped out all of its gains since President Trump's election set off a speculative rush into cryptocurrencies. Now, Bitcoin's plunge has rocked the digital asset complex, and few companies are more exposed than the Bitcoin treasury company Strategy Inc. Today, after the bell, the company confirmed a net loss of $12.4 billion for the fourth quarter. Shares in Strategy Inc. were down by more than 2% in late U.S. trading, but these shares have lost 45% of their value so far this year. The treaty limiting U.S. and Russian deployment of the most dangerous nuclear weapons lapsed overnight, and President Trump is renewing calls for a stronger pact instead of extending the current agreement known as the New START Treaty. Here is former Republican Congressman Patrick McHenry.
I think we haven't addressed nuclear disarmament in over a generation here in the United States. I think it's a worthwhile endeavor. I think the complexity of this administration's foreign policy is not well understood by the market. Everything is interconnected. Russia, the Middle East, China, Russia, Ukraine, Middle East, China, Canada. All the trade conversations, all the foreign policy and Department of War actions, they're all connected.
That's Patrick McHenry, former Republican congressman and Bloomberg News contributor. Meantime, the U.S. and Russia have agreed to restart high-level military contacts. They were suspended shortly after the invasion of Ukraine. Today, U.S. Treasury Secretary Scott Bessent testified before the Senate Banking Committee on Financial Oversight. And during the hearing, Democratic Senator Elizabeth Warren asked Bessent about the possibility of the Trump administration bringing a lawsuit against Fed Chair nominee Kevin Warsh if he does not lower interest rates. Now, Warren's question referenced reports over the weekend that Trump joked that he would sue Warsh if he did not get interest rates down. Here is the exchange between Warren and Bessent.
That is up to the president. Can you commit that you will?
I'm sorry.
Can you commit that you will not hold up?
He won't be sued if he doesn't drop interest rates.
And he
won't be criminally investigated.
The president also made a joke about you that I won't repeat, Senator Warren.
That was the
actually, I will. He said he had reservations.
If this was a joke, why not just say so?
It was a joke, and he made a joke about you too, Senator Warren.
Yes,
got a lot of laughs.
Now, Bessent went on to say that Warsh is highly qualified to be Fed chair. In Tucson, Arizona, the search continues for Nancy Guthrie, who vanished from her home 5 days ago. She is the mother of Savannah Guthrie, Today's Show co-anchor. Yesterday, Savannah made an emotional appeal to her mother's apparent kidnapper, and today, Savannah's brother, Cameron, made an appeal of his own.
This is Cameron Guthrie. I'm speaking for the Guthrie family. Whoever is out there holding our mother, we want to hear from you. We haven't heard anything directly. We need you to reach out, and we need a way to communicate with you so we can move forward. But first, we have to know that you have our mom. We want to talk to you, and we are waiting for contact.
That is Cameron Guthrie. Now, authorities have not identified any suspects or persons of interest. However, tests show blood found on Guthrie's front porch matched her DNA. And that is news when you want it. With Bloomberg News Now, I'm Doug Krisner, and this is Bloomberg.
As a place to do business, the UK stands apart, not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day, fueling innovation across every sector. Home to 4 of the world's top universities, it provides exceptional talent and breakthrough research. This sits alongside a clear 10-year industrial strategy, unlocking smarter regulation and making it faster and easier to operate. Stability with dynamism. Global connectivity with local depth. It all adds up to greater growth. Visit business.gov.uk/growth.
Pooja, let's get your perspective on it. I mean, it was a 7-day sell-off amounting to a loss of $1 billion. How are you assessing the movements we're seeing today? Dip buyers coming back in.
I think it's less about dip buyers. It's more about people differentiating between stocks that are more likely to get hit hard versus those that have staying power. So, for example, if you look at what happened in the EM context, global sentiment spilled over to EM. And that sentiment being negative means the first wave of reaction was a big sell-off. And that sell-off was indiscriminate across software, across hardware, etc. But now you're seeing Kospi, Samsung, SK Hynix stabilize because investors are realizing that the impact on hardware supply chains is different from the impact on software stocks. So more than dip buyers, Haslinda, you're trying to see investors trying to line up fundamentals and not just trade on sentiment.
So Pooja, is the AI, is the tech trade still intact then? I mean, is it just a matter of reassessing who the winners and losers are?
I think the AI trade is structural. But in the near term or even in the midterm, there are a couple of things to watch out for. One, of course, is valuations. So some stocks are priced like they're going to grow 100% for the next 5 years. That's just not going to happen, right? So watching out for valuations is important. The second thing in the tech trade is to differentiate between companies that AI is going to disrupt. And, it will disrupt many companies, many industries. And that will mean weaker margins, especially for lower value-added players. So if you think about Indian IT services, for example, that's one segment that's likely to get hit hard in terms of competition, margins, and some companies dying out. But in contrast, if you think about the Chinese hyperscalers, firms like Alibaba, cloud revenues are growing 35-40% year on year. Margins are growing. And companies like that, especially the Chinese hyperscalers, they have a direct-to-consumer business, which is sticky also. So they're less likely to get disrupted by the AI trade. And so I think the AI trade is structural, but what is different going forward is differentiating winners versus losers in hardware supply chain, and within software, companies that can sustain versus companies that are going to see margin pressures and possibly get wiped out completely.
In investing in defense, especially in the US. So we're talking about global alternative asset managers. They have experience investing in private equity in defense, and those asset managers have private credit arms, so they're particularly well positioned to shift and also deploy via private credit. So out of the transactions that we've reported on, Carlyle had made some. Having said this, not only large asset managers that have previously invested in defense could be playing a role. We also have more generic, sector agnostic asset managers that for the first time are considering defense. So that's kind of the shift that's happening.
Yeah, does it mean that the ESG concerns have fallen by the wayside?
That's a really interesting question. ESG restrictions are still in place. It's the interpretation of those restrictions that have changed. So typically you would have the investors in private credit funds. So that's, for instance, insurance company, pension funds. So they used to be very strict about these restrictions. And defense was considered similar to gambling or tobacco investments. It was a no-no. You just couldn't. Private credit funds just could not invest in these kinds of companies. Having said this, there has been, we're really hearing about a shift in mentality, in interpretation on behalf of these investors. So defense is being reframed as important to national security, and it is important to support the industrial resilience of the continent. So thanks to this, investors are now okay and ready to allow the private credit firms to invest in defense. And also there's some regulatory changes. The European Commission issued a notice that clarified that defense investments are in line with its sustainability framework. So also that kind of clarification of the legal interpretation of ESG requirements has been helpful.
OK, so the policy helping to change the narrative as well. Francesca, really great reporting. I recommend a read of that piece on the terminal. That's Francesca Veronesi. Thank you so much. We've got plenty more still to come on Daybreak Europe, so don't go anywhere. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I think there is a prospect of some further cutting interest rates. And I said, I think in my last sentence, I said I'll go into each meeting asking myself that question. So look, I think going into March 50-50 is not a bad place to be in.
Bank of England Governor Andrew Bailey there. Well, the pound yesterday saw its worst drop against the euro since August, initially on speculation around Prime Minister Keir Starmer's future, but then on that dovish vote split from the Bank of England. 5-4 to hold, the governor himself the deciding vote. And ING strategists see the pound dropping to 90 pence per euro. That would be the weakest since the Liz Truss moment in 2022. Currently trading at 1.15, but on the flip side, flip the board, and we can take a look at at the dollar's strength, or at least the move away from de-dollarization, and how it's been weighing on gold. Now, gold this morning is having a slight recovery. We're about $4,840 an ounce. But our MLive team flagging that we need to keep an eye on gold over the weekend, because the People's Bank of China over the weekend, if it adds to its gold stash, could help gold to reassert itself. We also have that raft of US economic data and Fed speak next week. If the texture of the figures and the tone of the words merely leave the door open to more Fed cuts this year, that could also help the yellow metal. Flip the board one more time, because we've also seen software stocks and Bitcoin tracking each other lower. Bitcoin seeing a more than 50% retreat from its October peak. Software stocks extending their tumble after Anthropic rolled out that new model, which we were discussing with Matt Bloxham, and that risk-off mood reflected in the US futures picture this morning. Risk events today, we have the US-Iran talks, data stateside and Fed speak, so plenty more before the weekend. The opening trade's up next, and Guy and Tom will take you all the way to the open. Have a good one. This is Bloomberg.
cidade estava sitiada.
Nisso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Good morning, good morning. It's Friday the 6th. This is what we're talking about this morning. Tech has been hit hard again. Amazon's big spending plans just adding to the angst. Silver's had a really wild night over in Asia. We'll get to that in a minute. And Bitcoin bouncing off 60,000. It's down, though, 50% since October. Michael Saylor's strategy hits the rocks with a $12.4 billion Q4 loss, Anna.
Let's put some of that together and show you where we are in terms of equity market futures right now for Europe and for the United States. Europe is really doing its best to try and bounce. We've seen a huge amount of volatility through the Asia session. A lot of those popular trades being reversed over the past few sessions or so. The S&P down for 3 days. So the emphasis is still on the negativity, on the risk off. But we are seeing an effort to try and bounce. Nasdaq futures actually off their earlier lows as well. Down 0.5%, but they were down by more than that earlier on. And to Guy's point around Bitcoin, we are trying to bounce there as well, up by 2.7% right now as we come through the Asia session into Europe. But we have seen Bitcoin lose 50% of its value, so we'll certainly talk more about that through the programme. The countdown to the opening trade starts right now.
Good morning, happy Friday. Let's start on tech once again this week. And I'll start with some numbers because it is again about CapEx. Let me remind you, in terms of the CapEx spend promises from Microsoft, $105 billion for this year. Meta, $135 billion this year. Alphabet, $185 billion this year.
You've remembered all these, well done.
Amazon, hold my beer, $200 billion at the top end for 2026. Put it together, $650 billion in potential CapEx spend from 4 tech companies for 2026.
OK, let's put size and scope here, because I did some research this morning. The German federal budget for 2026, I think, is about $618 billion. The exchange rate, obviously, is changing things a little bit. So they're spending more than Germany, and that is it's just epic.
These are now countries up 60% year on year as well from these 4 tech names, as you've set out, Tom. That is the extent of the uplift that we're seeing in CapEx. And there are still questions about whether it's going to be all worth it, essentially, aren't there? And that's what the market seems to be increasingly antsy about. And that has weighed on the Amazon share price.
If you're looking for some kind of reassurance, it's the backlog in demand that you're starting to see, not just Microsoft, but Amazon as well. Close to $250 billion that they say has still to be delivered in terms of the demand picture. But this is a bet on winner takes all. And again, no one wants to be losing out.
So I'm a bit confused about what's happening out there at the moment. So there's 2 stories that are unfolding, one of which is the massive CapEx spend, and the other one is what is happening with the software stocks, OK? So let's take the software stocks first. The software stocks are down because we're worried that AI is going to work.
Yes.
OK?
I know where this is going.
The big tech stocks are down because it's going to cost too much to get there. Is that kind of where we are at this point?
Yeah.
Because
do they fit together?
There's 2 different narratives here, and I'm trying to work out if they do fit together.
Well, yeah, I mean, it does seem they sort of almost can. We seem to be able to worry about both of those things at the same time, but we do seem to have lost sight of some of the hope around this, I suppose, or what it's all for. And that takes us to the software side. Anthropic out with another of their exciting new releases. Remember what it did to some of the legal services. Second in a week. They keep them coming. This one is catchily named Claude Opus 4.6. It's for financial research, so this is going to be relevant to our audience.
Pay attention.
Analysts pay attention. I was looking at what it does. Scrutinises company data, filings, and the market. It also can do some spreadsheets and some presentation. Does that do more than the things that are out there? I don't know. We'll have to wait and see. But it does seem that all this week, markets have been selling first, asking questions later. We really have lost sight of that sort of symbiotic argument between software as a service and AI.
OpenAI and Anthropic are now pre-IPO companies, and they are getting match fit for that IPO, and they're trying to prove that they can monetize this technology. So this volatility is going to continue because more releases will be coming from both of those companies through this year as they lead up to those IPOs, and the question marks will continue in terms of how they push up through these verticals to show that they can actually make money on these massive investments.
Let's talk about some of the other market themes, because we've got tech, we've got Bitcoin, we'll come to that in a moment. But some of these popular trades, things that have been popular that we've talked about a lot, whether it's tech, software, AI data centers, whether it's gold, whether it's crypto, they've just fallen out of favour, it seems. And that seems to be the dynamic of this week. And there doesn't seem to be one uniting narrative. We talked about this yesterday. We've seen the S&P down for 3 days on that sort of jittery environment. Metals is very much part of it. You've talked about, the volatility through Asia on the metals side has been incredible. Silver was down at 10% at one point. I'm now looking at my screen. It's up 1 or 2. This is the kind of volatility we're getting used to on a daily basis.
Silver's in particular, is having a really wild ride here. And I don't know if you can make sense of it. I keep reading notes, trying to understand what is happening and trying to get a kind of through theme that gives me some guidance as to what happened. And I can't find it. Because the 10% swings on a daily basis
Such a small market.
It's that's the only. So that is the only conclusion you can come to is basically there's a lack of liquidity. You're getting huge volatility. But I don't know where the signal is beyond that.
Yeah.
We've talked about Chinese buyers. So Chinese buyers' open interest on the Shanghai futures contracts falling to the lowest level in a year. So do you need the Chinese buyers to come back in? We talked about the volatility around silver, but there's volatility around gold, less so. But if gold is at the most volatile level it's been in decades, how much of a hedge does gold play longer term? There's still a bet on this. PIMCO thinks that longer term gold's going to play that role. But it is a much more volatile asset than we had assumed just a few months ago.
One thing that I found really interesting yesterday is actually Treasury's played a bit of a safe haven role, which is not something we've seen.
So this is the dollar. This is the dollar story as well.
Yeah.
So the dollar's coming back as the dollar looks like it's playing the right role again.
Yes, traditional.
And Treasuries are doing that again as well.
We need to hear from Walsh, and we need to get some data, and we'll get certainly the data next week.
A little bit later. Let's talk about Bitcoin and what is happening there. Looks like it's bounced off 60. What was it? You had 64 over there just a minute ago, something around there. So we've bounced off the 60 level, which looks like a kind of key line in the sand for the time being. But is October now the high for everything? Was last October the kind of the market's peak in October? Bitcoin certainly did.
124 in October.
Yeah, it's down by 50%. So it's been absolutely battered. Since then. Strategy out with its numbers last night. Michael Saylor's sticking to kind of the narrative going forward. $12.4 billion loss, though.
Mark to market, that'll hurt.
That's, precisely. That is... And that company is basically a high beta proxy on what the Bitcoin trade is. Can it hold 60? Now, there's this other theme which is beginning to emerge as well. You've been talking about quantum this week. Is Bitcoin old technology? If quantum comes through, could the algorithm be cracked? And would it become, therefore, worthless in that kind of scenario? These are the things that people are beginning to talk to. Bitcoin's beginning to feel a little old and long in the tooth.
Do you know what? We've got a whole episode on quantum computing on Bloomberg Technology next Friday. So that's a nice little pitch to the show ahead. So we'll ask that question.
So can quantum crack Bitcoin?
That is the longer-term question, a longer-term question for Bitcoin. The here and now as well is how many leverage bets, more leverage bets are going to be
cleaned out.
And what does that mean? What are the then connections, to your point yesterday, to the broader markets around the unwound?
Is there anything systemic around what we're seeing in Bitcoin? Is Bitcoin to blame for any of the volatility in other markets? Michael Burry, we were so busy yesterday, we didn't get to talk about this much, but Michael Burry has been making this argument that this is going to be systemic, that this is going to feed into other financial services businesses and weigh on sentiment. Others disagree, say it's not so integrated.
I've definitely seen both sides of the argument, saying that actually it's reasonably ring-fenced. Actually, there isn't that much spillover happening here. That, to your point, that actually it is a single story rather than a systemic story. I don't know. We'll kind of watch out, but it does feel as if we've got a series. If they're not correlated, we've got a series of big volatility events coming through all at the same time, and that feels to me like there could be some connections.
Let's get to Orsted, as we're thinking about wind today, which will become clear later when we tell you the guests we have on the programme. We've got Orsted coming through with their guidance and their numbers. The Q4 revenue looks to be better than expected. The full-year revenue looks to be slightly better than expected. There is an EBIT loss. It isn't. And it is worse than expected, it seems. So an EBIT loss of 1.04 billion Danish kroner against an estimate of a profit of 1.3 billion. And there's an impairment charge in the fourth quarter. But they are maintaining their 2026 EBITDA guidance. So,
have you seen Stellantis is taking a huge charge? Stellantis is taking a charge of around 22 billion euros in the second half of 2025 as it looks to reset the business away from EV. There's also the BYD story, which is out there as well, which is certainly a story out in the Chinese market in kind of substantial fashion. But it looks like, therefore, we are seeing a second half preliminary net loss for Stellantis of 19 to 21 billion euros on the back of this charge.
So this charge includes a cash payment as well. So it isn't just all some sort of accounting activity. There's a cash payment as part of that, which is 6.5 billion. So we will keep that in focus as we move closer towards the open. And actually, auto stocks have been quite volatile this week. We've had some numbers out from some places which have been negative. Some of the smaller car makers out with some numbers that have weighed on the sector. That followed a day where the sector did actually quite well. So on the back of FX moves, I think. So we'll certainly keep an eye on that. Taking charges of about 22 billion on this EV reset.
LG is ending its joint venture with Stellantis. I'm assuming that's the battery story. Yeah.
They're scrapping the dividend and they're authorising as well an issuance of 5 billion euros of bonds. So more corporate issuance in terms of debt. That has been authorised by the Stellantis The Statist board, BYD, as you say, very interesting as well, particularly in terms of the domestic market, and a reminder that the consumer in China remains very squeezed. Let's get to the broader banking space with a focus on Spain and Europe as well, and get Sabadell, because the latest lines coming through from Sabadell in terms of the numbers, essentially in line with estimates. So fourth quarter net income coming in at €386 million, just slightly above the estimates. Net interest income for the fourth quarter also essentially bang in line with the estimates, confirming Sabadell, Banco de Sabadell, the 2025-27 strategic plan targets. Very pleased to say we can bring in the CEO now of that bank exclusively, Cesar González Bueno. Cesar, good morning. My first question to you, though, is, given your success in fending off the takeover bid by BBVA, why are you stepping down?
Well, I came here when I was already retired. The challenge, I was retired and enjoying a good life. And the challenge of turning around Banco Sabadell was so tempting, and I'm so thankful of having had this phenomenal 5 years of turnaround. Let me tell you, we have multiplied the value, including dividends and share buybacks, by 12 times in the course of 5 years. We are the best performing stock in these 5 years of all the Spanish stocks. We are the first and best performing stock of this period of all the European banks. And we have a phenomenal successor that is ready. I think the time couldn't be better.
What are the priorities for the new leadership on the back of the numbers that we've had out today?
I think it's very clear. I know Marc Armengol, the new guy, and I've fully endorsed the proposal of him becoming the next CEO because he's full of virtues. And he knows the bank upside down, and he has been part of the strategic plan that goes until 27, that will bring us to a return on tangible equity of 16. And he's committed to that, and that's the first commitment that he has for his new endeavor. But at the same time, we have fully digitalized the bank, we have modernized the bank, but there is a next challenge, there's a next opportunity now around AI. Marc is a phenomenal business person, he's a phenomenal team leader, but at the same time he has a spike, which is that he's very good on all the very technical areas. I think AI is not a bluff, it's a real thing. We're underway of transforming the bank also with AI, but he's going to give a spin to that is going to make this phenomenal bank even better.
Cesar, good morning. Thank you so much for joining us. Tell us a bit more about that then, because we've been speaking to lots of bank executives about AI and what it can deliver. Some cast it as quite front and centre. For some, it seems to be just part of their sort of tech plans. How much potential is there to reinvent what you do and how you do it using AI?
It's phenomenal. When you see the case examples and the life examples that we already have, which are yet not fully transformative of the whole operation, you see the potential. It's undoubtful. You see, for example, how an agent, a digital agent, can hold a conversation around serving a client or having a recovery of a small amount, and the metrics are unbelievable in terms of performing the same as humans, and at a much more efficient rate. The number of case users will grow and grow. It's still at the beginning in terms of having real impact on the numbers, but 5 years from now, it's going to be a real transformation.
Okay, and you're talking about investment in AI and what big changes that this can bring for the business under new leadership. At the same time, you've just come from successfully fending off a takeover bid. Are those two things linked, Cesar? Is it going to be a story of investing in AI for the future to ensure a standalone future?
I think it is far more simple than that. I think we have done a phenomenal job in transforming the bank during these 5 years. I think I am ready to move to a bit more enjoyment of life. And I think we have internally the management, all the executive team, the motivation in the bank is at its highest. And it was a good moment to do a transition. On top of that, there is, of course, an AI opportunity. And Marc will first and foremost deliver on the results, but at the same time start a transformation that will be very significant. And it's as simple as that. There's no more complexity in the story.
Cesar, congratulations. I'm very jealous. It sounds amazing.
Retiring twice is quite an achievement.
Retiring not once but twice sounds like
Spain.
Yes.
sounds like a fantastic thing to do, I have to say. You leave the bank as a standalone institution. What does it need to do to remain a standalone institution? Does it need to become bigger? Does it need to deliver M&A of its own? Does it need to become an acquirer? What do you think the strategy should be continuing from here to maintain Sabadell's independence?
I think the course is very clear. We are not yet, but we are in the course of attempting to become the best bank in Spain. And we are not so far in many fronts. And it's about doing more and better of the same in that respect. M&A is not going to happen internally in Spain in the near term. Why? Because there are three very large players that should not be bigger for competitive reasons and competition laws. And all the rest are, at this time, having a very sweet period with good strategies, with growth, with capital generation, and therefore, unless there is a change in the macro environment, there will be no opportunity for further consolidation. It would make sense, but it's not to be expected in the near future. In a longer term perspective, it would be very much logical that to happen, and of course Sabadell is the best place to be the consolidator at that time, but it doesn't require it neither from a defensive nor from an offensive perspective.
Cesar, I'm looking at the data on my Bloomberg screen telling me about the top holders of your stock. David Martinez comes in at number 3. He is looking like he is going to sell down his stake in the bank. Who is going to replace him? Is there a need for another big shareholder like that on the list? Who is it going to be?
As you know, Zurich has a 5% holding of the bank. Is at the same time a phenomenal partner in insurance. We are growing in a fantastic way with a cooperation that, it's an example of how to do a cooperation with an external partner. And they were crucial in the defense of Bank Sabadell because, of course, they didn't tender their shares, which only had a 25% tender and therefore was unsuccessful. They are a core investor. But furthermore, who is our core investor are our retail investors. 40% of our investors are retail. And of that percent, of those, 75% are at the same time clients. And those are the ones who, only contributing with 1% to the tender, demonstrated that are our core shareholders. They are our clients, they are engaged with us, we serve them with pride, and that's the core.
Cesar, of course, you're selling TSB to Santander. When does that sale close, and what will the final price be?
The final price in the estimate, because of course the proceeds of what is happening between the closing of the sale and the closing belongs to Banco Sabadell, will be around 3.3 billion euros. And the closing will happen in the second quarter. It's going ahead extremely well as planned. I think it was a beautiful transaction both for Sabadell and for Santander, which is always a good thing. We both won.
Cesar, we'll end the conversation with a slightly more sensitive topic. The Spanish media has been reporting about alleged relationships between Sabadell and Jeffrey Epstein, the disgraced financier. Of course, I know that this is a part of the business you have since sold. It was the Miami subsidiary, I understand, and none of the current management of Sabadell had anything to do with that period and that business. That all said, is there anything for you to look into here? Is there any action to take?
Well, there aren't, because we don't even have access to the information. It's very old stuff. There was apparently a loan in the normal course of business, but we do not have access to that information, so nothing to be expected.
Cesar, we will leave it there. Thank you very much indeed for your time this morning and all the interviews you've given us over the last 5 years. Please send us a postcard. Cesar González.
Thank you so much.
The Sabadell CEO. Thank you. I will look forward to that. I wonder where it'll come from. I imagine he's got many places on on his list of things to visit. We are going to be joined by the Vontobel CEO very shortly, Henrik Andersen, the Vestas CEO. I can see him. He's literally just walking into the building right now. He'll be on set very, very shortly as well. Madison Fowler, JP Morgan Private Bank Global Investment Strategist, will be joining us as well, as will Anbiti Baghuna, Northern Trust Asset Management's Global Co-CIO.
Coming up on the programme, Rio Tinto walks away from the Glencore mega merger. We saw the Glencore share price dropping on that yesterday. We will bring you all of the details behind that latest move in the metals market. Plus, we'll focus on Japan ahead of Sunday's snap election as a BOJ board member adds to signals pointing to interest rate hikes, perhaps. Up next, we will check back in on the markets with more on the AI spending spree and the tech sell-off. Please get in touch with us. IB plus BBTV Go is the function to use. That's on the Bloomberg terminal. It's Friday. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Let's bring in Bloomberg M Live's Ven Ran. Welcome back. Happy Friday, by the way. We're going to get another check on the markets with a particular lens on the central banks. But let's start on the precious metal story. Maybe the two are linked. Ven, good morning. Help us understand what is happening with the price action. Once again, volatility back, most pronounced in silver. Silver and gold both up in the session now, at least up as we look at it now. But, of course, volatile, certainly silver. What do you make of what's going on? Where are we? Are we going to settle out? Are we going to get to a place where there's a bit more comfort in the precious metals?
Morning, Tom. I think that this was an accident waiting to happen. I mean, the way prices had run up in both gold and silver, and particularly silver, was just unfathomable. And many in the Reddit crowd wouldn't have seen this coming because, you know, if you saw the social media all the posts were about, how silver is headed for the moon and, fundamental misalignment of supply and demand and all that. Well, there is a fundamental supply and demand mismatch in silver, but that doesn't mean that it can keep going higher and higher. And what we have seen over the past week is an abject lesson in the markets is that, when the move gets overextended, it is time for a pullback. But, I'm more optimistic on gold rather than silver in the short term, because I think that, gold has got many virtues going for it, which is that central banks diversifying away from the dollar. You've got central banks that are relatively price inelastic buyers, and the erosion of faith against fiat currencies, all that is playing into gold. Now, even so, I think that, gold can go up to $5,600 an ounce, which was the previous record in a space of 2 to 3 months. But it can go even higher than that in the short term. But what happens after that is a bit of indifferent performance, a portfolio drag, if you will. Because I did a bit of an analysis, and what it shows is that gold is trading in $20 to $33 already, meaning that it is 8 years ahead of time, 7 to 8 years ahead of time. So I think that there is going to be a bit of consolidation after a push.
Ven, in 20 seconds, which is the biggest problem for the gilt market? What's happening in Westminster or what's happening at the Bank of England?
The bigger problem is the political risk premium guy, because at the long end, if you saw the long end, despite lower inflation forecast, the long end is selling off. So there's a conviction that the markets are fearing the political risk premium.
Ben, great stuff. Thank you very much indeed. More on the markets next. This.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Half an hour to go until the start of the Friday session. The Friday session, we're almost there. Futures look like this. This is the picture in Europe at the moment. You've got most European futures negative. There's a little bit of variance within it as to what we are going to see on the downside. Nasdaq futures are also negative this morning, which is worth paying attention to, down by 0.3. S&P futures are down by 1 to 2, 0.2%. So just a little bit, but we're not bouncing. I think that's the critical thing. Bitcoin has bounced a little bit. Where are we now? 64, something like that. 64, 65. So a little bit of a bounce there, but it still feels like quite a rocky start.
Yeah, with that comparison to 124 back in October.
That's the number you need to remember.
We'll be checking gilts, of course, at the open at 8. There was quite a bit of movement in terms of the gilt markets yesterday on the back of the BOE and some political risk premium. But right now, in terms of the sovereign debt of Europe, are you seeing a little bit of a bid for German debt and the debt of France and Italy as well? So German 10-year currently basis point move of around 3 basis point move lower. French OATs at 343, also lower by about 2 basis points, and BTPs as well. So a little bit of money moving into the sovereign debt of those Eurozone nations at the moment.
It has been a volatile week, plenty of news flow to discuss. On top of that, we have plenty of earnings coming through from the financial services sector. Let's go to those from Vontobel right now. The money manager out with numbers that come in better than expected. Profits at the net level for the full year, certainly. Efficiency project, that's being announced, a plan to cut costs. So we will certainly talk about that. Let's have a conversation about all of this with Vontobel's co-CEO, Christelle Rondu de Lint, who joins us now. Christelle, really nice to speak to you today. Your numbers better than expected, it seems, at the full year profit level. So that seems sound. What is the conversation with the client base at the moment? What do clients want to talk to you about, Christelle?
Yeah, just to come back on our results, indeed, a successful year for us at Vontobel. We grew profitability, assets and capital, all while absorbing the macro headwind, so the lower interest rates and the much weaker US dollar. And that's the segue to what our clients want to talk about. They want to talk about how to invest. This is what we do for them. This is how we grow, by the way, investment expertise, not extending our balance sheet. And the conversation is very much centered around diversification and how to diversify one's exposure.
OK, diversification. And clearly you're having some success in attracting some new money. I noticed the new money number for 2025 is the most in 4 years. We've seen the Swiss money management landscape, of course, over that period really shaken up. How is that falling out for you, if you like? All of the chaos created in the immediate aftermath of the collapse of Credit Suisse. How is that building towards new money?
I think the geopolitical environment is one that plays very much into our own strength, or volatility, if you wish, is one that plays into our own strength, where the institution, Vontobel as a whole, stands for stability, a 100-year-old institution. Switzerland remains one of stability as well, institutional stability. And then there's all this discussion that we just already alluded to around diversification, whether it's a sector thing now around AI and technology, whether it's a currency thing, and in particular around the dollar. And this is one that really plays into our strength, because who are we? We are a stable, solid investment management house, active with experts.
OK, Christelle, let's talk about that diversification trade in a little bit more detail. One of the ways in which a lot of people are trying to diversify has been into private markets. Private markets are now awash with fear about overexposure to the software sector. How concerned do you think your clients should be?
In general, it's a theme that we've approached and broached up with our clients very early on. And this is definitely, you're right to point it out. I think when you invest in let's call it across segments, right, you have to look at your exposure and make sure that you have that look through. So you might not be exposed to a given sector in the public markets, but you might be exposed in the private markets. What you certainly don't want is to pile up the same type of exposure through debt, equities, and then potentially private equity. So I think the concern is not greater that at any point in time, albeit considering the valuation, one might even want to take take a closer look. But I think it's just been a long period of time, and I mean by that the quantitative easing period, where you could almost look away. Everything was kind of roaring along, and you're back to basics.
Do you think, if we're going into a new period, do you think the illiquidity premium that private markets bring is a good thing or a bad thing? We are entering, it seems, a period of higher volatility. Your clients, if they're in private markets, have run the risk of being locked in for longer. Is that risk worth taking as you try and deliver that diversification trade?
So it's a defined answer. It's a risk worth taking with the right manager, and if you can afford the illiquidity. So there's not one size fit all clients, basically. But bear in mind, I'd say private equity, 80% or 85% of US companies that have a turnover of above 100 million are private. So if you want to get exposure to that segment, which, you know, is a diversification and an additional segment, you've got to go private. But only do it if you can indeed afford to be locked up. And I can't repeat that enough.
Crystal, on the diversification story, how concerned are your clients at all about exposure to the US? Are you seeing any significant repatriation of capital out of the US to other markets?
We're not seeing panic, if that is the question. I think when you look at the relative performance over the last few months now, you are seeing a reallocation, a rebalancing, I'd say, of flows, right? And I'm talking the industry now, not generally ourselves. But you're seeing emerging markets performing well. You see European markets year to date performing well. But by the way, you see even intra-US market, you see a rebalancing away from some of the tech sectors, equal-weighted S&P doing better. On our side, we do specifically have that conversation with our clients because this is one of the angles, one of our strengths, offering that diversification benefit to our private and institutional clients.
You mentioned, this ties in obviously, but you mentioned the dollar a couple of times, and so we've obviously seen a strong Swiss franc on the back of that. Most of your costs are in the Swissy. Are you doing anything to mitigate that the strength in the Swiss franc?
This is a structural trend, right? Switzerland, and we are, as an investment manager, an export industry, so you're kind of born with that strengthening Swiss franc. So, of course, we're looking at it intently, and we're certainly not looking to extend the difference between how much is based in terms of our revenues in dollars versus cost. But what comes with it as well, certainly last year, and positions us strongly, is while it's challenging from a translational perspective, it's favorable from an operational perspective because it does lead to all those conversations that we want to be having with our clients, including with our US clients.
Crystal, can I ask about this efficiency project you've announced? Is that about short-term cost cutting, or is that about investing in technology which might save you money in the future? We've talked a lot about AI on this programme.
So this is, efficiency program that we've announced actually in 2024. So we're running into the third and last year. 100 million project. We're really actually ahead of it. So 80 million at the end of last year. It was about first getting leaner, faster, but most importantly, embedding the cost discipline and increasing our efficiency. So that there's definitely the intent, and we have done that, to invest into our growth areas, and technology is of course, a supporting element of that.
Crystal, thanks for bringing us the numbers and the insight. We really appreciate your time this morning. Crystal Rendu de Lint, Vontobel's co-CEO. Thank you very much indeed. Coming up, a crisis of confidence in crypto.
A lot of people sold Bitcoin as being the next gold, and it turns out that in the face of doubts about stability, doubts about politics, the next gold turns out to be gold, not Bitcoin.
We're going to go big on Bitcoin next. More analysis coming up. This is Bloomberg.
are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the programme, 7:42 here in London. The futures picture then looks pretty flat, actually, for the overall market. Some real divergence, though. The FTSE 100 could be weaker. We are, of course, watching very volatile metals prices and commodity prices, and so that could have an impact. And some M&A falling apart, of course, M&A that was planned. Announced in session yesterday, but we'll see if that has another day to it. DAX futures, though, pointing a little bit higher, Guy.
Let's talk about some of the corporate news we've had over the last couple of days. Vestas out with numbers yesterday. The stock closing lower on Thursday. This after the Danish wind company said 2026 revenue could be a little bit softer than previously announced. The company also raised its dividends and announced a buyback. Why did the stock drop? Let's kind of talk a little bit more about this. The Vestas CEO, Henrik Andersen, joining us around the table. Good morning.
Good morning.
Stock was down quite hard yesterday. You sometimes get this volatility around earnings. I can't work out whether it was because the buyback wasn't big enough and people had anticipated more, still fairly substantial, or whether it was because of concern around services margins. What do you think?
Yeah, first of all, I think we've actually had a very good year.
Yep.
We came out of a very good year, and if you have asked me the day before, and probably quite a lot of people around us, we would probably have not foreseen that was where we ended, and yeah, that's up to us.
Yep.
I think we are in a business where it's quarter after quarter, and as we also demonstrated last year, we don't like big splashes when it comes to capital structure. We set out now a policy that is revised for capital structure where we will reallocate more of our cash flow back to shareholders.
Yep.
And that will come gradually. So we have 4 quarters to go in a year, and therefore we start with 150 million euros.
Could that number go higher then?
There's cash enough. We have a cash balance end of 2025 of 1.2 billion. And of course, maybe some have looked at, said, could we have done more? Question here is, as we said, we'd like to distribute up to somewhere around minimum 40% of the net profit. Everyone can see that was not 100 million and 150 million. So therefore, there's probably a question of when and who. And there we're saying, come on, we just want to be a regular buyback of shares.
Just on the services margin as well, what are your thoughts there? Does that get better?
I think the underlying business is getting better, but we
so
also
you're building a lot offshore at the moment.
We are building a lot around the world, and as I said, the busiest quarter we have had, fourth quarter. So in some ways, the business is high activity, and we are halfway through what we call the service recovery, and I will say great progress. Still a little concerned of that we shouldn't release anything on P&L side. So let people continue to do the proper recovery on the service side. And then on the onshore, on the offshore, really pleased to see the progress.
Henrik, you had, what, 16 gigawatts, a little over 16 gigawatts of orders in 2025. What's the order book looking like for this year? How much above that level do you get, do you think?
I don't think we are normally the ones where sort of a little luxury compared to many other industries. We are covered from an order book in year because there's typically a 35, 40 weeks lead time into getting it to site, getting it commissioned. So therefore, when I look into a year like this, a bit more concerned about is there some stop and goes in border crossing, or is there some stop and go for weather reasons or something. So otherwise, we have a pretty good and high transparency on a year like we are entering into. And then, of course, this year, from a commercial point, all about filling both the offshore longer out and onshore 20 years, 7 and 28.
Talk to us about the US market. You've gone from a situation where there was policy certainty with the Inflation Reduction Act under Joe Biden to an administration that has a lot of animus towards the wind industry. How is that changing your strategy for the US market? How much are you prepared to commit to that market? Is it becoming less investable?
No, I think we have been there. I mean, we have factories there. We have been there with factories for more than 2 decades. And I think always here, energy is a little bit in the category of defense. Pendulum sometimes swings, but overall we need to find a middle ground of that, which has also been the case in previous administrations, and this administration have had one time before. When we come up towards 28 and 29, we'll see some of the tax incentives changing, and I think right now it seems like the underlying energy price in the US is actually pretty much demanding more capacity being built fast. So for us, I think it will work, and customers in general see it will work.
Is that a data center story, that demand?
I think it's a twofold, because the data centers, we all talk about data centers, inflated topic as I call it, but it's true. We are building it, it's there, it's coming, but I think also the other sides, one shouldn't underestimate that now for at least 4 to 6 years we have said relocate, made back in America. And if we look at our locations and facilities in the US, they have been expanded over time in the last 5-8 years. So therefore, I think that also drive an energy demand in the US.
Yeah. Henrik, so putting all that together and your stance on the States, are you looking to lean into more US investment, or do you keep your plans as they are, no change?
A little bit the answer is the same as here. We never run capacity expansions just by thought or positive CEO feeling. We run it by what comes in tangible in an order backlog. So when we can see our order backlog increases and become longer, that's where we then consider using and expanding the capacity. And let's not forget, it's only a couple of quarters, I said here, where we were still ramping up to full capacity in the US, and our deliveries in 25 in the US went up with more than 60%. So we're actually pretty pleased with where we are right now.
What are conversations, when you talk to the administration in the States, what do those conversations look like? I mean, the view, President Trump's view is well known, and we see the impact of that, and it goes through the courts for some of your customers. But I wonder, you know, he's also somebody who sometimes changes his mind, and there's a lot of demand for energy, for data centres and other things, risking pushing prices of energy up for other customers. Is there a sense that there is an argument to be made there?
I don't know if there's an argument to be made. I try not to go there, because I think the argument today seems to be a bit counterintuitive in most part of the world. I think I like to talk about energy facts, because if we see it, the whole world, the societies in a decentralized world as we are seeing, all requires more electricity. Whatever we use, we can look at our home base, we have iPads, television, cars, transport. So the electrification is happening across the globe. That drives an underlying demand for electricity. And of course, for us, come on, there is an electricity demand. Go outside this morning, you'll see the wind is blowing, and it will blow again tomorrow.
So will the US use increasing amounts of wind, despite the politics?
I don't know if it will necessarily increase the wind, but it will take advantage of that it's an energy source that is available, and it is affordable. And that's the whole point here. People are also looking at saying, how does that look 20 years from now? And you just had a very successful AR7 here. For exactly the same reason, you can build a capacity that is probably 30-40% cheaper than building another gas facility in price comparison.
What did you mean when you say data centers are overinflated?
No, but I just, as I said, listen. I was yesterday morning. I came on a similar morning show with a CNBC, and I was asked on a topic, and I burst into laughter because somebody said to me, "What do you think about this new thing that we could build a data center in space?" And I said, "Do you know what? Maybe it's just me. Maybe I'm born too early or whatever." Because I'm sort of saying we got a lot of things to take care of on the street and the earth right now. So maybe sort that out first, then we can start playing with the next thing.
There's plenty of sun. Not sure about the wind up there. Henrik, thank you very much. Henrik Anderson, the Vestas CEO. Thank you for joining us. Let's get stocks to watch with Jennifer Creary.
Good morning. We got another big day of earnings, and we start with Sabadell. Sabadell announcing fourth quarter earnings, but also an 800 million euro buyback starting next week. But perhaps overshadowing all of that is the announcement that we got last night that the CEO, Cesar Gonzalez Bueno, will be leaving the bank. He'll be replaced by the UK head, Mark Armengol. Of course, this comes just months after Sabadell defended itself against a hostile bid from rival BBVA. So perhaps those shares will be moving at the open. Next up, we're going to flip over to another set of results, and that's from the French lender SocGen. SocGen announcing a 1.5 billion euro buyback program and also a beat on fourth quarter earnings. Of course, this all comes in the context of the French lender cutting costs, cutting hundreds of jobs and selling assets. So let's see if that buyback program is enough to keep investors happy at the market open. Finally, we're ending on Stellantis. Of course, the company announcing that it's taking roughly 200 billion euros in charges. That comes as it overhauls its operations, and it also faces weaker electric vehicles sales. Of course, it's not the only car maker that's announcing similar write-downs. Ford, General Motors as well announcing similar measures. So those shares definitely could move on the open. Back to you.
Jennifer, thank you very much. Jennifer Creary. We're watching geopolitics. We're heading into the weekend. Iran and the United States are talking in Oman, and we've heard from the semi-official news agency in Iran, that's Tasnim, that the conversations have started. Oil prices are up 1% or so. The Iranians playing down the progress they expect to make here.
Oil prices are continuing to climb, which is interesting. So, yeah, Brent's up 1.25% this morning. How does the market react? What's the market position for? Is it positioned for this to go nowhere, or is the market position for something to happen here, or is the market position for nothing to happen here and therefore there to be military action? There's some premium priced in, but I don't know how much.
One of the worst case scenarios for trade and oil would be the closure of the Straits of Hormuz, and we have a story today about tankers speeding through that choke point right now on those tensions. So already freight are making some decisions to kind of get through there pretty quickly. But this is something we're watching and monitoring. And as you say, the movements, oil has been volatile, and now it's up 1.3%.
The Iranians saying today that these negotiations could be the first stage of a longer diplomatic process. So there's a sense that this, at least from the Iranian side, that seems to be the message they're trying to get out there, that this isn't going to be something that is done and dusted today or into the weekend, that this is something that drags on.
But there's also reports of a kind of growing concern again on the streets as to what happened, and a kind of another reaction to how hard the authorities have been obviously pushed down the first set of protests. So that story hasn't gone away either.
Yeah, and is that on President Trump's mind, or is it very much the possibility of doing some sort of nuclear deal? Because both of those things have been cited.
Yeah, on the human factor, I mean, there's reports of 30,000 people massacred by the Iranian authorities, but the reporting out of the White House seems to suggest that they are very much focused on the nuclear program rather than alleviating the concerns of the people on the ground in Iran. But we'll see how that evolves.
Absolutely. OK, we are coming up to a market open that looks like it's going to be fairly flat here in Europe. US futures continue to be soft on the other side of the Atlantic, so we're going to bear that in mind when we think about what's going to happen with the tech story. Keep an eye on the autos this morning. Big charge being taken by Stellantis. That could be a standout feature this morning. The market is 5 minutes away. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Welcome back. A couple of minutes to go until the final session of the week. The opening trade almost upon us. This was yesterday's session stateside. Really choppy. Number of things colliding yesterday in this market. The selling of the software continued. You've got the labour market data, which is still not looking that pretty. That's a factor. Certainly that got rolled into yesterday's session. We're waiting for the payroll data, the official payroll data. Obviously, that's going to come next week. So really choppy session. The Nasdaq obviously was under more pressure, and we've had Amazon overnight as well to fold into the narrative. US futures are currently negative. So all of that still needs to be priced in. So the back end of the session kind of continuing, and then we get a drop in futures, Tom, into the European start of the day.
Yeah, Nasdaq 100 futures, Nasdaq 100 now down about 3% year to date. European markets were down by about 1% on the close yesterday. Banks really taking a big hit as a sector. Interestingly, tech actually performed in Europe relatively well. But we'll see how that story, of course, evolves today. The capex spend from those big tech companies stateside, 650 billion total for 2026. Will that give a lift ultimately to some of the suppliers around the AI story? European futures currently flat. FTSE 100 futures down 0.6. We're watching the mining space, of course, on the back of the Glencore and Rio deal coming apart. DAX futures pointing the gains of 0.3%. So the German picture looking a little brighter, Anna.
Let's talk about some of the stocks and sectors in focus. The car makers will be. Stellantis in focus. They're taking a charge, 22 billion euros, resetting the EV business, facing higher cost, muted EV sales. Of course, that's the theme there. Watching the banking sector, Sabadell front and centre. We spoke about the handover of the leadership of that business, the TSB sale. We'll watch that one at the start of trade. And SocGen unveiling a buyback, profits beating. We had profits missing over at Orsted in the wind sector, but they're reinstating their dividend. We'll see what that does to the share price. Guy.
Lots to fold into this session. Let's get it going. It's time for the opening trade. This is what the early numbers look like. We're expecting the FTSE 100 to be under a little bit more pressure than most this morning. It opens in the red. It's down by 0.2%. We'll wait and see exactly what happens with the oil price today. That could be critical for the London market. But you've also got a gilt story that we're going to get to in just a moment as well. Stock 600 fairly flat as we open up for trade this Friday across Europe. It's going to be interesting to see what the CAC does, the DAX, the SMI. The DAX on the auto sector story story. I know Stellantis isn't there, but it's going to be something that we're going to watch out for very carefully. The IBEX is down by 0.5%. The banking sector front and centre there as well. We'll give the CAC just a second to see if it opens. Looks like it could take a little longer maybe to get it going this morning. That could be a Stellantis story. We'll come back to that in just a moment. Tom, what do you got on sectors?
Top sectors right now: construction up 0.8%, energy, to your point about oil, up 0.7%. Brent is currently up 1.1% at $68 a barrel. We watch, of course, the talks that are underway between the Iranians and the US. So energy is there, utilities up just 0.1%. On the downside, biggest losses coming through. Basic resources, we kind of saw this one coming given the pressure on iron ore and also the breakdown of the deal between Glencore and Rio Tinto. Currently down 1.1%. Basic resources off. And financial services as well. We've got the Anthropic news in terms of a further update there. Financial services down 0.7%, Anna.
I'm interested in the move higher in the construction sector. Vinci is a big mover there, up by 5.4%. And this was a story that started yesterday, really. We had some of the infrastructure companies in Europe doing really well, benefiting from the data centre story. So again, this is another sort of incongruity of the markets, that we can celebrate those companies that are set to benefit from the data centre build-out, such as Vinci, up by nearly 5% this morning, and at the same time we can worry about all that spend on data centres over in the United States. I'm not sure if those two things fit together, but that's where we are right now, it seems, on markets.
I'm still waiting for a price on Stellantis. It has yet to open. The expectation is that it is going to be softer on the back of what we are seeing. In terms of what the biggest percentage drop is this morning, it's Sabadell, which is interesting. An interesting time to exit the business, you could argue, for the current CEO, handing over to the new one. But Sabadell is down circa 6% on the back of what we've seen this morning. Yeah,
really interesting conversation about AI being the future there, but at the same time,
not my future.
Yeah, handing over to new leadership. And we got a price on the TSB from our conversation, didn't we? The price
3.3 billion euros.
Yes, so
was the price.
Maybe new information to the markets. Just digesting it this morning. Let us talk about where we are in these markets in a bit more detail. It's been a busy week. Let's talk to Madison Fowler, JP Morgan Private Bank Global Investment Strategist, who's with us this Friday. Madison, good morning to you. Taking a while for things to settle down this morning. The London market underperforms a little bit. Stock 600 actually down now by around 0.3%. Nasdaq futures down 0.6%. So a sense that we're still in this slightly nervous environment where we're asking a lot of questions of tech and asking a lot of questions of the themes that have done well around metals as well. As we go further into February, Madison, how are you thinking about the investment climate at the moment?
So I do think that, as we've experienced these first 5 weeks of the year, there's been a sense of recalibration and a testing of investor resolve. And there's certainly been an amalgamation of risks that we've faced, whether that's geopolitical tensions, questioning around, the sustainability of AI spending and disruption around business models, central bank divergence, questions around growth. So there's certainly a lot to, I think, latch onto and create a sense of worry. But I do think that's why when we put together our year ahead outlook, it was called both promise and pressure, which is, I think, a cognizance and a realization that there are challenges and there are pressure points, and we need to be aware of them as investors. But at the same time, some of those challenges are also opening up a lot of opportunities, especially for active managers. And so I would say that the punchline is that we are constructive but not complacent to the risks.
Okay, so if you're constructive, which of these do you not buy into then? Coming out of big tech because we're worried about CapEx, coming out of software because we're worried about software, coming out of gold and precious metals, silver and the like because they've just gone up too far. I mean, do you like any of those things despite the volatility we've seen this week?
I do. So I think what we're looking at right now is kind of a flush out around some of the worries when you had, I think, really a two-part problem, especially when it came to tech. One was the question around the monetization timeline around all this big tech spending. And the second thing was the more recent questions around business model risk and disruption risk. And so I think that some of that was probably necessary just from an investor discernment standpoint. And I think that that level of scrutiny is actually a healthy thing. I do think when it comes to tech, what we want to be focused on is who are the companies that are producing high quality earnings growth and who is showing that they have the propensity to monetize that. And then when it comes to commodities, I do think that there is, again, a flush out of some of that speculative buying. But when it comes to gold in particular, I think that remains a really crucial diversifier for us in portfolios. given the fact that we think that all of the structural dynamics are there, not just from a uncertainty risk premium, but also from structural central bank buying and the fact that retail activity does not look stretched at present.
How are you starting to factor in some of the expected updates that come through from the Anthropics and the OpenAIs of the world? So Anthropic with this new model that's targeting financial services, the London Stock Exchange Group is down about 17% year to date. It's down about 5% today. We're down to focus on a single name, but we can expect more updates from these big models as they lead up to their IPOs. How do you strategize around that? How do you invest around that story?
And I think this is where the active management conversation comes in as well. Again, because our call has always been to invest across the entire AI value chain, so a sense of diversification as a result of some of this disruption. I would also just signpost that this process of creative disruption is commonplace throughout history. So, for instance,
is this an overreaction of what we're seeing right now for names like the London Stock Exchange and others that face this upcoming threat? Do you see this as an overreaction, as it may be a buying opportunity?
I wouldn't necessarily say it's an overreaction. I think it's a sense of market scrutiny of figuring out which companies can provide that longer-standing, high-quality profitability. And I think that through that level of questioning, there are some companies that are quality companies that might get hit in the process, and that's where the active managers step in. But I do think that this also, again, signifies that creative disruption is relentless in this type of environment.
You think active managers can pick winners in the tech space at the moment?
I do. I think that when there's more dispersion, that opens up further opportunities for active managers. But at the same time, of course, you're not going to get every call right. But I do think if you're focusing on those areas, for instance, that are more, if you're just talking about the software space, horizontally integrated versus vertically integrated, and so they have more deep competitive moats as opposed to being more AI wrappers, then that, I think, is a more prudent place to be when you're trying to position within the AI space.
Active has had a really tough time. It's not great. It hasn't had a great track record recently over the last few years of outperforming the index. Is this going to be the year? It sounds like you're suggesting that this is going to be the year in which active outperforms index.
So I think the last few years you didn't have the best setup for active managers. To your point, you had interest rates that were quite low, which made it difficult to even earn a return on cash if you're a hedge fund manager. And then at the same time, you had higher correlation, less dispersion. And so when we think about active management, that kind of alpha winter that we were feeling over the last few years, I think has certainly shifted quite a bit. But I would just stress there is huge dispersion between even active managers, and so that's why that manager selection conversation is really important.
We've seen big moves in the auto sector this morning, Madison, distracted by a 14% drop in Stellantis, for example. There was a sense some time ago that maybe the auto sector was drawing a line in the sand, that it could bounce off, that it had restructured a little bit. This sector, for you, still troubled? I mean, this is to do with rising costs and EVs not living up to expectation in terms of the sales numbers. What do you think of the sector as a whole?
I think it's still finding its footing and finding its way, because not only are there the issues that you called out, but there's also I think large change within the competitive landscape between, for instance, Europe and China. Exactly, and then in addition to that, you've had a number of years of manufacturing malaise within Germany, and we are actually starting to see the inflection points of that moving higher. So I think there's a case to be made for stabilization, but our areas of focus when it comes to cyclical sector exposure are more in the security theme of industrials.
In terms of what happens next, I hear a lot about diversification. Is diversification going to allow me to outperform this year, or is it going to continue to be an underperforming strategy because there are going to be core areas of the market that do better than others? Over the last few years, if you've diversified, you've underperformed because big tech has done well. Is that era now over? Is diversification no longer a losing strategy? And does it matter what I diversify into? How broad does my diversification need to be?
It, of course, matters what you diversify into. And I think at the same time, what I would say is with any diversification strategy, the aim is not to be the top performing asset, because ultimately
you can't be.
You can't be. That's just how the math works out. And so when I think about diversification, I think that I want to be prepared for a range of different scenarios. So I want to be positioning for, upside in our base case, which means, an allocation towards equities broadly. To your point on concentration risk, we are starting to see the earnings growth gap narrow between the Magnificent Seven and, the rest of everything else. But at the same time, thinking about the other scenarios, fixed income offers you carry. Elevated yields also means that in a downturn, bonds protect you, but then in a volatile...
Are we sure about that? Are the bonds going to protect us? Because they seem to over the last few days. And is that trade back?
I think that fixed income can offer you carry in the type of environment that we are in. And I think in a scenario in which you see a global growth downturn, yes, we would expect that bond yields would fall and protect investors in that type of environment. But if you were to see an environment in which inflation is structurally higher and more volatile, which is also something that we think will take place over the course of the next 10 to 15 years, bonds might not be enough, which is why we're very much focused on commodities like gold, real assets like infrastructure, and also hedge funds for uncorrelated returns.
Guys like a Roman centurion looking for a shield.
But that's what everybody's looking for at the moment. They're trying to figure out. There's been a rotation out of tech into
gold's going to work. Oh, hang on, maybe not. Treasury's going to work.
Any other ideas? Bitcoin.
So there's been a big conversation about diversifying into Chinese tech because of valuations. Well, HS Tech, that index has fallen 20% now from October.
It's a bear market.
So it's into a bear market. So what happened to that? What happened to that trade?
Diversify? Yeah, precisely. Are all these things? This is the challenge that everybody's facing at the moment. Is that all of the things that we thought were going to be diversifiers are now seeing massive volatility. So how is the diversification strategy working?
Sure. So I think, for starters, we are shifting into a little bit more of a volatile environment. Yep. In any given year, volatility is to be expected. The average, S&P 500 year sees a drawdown of 14.5%, but the average calendar year is still up 75% of the time. So I think that makes the case for staying invested. When it comes to, where to diversify, I think different areas of the market provide exposure to different things. So gold can be a diversifier in the sense that it can act as an inflation hedge. It can be an uncorrelated asset. When you're talking about China tech, that's a growth story. So that's a little bit different. You want to be exposed to the competition between U.S. and China. And I also think that within that, you're positioning for an environment where, China as a broad economy might not be on its, upswing just yet, but China tech offers opportunity.
Madison, quickly, before we...
Sorry, it's the correlations that matter.
Yes, the correlations. Yeah. I wonder what the correlations are between the politics of the UK and what's happening in the gilt markets and UK assets. Do we start to price in, should investors start to price in more risk premium? Do you expect that to be priced in on the threats around the Prime Minister Keir Starmer and his political position?
I have seen, bond markets over the course of the last few years certainly react to political uncertainty. And it's not just a UK phenomenon. And we've seen it in the US, we've seen it in Japan, we've seen it in France. And a lot of that happens on the longer end of the yield curve. So that element of uncertainty, whether it's from a political catalyst, whether it's from fiscal and debt issues, whether it's from, geopolitics, that tends to happen on the longer end of the curve, which is why you've seen, 30-year yields rise.
Are you worried about the UK?
I think that the UK, from a growth perspective, has certainly had more of a mixed run over the course of the last few years. When we look forward, I do think that there has been a shift towards more fiscal conservatism, which we certainly saw that markets reacted positively to in the last budget. But I do think that, like the conversation for any economy, they're trying to solve the productivity problem. And I think that's something the UK is focused on, too.
It's great to see you. Thanks for stopping by to see us. Busy morning. Busy week. Madison Fowler, Global Investment Strategist at JP Morgan, private to bank. Call 6 looks like this morning. This is where we're seeing some of the action. Chips are down. The ASML story is there, down 0.6%. Luxury is also not having a great morning. Defence is bouncing back. Rheinmetall had a tough day yesterday. You're seeking a little safety maybe in Nestlé. Down in Vevey this morning, up 0.6%. If you're looking for the biggest points drags this morning, these are they. Stellantis, SocGen, and interestingly, Danone is down as well when I bring up that Nestlé story. But let's start with SocGen with Jennifer Creary.
That's right. We're having a look at SocGen today, really slumping on the open. That's despite the French lender announcing a beat on fourth quarter earnings, but probably not enough to assuage investor concerns over some of its cost-cutting measures, including cutting jobs and selling assets. Those shares are down on the open. Next up, we're moving over to Sabadell. Sabadell falling as well, 3.6%. Of course, that comes after the news that the CEO is leaving the bank. He's being replaced, but also fourth quarter earnings coming out, probably not enough again to boost investor confidence. Next up, we're flipping over to Rio Tinto. The big news coming out yesterday that Rio Tinto and Glencore talks have fallen through to create the world's largest mining company. Those shares really getting hammered in the open. And also we've got Stellantis as well, the car maker falling double digits this morning. That's after it announced it was taking 200 billion euros in write-downs as it struggles with weaker EV sales and higher costs. Next up, we've also got Lotus Bakeries. Lotus Bakeries full-year earnings beat analyst estimates. Those shares rising on the open, rising more than 2% off of the back of that. Back to you.
Cakes and waffles, gingerbread, cookies and snacks. Apparently, that's what they make. That's just got me ready for a second breakfast, I think it would be at this point, Tom.
Yeah, nice timing. Thanks for that. Now just focused on my hunger.
Got to have two breakfasts.
It's a double breakfast. It's a double breakfast Friday.
On a Friday, for sure.
Right, Jennifer Crew, thank you very much indeed. Coming up, talks to create the world's largest mine. How do I segue from double breakfast to the largest mining company? And talks there collapsing. What would have been the largest mining company? We're going to take a look at where that leaves Rio Tinto and Glencore. The backstory to this and the Bloomberg reporting has been fascinating. It's well worth a read. The wider industry. We're going to get the details next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back. 8:19 here in London, Friday the 6th of February. We made it to Friday, everybody. And the Stoxx 600 in Europe is down by 0.1%. The DAX is pretty flat. The CAC 40 and the FTSE 100 actually both kind of on a par, down by around 0.3%. Real weakness coming through in the auto sector because of the Stellantis story. And basic resources, once again, an area of weakness. Yesterday we saw Glencore down substantially within that sector. But once again, we've got basic resources on the back foot. Guy.
Let's talk about what is happening. We're going to talk metals. We're going to do it in two different ways. The first thing we're going to do is talk about what is happening with the company story. Merger talks between Glencore and Rio collapsing after the two companies failed to agree on a price, or Glencore failed to agree on a price, but I guess it takes two to tango. The deal would have created the world's largest mining company. What happens now? Let's find out. Martin Ritchie joins us, our metals and mining reporter. They keep trying and it keeps not working. Why does it keep not working?
Yes, they have been trying or talking about combining these two companies for a long time, and it went right down to the wire yesterday. There was a deadline for them to extend talks, but it looks like just ahead of that they decided this wasn't going to work. Glencore, according to our reporting, at least demanding at least a 40% share of the combined company, and this just wasn't going to fly with Rio Tinto. It's an interesting combination because on the one hand, Rio really wants more copper. It's a very experienced mining company, both in building mines and operating mines. Glencore has got very good assets, especially in Latin America, but they're not. A lot of them aren't developed yet. They're future assets. They give optionality for the future, and so bringing the two companies together was supposed to kind of unlock all that value over the future. I think the sticking point is really that Glencore is wanting a sort of a hefty valuation right now for that optionality that lies well in the future, whereas Rio Tinto, possibly with an eye on its existing shareholders, not so willing to come up for that kind of short-term deal. So it could still happen. They can still start talking again in the future, but for now, it's again delayed, and it points to the kind of difficulties of these big merger transactions that the mining companies are trying to do.
Well, on that point then, Martin, does this open the door? Is there a view that BHP could now make a play for Glencore?
It's the obvious thing that people are discussing. BHP obviously also wants a big copper deal. It's tried last year with the attempt to take over Anglo American, which also ended up with BHP backing off. The problem here is it's the obvious suitor. But the problem is, if Rio has backed away, then BHP's shareholders would be saying, well, why would we be able to pay that kind of valuation as well? And it's a complex transaction, which BHP walked away from another sort of difficult layered transaction last year. So again, it doesn't seem like straightforward, certainly, and it would be, I guess, on the surprising side if they were to do that.
Martin, we've talked before about how your presence on TV often indicates there's something exciting happening with precious metals. There has been. I can see that silver is actually up by 3.6%, which is pretty tame for silver these days, but it was down by 10 during the Asia session, wasn't it? I mean, what is happening? What is the latest news driver?
Let me be frank and ignore that tiny little move up for silver today, because what we've seen really in context in the last few days is a kind of sell-off across metals, both base metals and precious. They've come down from really elevated levels. We had that whole kind of manic trading around the world, people buying into metals here in China, a lot of trading interest, and I think that some of the air has come out of that balloon, as it were, and we're starting to come back down to earth a bit. And it's certainly on say copper or silver. A lot of analysts are saying the valuations previously were really too high, but perhaps in gold there may be a sense that this is a dip that some analysts say is maybe an opportunity to buy some of those structural drivers for gold, for example, central bank buying, weaker dollar, etc., may still be in place in the coming year.
Okay. Martin Ritchie, Bloomberg's very own lagging or leading indicator when it comes to precious metals. Also our mining reporter. Thank you, Martin, for that update. Let's get to what's happening, talking of volatility, in Bitcoin, bouncing back after falling to a fresh low of $60,000 in a volatile trading session. The cryptocurrency slumping to more than half its value from those all-time highs in October. Let's bring in our senior editor for digital currencies, Ana Herrera. Anna, what's going on? What are the factors leading to the downside for Bitcoin? Help us understand what's at play here.
It's hard to know with Bitcoin as usual. So obviously, like, one of the big things we've been talking about that's very different is that the environment seems to be supportive compared to other times, right? Like in general, right? We haven't seen big exchanges crash. Regulation is okay. But obviously, Bitcoin being Bitcoin, it acts in ways that are very hard to determine for us normal humans. One of the things that we've noticed is that there's been a sort of lack of a clear narrative. You know, for years we thought Bitcoin was digital gold, was a hedge against inflation. It's really not behaved in those ways. It's more behaving like a risk asset, which probably it is, right? So it fell when other tech stocks were falling, and now it's bouncing back a bit. We've been told it's because 60,000 is a key level. And one of the reasons why it's cascading and falling very quickly is because crypto exchanges have this mechanism where margin positions get liquidated after they hit certain thresholds. So the more it falls, the more it falls. And liquidity has been thin since October when we had a big crash, which means that moves are even more pronounced than usual.
How are we feeling about Michael Saylor?
I mean, we should ask how he's feeling. I mean, one thing with crypto is that, you know, people that bought early and that are believers, it's still very much an ideological asset. I think
he's underwater now.
Yeah,
so is family Trump, right? Who've tried to cash in on this whole thing.
So, you know, I've been covering this asset for like 13 years, at least 13 years. So, you know, it's quick to think, oh, they're done, it's going to spiral quickly. We went from 70 to 60, and then they always bounce back. So I think maybe that's what they'd answer is like, wait, we'll talk again in a year.
Anna, thank you very much. Anna Herrera with the latest on the trends in cryptocurrencies. More on the markets when we come back. This is Bloomberg.
The problem we've got as an industry is
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance. Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is the opening trade. Welcome back. We are 30 minutes into today's session. You're seeing European stocks down 0.3% after losses of around 1% yesterday. We're focusing on the auto sector, the biggest losses coming through there. That is weighing on the CAC current over in France, with Stellantis tumbling on the back of a change around its plans on EVs. Down 0.5% on that benchmark over in France. The DAX in Germany down 29 points. Here in the UK, the FTSE 100 down 0.4%, and across the benchmark, losses of 0.3. It's the earnings story. It's the tech story. Guy, what are you seeing?
2 to 1 down. That's the ratio. 194 up. 395 down. Volume is actually reasonable. There's a lot of earnings to price in. There's obviously the kind of the structural story. There's the tech story. There's all kinds of other factors we need to fold into these markets as well. So that's the kind of internal picture. Single stocks. Let's talk about where we are leading. Vinci is up. EBIT beat. The numbers look good. Novo is bouncing back as well, up by 4.83%. It got hit hard earlier on this week on copycat therapies around weight loss pills. Allsted is also up on the back of its numbers this morning. That's where the gainers are coming through this morning. Reasonably eclectic mix on the upside. The downside is really interesting. Stellantis taking a huge charge relating to EV, getting absolutely battered this morning. The stock is down by nearly 20%. 20% on Stellantis this morning. This is one of the world's biggest car companies, has just lost 20% of its value. SocGen is down by 2.83%. Those two stocks really weighing on the French market. But I'm going to add another one in as well. Danone is down 2.51%. The reason for that, we are back to the baby milk story and what is happening there. That is a stock that is under pressure as a result of what is going on there. It's interesting that Nestle is actually tracking a little higher this morning. But French stocks, Stellantis, SocGen and Danone, all under pressure this morning, Anna.
Guy, let's get an update on some of the other political news flow we need to be aware of this morning. Japanese voters go to the polls on Sunday for a lower house election that's a high-stakes gamble for Prime Minister Sanae Takaichi. She's seeking to shore up her coalition's majority in a vote set to have wide-ranging implications for markets and regional security. The U.S. virtual embassy in Iran has issued a security alert urging American citizens to leave Iran now and not rely on the U.S. government's help to do so. It comes ahead of planned talks in Oman due to take place today between Iran and the United States. Iran said the negotiations could be the first stage of a longer diplomatic process, signaling there won't be a quick resolution to escalating tensions with the United States. Bloomberg has calculated that the 4 biggest U.S. tech companies are planning to spend $650 billion on capital expenditure just this year. Each of those companies' estimated outlays would set a high watermark for capital spending by any single corporation in any of the past 10 years. An incredible uplift year on year, and once again capital expenditure to the fore then, Tom.
Yeah, and sticking with that theme then, Amazon shares slumping after the company announced plans to spend $200 billion this year on data centers, chips and other equipment.
When I look at this, what's happening, it's kind of unbelievable if you look at the demand of what you're seeing already with AI. But the lion's share of that demand is still yet to come in the middle of that barbell, and that will come over time.
Let's bring in Matt Bloxham, Bloomberg Intelligence Senior Analyst. So we saw the shares selling off under pressure on the back of this. $200 billion on CapEx, so beating, at least in terms of their forecasts, in terms of what they plan to spend, coming in much higher than many of the other big tech companies so far. They have $250 billion in terms of a sales backlog. So why are investors so concerned?
Because that sales backlog will probably play out over a number of years. And a lot of this investment, if you think about chips and the pace at which NVIDIA and others come out with the next generation of their technology, how quickly do you need to amortize those chips before you're investing another tens of billions of dollars in the next technology? So some of this investment is going into long duration physical infrastructure like the data centers and the power to deliver it, but a lot of it is going into that kind of much shorter duration technology. And I think people just don't know what the kind of the mismatch is between that investment and the pace at which revenue is coming in.
It's so weird. There's two stories. There's the kind of we're spending too much on AI, and then there's the AI is going to change everything narrative. Both seem to be represented this week and current and having an impact. And Anthropic is the kind of the latter story. Earlier on this week, it was going to become my lawyer. Now it's going to become my financial advisor and my financial analyst. How significant is this?
It is pretty significant, and obviously, those two truths can coexist. That we're spending too much, and AI is going to change everything. And we've seen that kind of cycle before. Companies spend too much because their competitors are spending too much. And they all have to just kind of do it. Otherwise, it's a kind of mission critical risk for your business. Anthropic's taken a very different path to OpenAI and Google in the focus of their technology. Made it much more about being an enterprise robust product and looking at specific verticals within that and making a product that really kind of stands up to the kind of tests of kind of day-to-day use, and obviously the financial markets and not just investors and analysts, but anybody working in a company that's kind of got an analytical or financial kind of role. It's a hugely complex task and very well suited to the kind of things you can do with AI. And so they've kind of really found a sweet spot for that and are kind of doubling down on their investments there. They've got something like 300,000 enterprise customers. The feedback is really good. Even Microsoft has integrated this into Excel, the most popular productivity software on the planet, and it's more popular than their Copilot.
Yeah, and that goes to the question we can't answer right now. To what extent are these competitors versus sort of a symbiotic relationship between software companies and the likes of Anthropic making these AI tools? Matt Bloxham, thank you very much. Matt Bloxham, Bloomberg Intelligence senior analyst. Now, sticking with this theme, we spoke to our guests this week about the software slump and the shifting impact of AI.
Nobody is vibe coding their payroll. That is a future we're not going to live in. The market has overreacted to the perception that vibe coding is going to cause enterprises to rip and replace their SaaS spend. They're just not.
If we look at the overall economy, those jobs will be redeployed in other activities because the AI will also generate totally new activities. I mean, let's go back. It's what the internet did. It's whatever, all of these things that we've seen, it leads to a change.
The impact of technology and AI to our society, to our business is going to be very profound. And, I wouldn't say that the market is overvaluating that. But from a financial standpoint of view, I do believe that there is some reconciliations to be done.
The transformative power in this is very substantive.
For the good or for the bad?
Well, I think for the good and the bad, but I think AI needs to be regulated.
So it's powering AI from grid to core. That's where we see tremendous growth potential. It's going up quarter after quarter. It's for us the biggest growth driver in the history of the company.
Using AI will help us to invest cheaper and have a better outcome.
With lower headcount.
Exactly. Less hiring or effectively and increasing the revenues faster.
AI has an impact, yes. We are still not, and many others are not able to measure that precisely, but there's a lot of automation. And again, one transformation is about aligning common business models, having common tech platforms at scale.
So many interesting conversations attacking AI from different directions. Let's focus in on the software story. We are joined now by Anne Witty-Bahaguna, Global Co-Chief Investment Officer at Northern Trust Asset Management. Anne Witty, nice to speak to you this morning. So, I mean, the story of this week, or the news story around AI this week, has been around software, what Anthropic is doing, these plugins, and what they can do to all kinds of white-collar parts of the economy. What is the context around that software story that you think is important as we think about how substantial a shake-up this could be?
Sure. First, thank you for having me. Yes, this week has been about Anthropic and the impact on the software industry from a very macro perspective, which is sort of where I am most of the time. This is sort of the disruption we were waiting for. All of last year was, why are we spending so much money? Why are we doing so much capital spending? What is it having an impact on? And now with the coding news, the replacement of analysts, hopefully not all of us, the news is really beginning to show us that it is disruptive. It will change the dynamics in the economy, not something to be afraid of, but there will be winners and losers. And for the first time this week, it's been about differentiating the winners from the losers.
You see that, do you, differentiation? Because sometimes it looks kind of indiscriminate, or at least by a sector. There's a legal plug-in, sell anything that has a legal business. There's something to do with financial services, analytics, sell things that do that. Without asking, does this AI tool really replace or complement the things that these other companies produce?
It's been indiscriminate, in my opinion. So what I have seen so far is that, very hard to say at this early stage if we know exactly who the winners are, exactly who the losers are. But we've seen companies with 45, 50% margins, really strong stream of billions and billions of dollars of earnings, absolutely smashed in valuations, halved in valuations. And I can see the differentiation on a more on the macro level than on the micro level. In other words, you're right. There are many companies, good ones, that are being sold. The differentiation I'm seeing is really in stocks versus what's happening to the credit of that company. In other words, we're seeing the stock of a company valuation cut in half. But because the balance sheet is good, you're seeing their credits not blowing out. So there has been clearly a very small move in credit also, but nothing to the extent we have seen in the equity market. And I think that distinction is important because ultimately it's the bond market that gets it right.
It's interesting that you tie this to credit, and I just wonder how much confidence you have that story maintains. Or are we getting to a point where there's going to be a moment where people have to unwind their leverage and we get something that breaks? Are we getting closer to a point where something breaks?
So we have seen that in the credit store, and Tommy, in the credit market also, I'm talking about what I can see, which is in the public markets. You have seen the response in the companies which have that leverage you're talking about, which is predominantly in the private market. So because there we don't have the transparency on who owns what, how much software exposure do they have, what type of software exposure do they have in the venture space, in private equity, in private credit. That's where you're seeing the likes of some of the BDCs getting crushed. Because
so you're concerned about what's happening in the private?
I am concerned about what's happening in the private. But what I'm seeing is that I'm actually getting some confidence by looking at the actual credits, because some of this infrastructure spend and data center spend has been funded in the public markets also. And in the public markets, we're not seeing that bloodbath on the credit side. So that's giving us some hope that this is still not a contagion, not a thing that's spreading through the financial markets. It's limited to a reaction to this is happening. Let's now sharpen our pencils and look very carefully at which companies are going to win this and which companies are not.
How do you think sentiment is today versus a week ago versus 2 weeks ago?
Oh, it's absolutely short right now in the markets, right? And that's why, to Anna's point, you see so much indiscriminate spending. But this is where you need your active managers to go and say, this company has solid revenues over 3 years. They're not going to be decimated. Sure, there'll be some earnings.
Do you think they know? Do you think they have enough visibility to
on
know
the public
the answers
side,
to that question?
On the public side, they do. And on the private side, you have to know your managers very well also. Not the companies per se, but your managers' ability
but the pace of disruption is enormous. How can I predict what these companies are doing and what their revenues are going to be looking like and what their margins are going to be when things are changing as fast as they are in terms of demand for their services?
So that goes into how diversified and how, I think your analyst was talking about how deeply embedded they are in their enterprise. So there are companies which are small players, which can be easily unplugged from your enterprise. And there are companies which are deeply embedded into your enterprise, which have more than one function for you, more than just the coding function.
Sure.
And those are likely to maintain their earnings. Sure, there will be a hit to those earnings. And right now, the companies are not quite sure, to your point.
Precisely, and we can quantify that at this point, can't we?
Not really, so that's why the valuation's getting crashed.
So, but active managers...
Active managers can. Good ones.
They can, even with the volatility and the uncertainty at the moment, you're confident that they have the ability to
I am fairly certain that's what the analysts do. That's what they look at 3 years out, not a week or two, and in a week and two, you'll see the managers just sell based on valuations.
They're armed with some new AI tools now as well, so maybe they can do it even better and even quicker. So that'll be great and witty.
We've talked with such conviction.
We've talked about de-dollarization and how that's either a theme or completely exaggerated or probably somewhere, some more nuanced picture in there. You are seeing some modest rise in hedging activity around that currency exposure. Tell us a little bit about that, what you're seeing and what you're not.
Sure. So this started again last year, right? We saw a 10% decline in dollar versus its major trading partners. And then because of some of the geopolitics news coming from the U.S. this year in January, all of January, every weekend, we saw some prominent pension funds actually come out and say that they are withdrawing from their allocations to the U.S. markets. But those are very few anecdotes.
With symbolism.
So I would say yes, but I would say broadly we're not seeing massive outflow outside, foreign investors pulling out of the U.S. In the equity space, it's still 68% of the global industry.
Is hedging the FX more important than it was?
Hedging the FX was actually, very helpful to clients because they could see their equity allocations go down, and then if there was a sell-off like now and dollar benefits anytime there's a sell-off like that, their unhedged positions actually gave them better returns. But now equity investors are beginning to hedge again.
Okay, how to hedge, how to find some defence in a volatile environment for the markets more broadly. Thank you very much indeed for the analysis, particularly with the lens on what's happening in the tech space. Anwiti Bahaguna, Global Co-Chief Investment Officer at Northern Trust Asset Management. Coming up, for how many, this is a tough one, for how many years has a macro hedge fund manager at Brevon Howard been on a winning run? The answer when we come back. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Welcome back. Now, before the break, we asked, for how many years has Minal Bathwell, a macro hedge fund manager at Brevon Howard, been on a winning run? It's quite the winning streak, in fact, because the answer is 18 years. Bathwell has quietly become one of the world's most successful macro hedge fund managers and hasn't had a single down year since he started managing money during the 2008 financial crisis. The fund manager's winning run has secured him a place among the 5 biggest generators of investment profits in the history of Brevon Howard, a $35 billion hedge fund giant. Not a bad streak. Anna.
Some big numbers. Let's talk about what lies ahead for the weekend, and that's politics in Japan. Japanese voters go to the polls on Sunday for a lower house election that's a high-stakes gamble for Prime Minister Sanae Takaichi. She's seeking to shore up her coalition's majority in a vote set to have wide-ranging implications.
国民の皆様、私は本日内閣総理大臣として
Just 3 months into the job, Prime Minister Sanae Takaichi dissolved Japan's lower house, calling a fresh vote for February 8th. 衆議院を解散する. Coming from a string of election setbacks for the ruling Liberal Democratic Party, Takaichi is aiming to capitalize on high public support and increase her majority in the more powerful lower house. Some recent polls show an approval rating of more than 60%.
I think Takaichi is really in an extremely enviable position. I mean, her support rates have been consistently extremely high, and I think that's going to do quite a lot for her in this election.
A stronger mandate would make it easier for Takaichi to push through her agenda, including higher defense spending and the largest supplemental budget since the pandemic. But the road to victory might not be straightforward. The LDP's alliance with Komeito fractured last year, ending a 26-year political partnership. The realignment injects new uncertainty into Japan's electoral dynamics. Voters, though, are more focused on the cost of living. Inflation has stayed above the Bank of Japan's 2% target for more than 3 years. The stakes are high. An increased majority would give Takaichi a green light to pursue what supporters call a more assertive Japan, with higher defense spending and state-led investment. But a loss of seats would be a self-inflicted wound for the new prime minister, who has said she would step down as party leader if that happens. Ariel Buzetto, Bloomberg, Tokyo.
What does it mean for Japanese equities? What does it mean for the BOJ? What does it mean for the yen? All critical factors as we work our way through this weekend. Joining us now, Bloomberg MLive's Adam Linton. What's the market set up for when it comes to Japan and this election?
I think ultimately, given the polling, I think the consensus now is that she will ultimately expand to a slim majority. And I think, for dollar-yen, I think what's been interesting is that we saw those rate checks a couple of weeks ago, and that knocked dollar-yen sharply lower. And at that point, I'm of the view that that would have been the time to do intervention, because you could have easily sent dollar-yen into the 140s at some point. However, though, markets have kind of been cynical as to whether they actually follow through for the intervention, since Scott Bessent relatively cool on the prospect of joint intervention, and we've kind of risen 4 handles. So, there's a worse entry point for Japanese officials to intervene than they had done. And if, we do get another rate check after the election, if the yen does really start to sell off, I think the market's going to be a lot more cynical as to whether they'll actually follow through an intervention. And also as well, they'll probably need a softer dollar in order to get the maximum bang for their buck. But, that opportunity does look as if it has potentially faded a bit, and they're leaving themselves a bit of a hostage to fortune. We're still awaiting US CPI data. If that comes in soft, yes, it could be back on the table. But, it's not a favourable setup for those who are looking to be short dollar yen at the moment.
If we do get softer dollar, we can get a stronger euro, and euro strength has been there, and we've seen that be impacted the corporates, certainly in 2025. Christine Lagarde didn't seem to be too concerned about the strength of the euro yesterday. What stood out to you? How clear is the path ahead for the Eurozone, for the ECB, and whether or not there is going to have to be an FX take, at least, or maybe some kind of verbal jaw-boning of the single currency.
Yeah, I mean, she was definitely a lot less, cool on the idea than she could have been, because obviously, we were hit with like 120 last week, and that's, that's kind of a line in the sand that ECB officials have drawn because of those comments from Louis de Guindos last year. But we've pulled back about, 2 handles since then, so there wasn't really that urgency for her to kind of like say too much. And ultimately, euro-dollar, it's decoupled from rate differentals, and even if they cut, there isn't really too much they can really do about it. But I would say as well, euro-dollar, it's a relatively crude way to assess the strength of a currency.
Yeah.
On the ECB website, they cover the nominal effective exchange rate, and that's not really showing anything that remarkable at the moment. So I don't think there's really much urgency at these levels for policymakers to step in.
Very briefly on the gilt markets, how much risk premium is priced in with the politics?
I think it's increasing yesterday. Today, I think we have kind of stabilised a bit. I think betting markets are positioning for starting to leave at some point. But, there hasn't really been any follow-through from some of the stories that we've seen early in the week. So I think that premium has receded. But I think ultimately we're headed for a steeper curve. We've had dovish Bank of England and, politics risks.
Anna Linton, thank you very much indeed. Bloomberg M Live, of course. Here's what else to think about for this weekend then. Tuning in for the Winter Olympics. Do you watch the Winter Olympics or the rugby? Because the rugby...
It's a big weekend coming up. Fantastic.
Guy Johnson's a massive... I don't know if anyone missed this
Guy Johnson's been getting messages about his passion for curling. This is a new revelation. This is news.
I think the curling final is on the 21st or something. But yeah, no,
don't pretend you don't know.
I do know.
I think it could be on this particular day.
The opening ceremony's tonight, isn't it? That's going to be great to watch.
Yeah.
You've got great rugby coming up. There was some last night. I'm putting my fingers in my ears because I don't want to know the result because...
Oh, I can't...
Wow, that's impressive.
Don't tell me.
Okay. That's impressive. You work in news, Guy. How can you avoid...
It was on the television last night downstairs, and I'm like, I've got to go to bed.
Les Bleus.
I saw Dupont. He was looking pretty good. I'm a bit nervous. Anyway, there's Milan. We're waiting for the start of the Winter Olympics. It's the Super Bowl.
Is that the main stadium?
Yeah.
Big sporting event going on somewhere in America as well, I hear. I mean, is it sport? Is it entertainment? Is it an advertising event? It seems to be all of those things. And a gaming
at the same
event,
time.
Increasingly.
And the halftime, apparently, the
halftime show is going to be amazing. You always want to watch that. The ads are always amazing as well.
We'll be asleep there, probably. But yes, we'll...
Stellantis, before we go.
Stellantis is down really hard. But what is interesting about Stellantis is that it's down nearly 20%, but it's dropping the same number of points as SAP and Roche, basically.
Yeah.
That's amazing. They're only down kind of circa 1%. Tells you something about the European auto industry. Anyway, Pulse is up next. Have a fantastic weekend, everybody. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Amazon's plan for $200 billion in capex this year spooks investors in a week when big tech announced spending plans without parallel this century. Bitcoin bounces after its biggest one-day drop in more than 3 years. It's now down around 50% since its all-time high in October. Plus, talks between the U.S. and Iran get underway in Oman, but Tehran warns it will be the start of a very long process. So it has been quite a week in the markets. Let's get straight to it. If you look at U.S. stocks, they seem to be poised to extend their worst sell-off in months. There are fears over the disruptive impact of artificial intelligence, and that seems to be staying left, right, and center. Again, it's a little bit different to some of the previous pullbacks because this was not a story about valuation. It's really about how some of these companies will change when AI is more introduced. Amazon slumping after announcing plans to spend $200 billion this year on building out AI infrastructure. Again, it's a pretty sharp increase from what we knew before, and all of this is also playing out in European markets. Now, the other big story is, of course, we'll speak to Ana Herrera talking about Bitcoin. When you look at, for example, the CAC 40, but the FTSE, they have seen quite a lot of turmoil in the last couple of weeks. Today, they're down between 0.3 and 0.6%. So we're, of course, on Amazon watch. Amazon tumbling pre-market trading after announcing plans to spend $200 billion this year. So let's look at Amazon to see exactly what it's doing in today's trading session. This is pre-market down 9.4%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, it's been a pretty bruising week for tech with a $1 trillion software sell-off, a sharp fall in big tech despite solid revenue growth. Now, huge capex spending has also been a big concern, and this week's spending announcements have done nothing to allay those fears. Now, this week alone, 4 of the biggest U.S. tech companies announced combined spending plans for the year of around $650 billion. Now, $200 billion of that alone is Amazon. So we're now joined by Matt Bloxham, technology analyst at Bloomberg Intelligence. Matt, thank you so much for joining us. I mean, it's been quite a week, but actually it's been a week also because it's business models, right? So you look at all the industries and the companies, and suddenly you have these AI models going after some of the legal companies. So where does it end? Are we going to see like industry by industry fall as AI gets rolled out?
Yeah, I don't think there is an ending, to be honest, just a kind of evolution. I think this is like an overwhelming time for investors. The pace of change and the complexity of the change that's being fueled by technology, and particularly AI, is incredible. And I think, when we look at previous cycles, certainly my experience as an analyst, some particular event comes along, it causes a bit of a disruption, but you have time as an analyst and investors to kind of think about it, process it, figure out what's really going to happen. I think the frequency of changes and the significance of them is unprecedented, and it's kind of really creating this kind of, risk-off moment. I think perhaps it was almost inevitable that Amazon put out a $200 billion capex number, given what we had seen from Alphabet and others. I think there is some flex in those numbers. And I think there is clearly a lot for these companies to prove in terms of whether this level of investment is justified and whether they can really make the return on investment that they need to justify. I think there is a stronger sense that we've kind of gone a bit too far, and they really don't have much of a choice. If one goes big on capex, you have to follow, because if you don't, you're essentially kind of giving up on future market opportunity. But we've seen this cycle before, and when you get into these cycles, when you look in hindsight, quite often companies did spend too much, but they didn't have another choice, and so there's some forgiveness there, but it affects the multiples.
Matt, I mean, the other thing is that Anthropic basically pushed into legal services. Now, anyone who is close to the legal profession kind of saw it coming, right? We knew that it was going to be disrupted, but the market tanks, and now they're trying to do the same for financial analysts. Again, what are they rolling out next?
We'll have to see, but I think the kind of optionality on what they've kind of produced is kind of fairly limitless, because it's kind of quite a kind of generic set of capabilities which can then be tailored to different industries. But they have done a very specific investment and training and focus around anything to do with both the financial service industry, but also the kind of financial analysis discipline. So that's not just for analysts and investors; that's for accountants. In corporates with kind of complex number crunching to do. It's a big opportunity. They'd be much more focused on the enterprise opportunity than, say, ChatGPT or OpenAI or Google. I think that's paying dividends for them. They've got 300,000 enterprise customers. The feedback on the product is incredibly good. Even Microsoft has integrated the Claude assistant into Excel alongside Copilot, and I think it's the Claude assistant that's more popular and effective than the Copilot.
So interesting. Matt, thank you so much. Matt Bloxham, a very busy man this week, Bloomberg Intelligence senior analyst. Now, this week has seen huge levels of market volatility with some of Wall Street's favorite trades. Again, tech stocks, gold, and cryptocurrencies collapsing. For a good conversation on the market moves ahead, we're joined by Isabel Mateos-Hilago, Group Chief Economist at BNP Paribas, and Luis Costa, Global Head of Emerging Market Strategy at Citi. So thank you both for joining us. Isabel, I know you're also a big thinker on some of this research, AI. I mean, as an economy, we spoke to Governor Bailey yesterday. I mean, he didn't really have the template of actually what this means, but we're seeing it playing out in the markets. So how much of a disruption do you think we'll see in the short term?
Well, it's a huge disruption, but as you say, nobody has the roadmap of exactly how it's going to pan out. One thing that's very clear is that, 99% of the time, people think of it as a weakness that households in Europe have much less exposure to the stock market. Well, at a time like this, you're thinking actually this means that the European economy is much more insulated from any blowback from this large market correction that we're seeing in the U.S. Whereas in the U.S., if this continues for long, you're going to start, having questions raised about the wealth effect that has driven growth so powerfully last year. Does it go into reverse? But beyond that, I think what's very interesting, and it's been the process in pretty much every technological innovation, at first there's a broad-based enthusiasm, there's only winners, and now we're into the phase where people start to realize, okay, there are going to be winners and there are going to be losers. And the net effect of that, we're going to figure it out as we go along.
But it does feel like they then bounce back, and we've seen that also in, you have a sell-off, there's a bit of panic, but then after 2-3 days, we're just washed with so much cash that everything kind of goes back to levels that we see 4 or 5 weeks ago.
Absolutely. We are kind of, in this struggle between the cyclicality and the externalities, right? The extraordinary factors. I mean, we are in this problem, which is not necessarily a problem, it's this stage of the AI cycle, which is a stage that we are going to have a lot more scrutiny into how they are funding the capex. We are already looking at the cumulative capex as a percent of the GDP. We are comparing to other bubbles in time, the housing bubbles from the 90s in the US, the telco bubble. I mean, we're comparing, and the numbers are significant. And considering especially that we are kind of, it's early innings in the AI cycle. This can go up far longer, right? So I think that's a problem. But then we have the cyclicality. The cyclicality is actually positive. The U.S. is resurging. Europe is on a much better footing in terms of growth, right? You've got better stability in emerging market currencies. There's growth coming out of emerging markets, and we're actually having, upgrading growth estimates, out of many parts of EM. So, and the carry is still in the system, right? So essentially...
But, Luis, no one talks about debt. This is why, I mean, we're so focused on some of the, the short-term concern that actually there's a huge debt problem at some time. When this comes to roost, what happens to some
Well, I mean, and it goes back to my point in terms of the stage we are in this cycle here. We are looking at not only the capex, the 600 billion, right, as a percent of the GDP, and what that means to the sector in terms of revenues, but how they are funding that. And we are seeing that many AI-related names are actually funding via bond offerings. So the bond offerings are getting larger, right? The equity offerings are getting larger. So that's the start. It's not necessarily funded by cash anymore. And I think that's why this is triggering a lot more scrutiny from investors. And it's right. So that's the right moment here. So it's going to be more volatile. Is it a bubble burst moment? We don't think so.
Yeah, but the impact, I mean, what's systemic actually in this AI spending or valuation is very difficult to know because that would translate directly into the economies. And also, how do you view debt right now?
Yeah, so actually what was interesting of the two central bank meetings yesterday is that, these were two meetings happening in Europe. You had the Bank of England and the ECB, and both of them mentioned AI and the investment boom around that as one of the factors of optimism around the growth outlook, right? And that's
for productivity especially.
Well, for both. I mean, certainly in the case of Europe, what you're seeing in the industrial production data is the construction boom around data centers. So, so far people have focused on it as a US story, but actually it's happening also in Europe and in the UK. And then there's the hope that it delivers productivity, but we don't know. And back to your debt point, and that's true both at the sovereign level and frankly at the company level. But if you can get that extra lift of productivity, which we don't know how quickly it will come, we don't know how big, but certainly in every previous technological revolution, it did happen, and that will help improve the debt dynamics, everything else equal. So I think there's lots of reasons to be optimistic, but are there going to be bumps on the road? Yeah, probably.
One of the things that actually Clara Lombardelli was asked in the press conference yesterday, which I think was a smart way of looking at it, is can you really explain the interest rate differential between Europe and the UK given the economies right now? Because it's quite a big gap.
It's a big gap, and people look at this from the Eurozone and look, and certainly from the standpoint of France, where there's been a lot of turmoil because of political uncertainty, and people look at that and see, that's the benefit of being in the Euro, because you get a lot more risk premium on the UK, because it's just a completely different political setup. It's true when you look just at the macro data, it's hard to explain the differential in interest rates.
Louise, I mean, emerging markets were really stellar last year. There was so much concern about tariffs and the fact that actually it was a lot of the emerging economies that would suffer. Like, is this thanks to dollar, or is it really some of the structural reforms also put in place?
I would say like 70-75% dollar. That's why we are not bailing out of EM assets at the moment, definitely for sure. But we do believe that the dollar story will tend to be a little bit more sticky, right, compared to the big dollar slides we had in Q3, for example, last year, right after Liberation Week, right? So I think that the story now is going to be a little bit more stable in terms of dollar. And it goes back to my cyclicality comment, right? I mean, the U.S. you're actually seeing from the economic surprise index performance, U.S. continues to surprise to the upside, right? So you've got cyclical reasons to be more involved in U.S. assets. But then you have the extraordinary factors, which is volatility in Trump policy, geopolitics, right? I mean, there's so many extraordinary factors that we're actually becoming more common and more regular nowadays, right? But we continue to in emerging markets, there's growth. You've got real yields, so inflation is stable, and you've got very, sustainable real yields, and growth is back in the system.
Does the dollar weaken from here? I mean, it's actually incredible to think that it was exactly a week ago that we got the nomination of Kevin Warsh, and since it feels like 55 other news stories in terms of financial and central bank took the lead. So does that have an impact on, does he have to gain market credibility? What does that mean for dollar? And actually, could there be spillover effects?
That has consumed 75% of my time this week, talking to clients, fellow strategists and economists within Citi. And we do think that, there's so many question marks that I still believe that this is going to be a lot less hawkish, especially when it comes to balance sheet tightening, if compared to everything he's written in the past and all market expectations, given, of course, that we know what was he like as a Fed member. So, I think that the story is quite different. We are dealing with a U.S. administration which wants to engineer more growth And that's the story. And then we're talking about volatility of economic policy out of the U.S., capping the dollar bid. So that has actually capped any resurgence on the dollar. And I think that it's not that the White House loves the weaker dollar. The White House loves to engineer growth now, and that's the political story ahead of midterm elections. And so we do have dollar implications of that, and the dollar implications are actually good for them. So I think that it's very complex, and we continue to believe that obviously many question marks in terms of, and it's not only Mr. Walsh, but how his ideas are going to be bought by the rest of the board, right?
Right.
I think so. You've got quite a few interesting questions here.
Yeah, and Isabel, it's quite difficult to see, President Trump said that basically Kevin Walsh promised him not to hike. That's one. Unclear whether there's a promise of maybe to cut sooner than, the rest of the committee is ready. But how's this playing out in the economy?
So I would say first interesting point. I think this week is the first market sell-off event where you actually saw the dollar rally, which we used to be the standard pattern, but somehow back to normal. So maybe that's thanks to Kevin Walsh. I don't know. Look, when it comes to the impact of Kevin Walsh on the economy, well, first of all, we shouldn't get ahead of our skis. He's not going to take over until mid-May. But look, this is somebody who's been thinking about the Fed in a very institutional way. He wants regime change. He thinks about the Fed as part of the economic policy-making machinery. He's not going to do silly things in his first 6 months in office, which ruin his credibility. He's got a 4-year mandate, and the kind of things he's been talking about, like shrinking the balance sheet very meaningfully, it's not going to happen overnight. It's not going to happen this year. So that's the first point. The second point is, when it comes to monetary policy, indeed, it's a committee decision. And if the economy, the U.S. economy, remains as strong as it seemed to be in the last quarter or so, there isn't really going to be much of a case to cut interest rate. And I think, frankly, the last thing either he or even, frankly, President Trump would want is accelerating inflation into the midterms. Whereas if the Fed can deliver a credible message in Kevin Walsh through his thinking and advocacy for a smaller balance sheet, can signal to markets that, we can have a more disciplined fiscal policy and get long-term rates to come down and the risk premium, the term premium to come down, then it's a win for President Trump because households are going to be, mortgage rates are going to come down. So there are things he can do that don't involve cutting the policy rate and that will still leave the Fed in a good place and the U.S. economy in a good place.
I guess it's about, there's an assumption that maybe we're importing a bit deflation from China. That could help if we see a bump up with tariffs, but also the big question mark about oil. Right, because we're looking at something happening possibly big in Iran. Frankly, it's unclear. We get mixed messages. But how, what are the fault lines actually for the U.S. economy? Because there are so many shocks and unknowns.
So look, two of the big fault line for me is the narrowness of the growth engine. It's been so much powered by, number one, investment in this AI build-up, which we now see the market seems to want to punish. So if that slows down, it could be a problem. Number two, it's been consumption by the wealthier households driven by wealth effect. So again, you get a big lasting stock market correction. These two growth engines are going to falter, and then all of a sudden the growth story is gone. Now, still the Fed has plenty of room to cut. President Trump has been talking about sending checks to all Americans. So I'm not sure that there's really much fiscal space, but there are levers that can be actioned. But for me, the narrowness of this growth is the main vulnerability.
Louis, very quickly, your favorite play on emerging markets?
We still love some of the currencies out there because of interest rates, because, the effect of these interest rates on the inflationary scenario. So we do like BRL, Brazil. We do like South Africa, given the metal and mining bias. We don't believe this metal and mining bias in EM is done now. In Asia, we do like Korea and Taiwan versus Thai baht. This is a very interesting capacity to potentially sell dollars if the dollar continues to stay well behaved is immense.
Thank you both for joining us. What a great panel to get us started this Friday after quite a busy week. Isabel Mateos-Hilago, Group Chief Economist at BNP Paribas, and Luis Costa, Global Head of Emerging Market Strategy at Citi. Now, coming up, Bitcoin bounces higher as traders buy the dip, following a brutal rout for the cryptocurrency. We'll have plenty more on Bitcoin's wild week. That's next, and this is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Earnings season is here.
Europe's most valuable companies kick off earnings season.
Bloomberg is first to break the numbers.
Some breaking news from First Abu Dhabi Bank.
So Shell, SAP, Total's in the mix there.
You're bringing all the fun today, Guy Johnson.
With the smartest insights.
How are you feeling going into earnings season?
We are still confident that we can deliver to that acceleration of total revenue growth.
Give me a sense of what you're most optimistic about.
I really expect a very strong Q4.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Japanese voters go to the polls on Sunday for a lower house election. That's a gamble for the Prime Minister, Sanae Takaishi. Now, she's seeking to shore up her coalition's majority in a vote set to have wide-ranging implications for markets and regional security. Here's what's at stake.
国民の皆様、私は本日内閣総理大臣として
Just 3 months into the job, Prime Minister Sanae Takaichi dissolved Japan's lower house, calling a fresh vote for February 8th.
衆議院を解散する
Coming from a string of election setbacks for the ruling Liberal Democratic Party, Takaichi is aiming to capitalize on high public support and increase her majority in the more powerful lower house. Some recent polls show an approval rating of more than 60%.
I think Takaichi is really in an extremely enviable position. I mean, her support rates have been consistently extremely high, and I think that's going to do quite a lot for her in this election.
A stronger mandate would make it easier for Takaichi to push through her agenda, including higher defense spending and the largest supplemental budget since the pandemic. But the road to victory might not be straightforward. The LDP's alliance with Komeito fractured last year, ending a 26-year political partnership. The realignment injects new uncertainty into Japan's electoral dynamics. Voters, though, are more focused on the cost of living. Inflation has stayed above the Bank of Japan's 2% target for more than 3 years, while wages lag and a weak yen pushes up import cost, giving a sense of falling living standards. To ease the pressure, Takaichi pledged to suspend the 8% sales tax on food for 2 years.
Maybe it's because of the weather, but the price of vegetables, some are just shocking, aren't they? Even things like snacks and chocolate, their prices haven't doubled yet, but they've suddenly gone up quite a bit. Same with rice.
I wish they stopped just talking about tax cuts or eliminating the consumption tax during the election season and actually put realistic measures into practice.
The stakes are high. An increased majority would give Takaichi a green light to pursue what supporters call a more assertive Japan, with higher defense spending and state-led investment. But a loss of seats would be a self-inflicted wound for the new prime minister, who has said she would step down as party leader if that happens. Even before ballots are cast, markets are reacting. The yen has wavered and the government bond yields have risen, reflecting investor unease over Japan's fiscal path.
Since October of last year, we have taken a very responsible approach to public finance, talking about responsible, sustainable, and proactive fiscal policies. We are not talking about expansionary fiscal policies, and this is demonstrated by some of the numbers that we see. So I asked the market participants to calm down.
Japanese stocks have already outperformed many of their peers as investors focus on the so-called Takaichi trade. Ariel Buzetto, Bloomberg, Tokyo.
Now, Bitcoin bouncing around $65,000, having halved in value from the all-time high in October. For more, we're joined by our senior editor for digital currencies, Ana Herrera. Ana, you have all the reasons of why this is happening. It's just really hard to understand why this is going on. Why have they been selling off?
So, we've been through this before a lot. Normally, with prior crashes, we had like really negative headlines or an exchange collapsing. In this case, that's not happening. It seems like crypto is behaving more like any other risk asset, which is very much against the narratives we've been told before. So it was a hedge against inflation, it was digital gold. In reality, it's kind of trading along, the risky stocks. So we had a very big sell down yesterday, and part of the reason why it sells off so quickly is we have leverage positions liquidating automatically on crypto exchanges. So the faster the prices drop, the faster they keep dropping. So again, the swings are always very, very volatile, and but it's hard to figure out exactly pinpoint why this time.
So it means it could go either way, right?
Yeah,
somehow,
we're seeing it's up again. Yeah.
Yeah, so that's the concern when you don't really have an underlying reason. It's also very difficult to predict. Ana, as always, thank you so much for joining us. Ana Herrera, Bloomberg senior editor for digital currencies. Coming up, Iran warns of no quick resolution as talks with the U.S. get underway. We'll have full details next, and this is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. Amazon's plan for $200 billion in capex this year spooks investors in a week when big tech announced spending plans without parallel this century. Bitcoin bounces after its biggest one-day drop in more than 3 years. It's now down 50% since its all-time high in October. Plus, nuclear talks between the U.S. and Iran take place in Oman, but Tehran warns it will be the start of a long process. Now, Iran hinted there won't be a quick resolution to escalating tensions with the U.S., and today's negotiations could be the first stage of a longer diplomatic process. Now, the two sides have been meeting in Oman today. It comes hours after the U.S. virtual embassy in Iran issued a security alert urging American citizens to leave Iran now and not rely on the U.S. government's help to do so. Well, Stuart Livingston-Wallace, Bloomberg's head of Middle East and North Africa, joins us now. Stuart, so good to speak to you. So bring us, first of all, up to date with developments that we've seen and expectations of these talks.
So we've seen, a reasonable amount of activity on the ground. We're not quite sure what's going on, but the talks started roughly about an hour and a half ago. There are early indications that at least some of the convoys may have left, but we're not sure who's in the convoys. So it's very hard to tell what's going on. What we do know is that the Iranian foreign minister is there on one side, and you have Witkoff and Kushner on the other, with that information coming from Iranian state TV. So as you say, it's the beginning of potentially a long diplomatic process. There seems to be a lot of division about what the talks should be about, or indeed what the results might look like.
So what are likely to be sticking points, and is a U.S. strike against Iran still likely?
So in terms of the sticking points, number one is the nuclear file. And really the question there is, what exactly do we mean by the nuclear file? So we're talking about the right to enrich uranium, which Iran insists that it has an absolute right to because it's a signatory to the Non-Proliferation Treaty. Are we talking about the highly enriched uranium stockpile that, certainly a lot of people think has the potential to be eventually weaponized, although Iran says and has always said clearly that it has no intention of developing nuclear weapons. And then thirdly, the question is, nuclear weapons themselves. And then you move on to the issue of ballistic missiles, which again is a very fraught topic. And finally, Iran's support for its proxies around the region. That is sort of, the likes of Hezbollah, Hamas, the Houthis, and so on. Now, Iran insists it really only wants to talk about the nuclear file. Marco Rubio said he wants to talk about all of that. All of that should be spoken about as one thing. And then, we'll see what happens going forward. So we really are at the very early stages. But again, if you look at the markets clearly are still quite nervous. We're up something like 1.5% on Brent, which is a pretty good proxy of market sentiment. But if you look at the volatility, the 10-day volatility is basically at the highest that it's been since June. Now, June is a critical date because that was the last time we had this 12-day war with Iran. And so clearly there's a great deal of nervousness going into this. Whether strikes are likely, I point you to the research that came out from our own economists and analysts this morning that says, yes, it probably is. And similarly, Eurasia Group brought out a report that said, yes, it probably is still quite likely. But again, early days, we'll see what happens.
Stuart, thanks so much. Stuart Livingston Wallace there, Bloomberg's head of Middle East and North Africa. Now, whether those talks yield a solution, some might ask, what would satisfy President Trump? My next guest says Trump is a predictable negotiator, but his competitive approach can often limit conversation. Well, joining us now is Lindsay Newman, visiting research fellow at King's College London. So thank you, Professor, for joining us. First of all, I'd like to really try and start there. What do we know the U.S. administration want from Iran today?
Thank you, Francina, and thank you for having me on. What we know is that this administration is not your first Trump administration. The second Trump administration is much more activist, much more active, and much more ambitious. We've seen this throughout all of 2025, and of course, at the start of 2026. We've been talking about Venezuela, we've moved on to Greenland, and now we're back on Iran. And what the U.S. administration is looking to see here is a quick result. They've made clear that although the Iranian delegation says that they are acting in good faith, but they will remain firm, the U.S. is not looking for sort of the beginning of a pathway of a conversation for a conversation. The U.S. is looking to deploy a range of tools all at the same time. So they have opened the diplomatic track, which is the first time, as we know, bilateral conversations have happened between the two sides since last June's, just before last June's Operation Midnight Hammer event. And simultaneously with the diplomatic track, they're also pursuing economic security levers like tariffs and sanctions, and this big question mark around the use of force and force posturing, as over the last couple of weeks, the U.S. has redeployed a massive amount of kit to the region.
Lindsay, what do you think happens next? It's frankly, on both sides, and it's unclear. There's a lot of fluctuation, whether they're still talking, whether this will, those negotiations will be shortened. But actually, everyone's downplayed expectations from these talks. So what happens next?
Yeah, Francine, that is the big question. What happens next, and what is perhaps the fallout from what happens next? We know that the U.S. administration, as I said, is deploying multiple tracks at the same time. And if any one of these tracks, so if talks do not reach some sort of clear outcome, it will start to apply pressure through these other tracks. It's already applied tariffs and sanctions on Iran over the last couple of weeks. So that really does zero in on this question of military action. As I said, there's a strike force in the area. There's Patriot missiles, air defense systems. We hear this warning for U.S. personnel in the country. And there is, as you said, pointed out, there's a lot of noise. There's so much noise happening right now in the region. The baseline scenario has to be that these talks will be unlikely to reach some sort of significant outcome, and that will then turn all eyes to the use of force. We have to think that the most recent precedent is the most relevant precedent, so that is Midnight Operation Hammer. The president came into office saying that he would be the unifier and peacemaker. He knows that the U.S. public do not want to see the U.S. engaged in another entrenched conflict anywhere in the world. Polling suggests that very few Americans are really quite supportive of the idea of using force against Iran to support the protests or even related to nuclear capabilities. So the U.S. appetite from the U.S. population perspective is low. So the president and his administration will be very careful and will be looking to conduct anything they look to conduct will be directed and surgical. He does not want to have U.S. boots on the ground there.
But, Lindsay, one of the things that we've been trying to figure out is what will China's response be? So I don't know whether China, there's no good time to do something in Taiwan, but are they thinking that actually in all of this turmoil now could be good? Would they take offense if the U.S. were to strike in Iran, or would they publicly say they're against it, but actually privately support it?
Well, we know that China has said, what they have said is that they hope that these talks today lead to a pathway for de-escalation. Indeed, for the region itself and for most major actors around the world, de-escalation is what would be the best outcome. So that, of course, is quite quite sensitive and quite sensible. China has not indicated any change in view around its own regional ambitions, and that is, of course, something that they have been clear about, but also is a long-standing ambition. So nothing really sort of new in the moment on that.
Do you know, Lindsay, what is the rest of the region thinking? If you look at Qatar, Turkey, there's a kind of task force also to help with Iran, but what role would they play in case there was a U.S. strike?
Yeah, we know it's very clear that the region has been urging restraint. Part of the reason that the talks were moved from Turkey originally to Oman is so that they could be more bilateral and directed rather than having multiple voices in the room. But even still, the voices in the region have been quite clear that the hope is that this will lead to a de-escalatory path. Even Israel itself reportedly weeks ago urged Trump to deploy caution when the height of the protests were underway in Iran. But again, the most likely scenario here is that these talks will not reach some sort of very concrete, tangible outcome, and the likely military operation would be directed, focused, and surgical against perhaps nuclear sites, ballistic missile sites. It doesn't mean that Iran will not seek to retaliate in response, but both sides are likely looking to avoid a regionalized escalating conflict, even though we've heard rhetoric that suggests otherwise.
Lindsay, I mean, look, we're February 6th, and it's been quite a start to the year. It started with Venezuela, then you had Greenland. I mean, do we have a better understanding of what the Trump administration's foreign policy is? You know, Venezuela, they were largely left to do what they wanted because it was kind of assumed that it was in their own backyard. But are we going to see more intervening in other parts of the world much further afield?
Yeah, Francine, I have never been of the view that this is just about the Western Hemisphere. I'm an outlier. I'm happy to be in the outlying camp on this. The Trump administration's ambitions are far-reaching, and they are wide. And the Trump doctrine, if you want to call it the Don Roe doctrine, is really about pulling all levers and walking with heavy steps. That means deploying force. That means opening diplomatic conversations where necessary, and also employing economic security tools like sanctions, tariffs, export controls. It's sort of naive to think otherwise when we see strikes on Nigeria, Yemen, Syria, the extraction of Maduro in Venezuela, as you've said, and then, of course, all the rhetoric around Greenland. Everybody needs to be prepared and aware of the ambitions of this administration. And so the foreign policy approach was laid out on day one with an America First approach that isn't the same isolationist story as it once was. This is about pursuing U.S. national security, U.S. interests globally as defined by this administration.
Lindsay, as always, thank you so much for joining us. Lindsay Newman, they're a visiting research fellow at King's College London. Some great analysis on some of the complicated dynamics that we're seeing. Now, the Bank of England governor has appeared to endorse markets betting on a 50% chance of a rate cut in March. It comes after the central bank held its benchmark rate at 3.75% in a surprise split vote. Well, I spoke with Andrew Bailey following yesterday's interest rate decision.
You may have seen it in my submission of my paragraph in the minutes. I said that I will be, I said that I think there is, a prospect of, some further cut in interest rates. And I said, I think in my last sentence, I said I'll go into each meeting asking myself that question. So, look, I think, going into March 50-50 is not a bad place to be in that sense, because in a sense markets are asking themselves the same question that I'm asking, or perhaps they're just working out what question I'm asking and, in a sense, following that. But yeah, I think that's a reasonable question to ask, because look, we've had good news. We think inflation is now going to come down to target sooner than we thought it would. I think this spring sometime. But the real question now is it going to sustain? Is it going to be sustained there? Because that's our job. And that's all to do with underlying inflation, and that's where I certainly think that we do need we need some more evidence base to mount that. But that's the question we'll be asking ourselves.
Why have you dropped the word gradual from your formal guidance? It had been there for quite some time.
Well, I think for a couple of reasons. One, because we've made a lot of progress, and the second one, which is closely related actually. There does come a point if we don't get any more shocks in the world economy, that's a big if, but we don't. These are the things we don't know about, so we can't, in a sense, factor the things we don't know about in. So let's assume that's what the forecast is, we've published is really based on. Then I think we are now getting towards what I might call that neutral level of interest rates, where it will sustain inflation. It's the rate that will sustain inflation at the target. We don't know it. We don't know exactly where that is because it's it's a good concept, hard to translate into any precise practice.
But are we close?
Well, in a sense, we must be getting closer, but I think we are closer. So, I think the change of language is really to change the language a bit to this language we've used a few times about, it's a closer call at this point.
When you look at the shocks, I mean, you said today that the global economy has just been pretty good at weathering some of the shocks.
Yes.
But is it that we could see less shocks, or is that we're just much more adaptable?
We never know what shocks we're going to see by definition, almost. No, look, I think it is interesting that the world economy has been more resilient to all the uncertainty we've had over the last year. Then I think if we go back to the conversation we were having this time last year, actually, when we were doing this report this time last year, our concerns about how the world economy was going to be affected by the news that at that point was beginning to build up, it has certainly turned out to be more resilient.
The Bank of England Governor Andrew Bailey speaking with me yesterday. Now, the stakes are high for Thailand as voters head to the polls on Sunday for a snap general election. The country's economic heft in Southeast Asia has slipped, and the vote risks putting Bangkok back on a path towards political crisis. It's the subject of the weekly documentary by Bloomberg Originals, and here's a sneak peek.
When I think of Thailand, I think of a place where modernity exists alongside tradition. But behind that postcard image of a paradise is another reality. Instability, volatility, uncertainty.
And in recent years, economic lethargy.
There's not a lot of innovation in the economy. Thailand's GDP growth has been about 2% for a while now, while neighboring countries or peer economies are growing rapidly.
Foreign investors have taken note. Or more specifically, they've taken their money.
Thailand looking to cut rates as growth falters.
No catalyst for a reversal of Thailand's fortunes.
That word, fortunes, isn't relatable to almost anyone outside Thailand's entrenched elite. According to the World Bank, Thailand has the highest level of income inequality among Asia-Pacific countries.
What's at stake is Thailand risks getting left behind in one of the world's fastest growing regions.
So we're asking, what went wrong? And can anything be done to turn things around?
Now, coming up, software stocks take a hammering. We discuss the latest AI disruption and what it means for private credit. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Welcome back, everyone. Now, software stocks were at the epicenter of hundreds of billions of dollars that were wiped from companies big and small across Silicon Valley this week, knocking the value of stocks, bonds, and loans. Now, has the selling been overdone, and are the shockwaves heading for private credit? Now, these are some of the big questions in the latest piece by Paul Davies, our banking and finance columnist for Bloomberg Opinion, and John Stepek, author of the newsletter Money Distilled. First of all, great pieces, and I think everyone should go back and read them. Of course, since we've had like 55 new events. Okay, so Anthropic, first of all, it's like, okay, they're going after, the legal firms, and now it's actually, financial analysts. How problematic is that for banks, full stop?
For banks, it's, I guess it's yet to be seen. I mean, I don't know exactly how good this tool is going to be or what it's going to look like. I mean, there's plenty of other things that AI companies and other tech companies have been trying to develop already to kind of challenge the amount of labour, I suppose, that you need within banks and so on and so forth. But we've yet to see, I suppose, a big impact of that. It's probably more seen in a lack of, in a lower level of hiring so far. But banks are very cognizant of how do you keep getting talent to come into the industry if you're going to replace a lot of that early work with machines instead.
John, what was actually the sell-off that we've seen? Because people kind of brush it off and saying, oh, we've seen this before, it's, AI. But this feels different because it's going to the heart of the business models of industries and companies.
Yeah, somebody came up with a really good term for it, the SaaS-pocalypse. So that's software as a service. And so all these companies that kind of offer software as a service and kind of, do things with data, the situation is that Anthropic, the proximate cause of this sell-off was Anthropic releasing this tool that was going to basically compete with kind of legal services. But this decline's been going for a while. There's been about a year's worth. They sort of peaked in summer 2025. And software stocks have gradually been selling off since then. And I think the idea is basically like when the internet came along and kind of upturned, news publishing, music, high street retail. The idea is now it's the turn of legal services, possibly even medical services, financial services. And I think that's what we're seeing. And I guess the interesting question is why this week has it suddenly happened as quickly as it has. And I think that is actually, there's probably more in the macro area that's helped with that.
Yeah, and Paul, you had a great story. I mean, I'm not going to lie. So I was covering UBS in Zurich, and so we were reading the story, and I was about to interview Armadi, and I was thinking like, wow, KKR got slammed last night. Same for a lot of the private equities. I mean, this was kind of unexpected by a lot of people, and you had this brilliant column, also explaining that because we don't really know what's underneath this private equity owners, that there was maybe a lot more anxiousness out there.
Yeah, and I think one of the issues is a lot of deals in the software space were done at peak valuations in and around and after the COVID pandemic, and then we had that sharp rise in interest rates afterwards. And then a lot of the financing for those deals ended up being done by private credit because we went through that spell. If you remember, Twitter debt was the most famous part, but there was a whole lot of leveraged finance that banks got stuck with as rates suddenly shot up. They weren't being active in funding buyouts anymore. So you have this particular vintage of overvalued deals with very private credit concentrated financing behind it as well. And that's a bit of a worry for the future because it's just going to be probably a very bad vintage.
When do we know, John, when we've fallen far enough? And I guess, again, these were meant to be quality stocks, right? So you're also upending kind of market thoughts in general.
Well, I suppose the problem is these companies, now investors are worried that these companies don't have a moat anymore. And that's the thing that makes it a quality stock. And if your moat evaporates because, AI has come along and competed it away, then that means that, it's very hard to say, well, how far should it fall? At the same time, it strikes me that this has been very indiscriminate. because, you know, it's very hard to tell the winners from the losers in any kind of boom like this. And I guess markets are in a kind of shoot first, ask questions later mode. Because, I mean, you look at what's happened to the financial stocks today because of the Anthropic news about them moving into financial services. It's like, OK, but this is slightly a panic reaction. But at the same time, you know, catching falling knives is a good way to lose your fingers.
That's a very, very graphic way of putting it.
Yes, sorry, guys.
Paul, when you look at, you know, the risk of something being systemic, I mean, there's so much money being spent. I mean, I think we calculated like $600 billion, I think, in this week alone. I mean, is there something, if valuations collapse for some reason, I mean, how much does it impact private equity and banks?
Well, I mean, we've yet to see how far this is going to go. I mean, I guess there's some real odd tensions here. On the one hand, people seem to be betting that AI eats all software, and on the other hand, they're also betting that AI spending is going too far, and it's a bubble, and it's going to burst, and it's going to be wasted, and so on. So these are kind of conflicting, and I think, you know, what John was getting at earlier is there is been a lot of, factors kind of turning over as well, like momentum trades in stocks have just kind of collapsed very recently, and especially this week, and growth has collapsed. And there's a lot of people are just sort of rebalancing, you know, all of their expectations about markets. And I think, and one of the things with software particularly is people would have to think about how key is it to an organization? Is it something where a company is going to be very happy to let all of its staff just make up their own code all of the time? Is what they're doing auditable? There's a lot of kind of serious stuff that people have to consider here. But, you know, we could be in a very messy day today. There's a lot of kind of selling that could continue to come through. And in terms of, you know, banks, it's where it comes into, you know, leveraged investors and, you know, margin calls and all of that sort of stuff. And especially in the US with a lot of very leveraged retail investors, that's where we might see some real, you know, issues.
I agree. I think the deeper issue is there's a bit of a momentum unwind. Because if you look across the market, you've got Bitcoin collapsing, you've got gold sliding, you've got silver collapsing. And I think an awful lot of that is to do with the kind of surprise that Warsh is going to be the guy that's running the Fed. And although Warsh is presumably keen on lower interest rates, there's not the same sense that he's going to be, if you like, a puppet or an ultra-easy money Fed. And I think that's still feeding through to the market, because if you look at the dollar, it's bounced quite strongly. Right. And, yeah, the kind of dollar debasement trade kind of peaked about a week ago, and I think that's also helping with this momentum unwind.
I had the chief economist from BNP Paribas who was saying actually the dollar has behaved like it used to this week.
Yeah, exactly.
Right? So what does that tell us also about correlations?
Well, I guess it's kind of risk-off. It's a risk-off trade, the dollar. You know, the dollar gets stronger, other assets tend to get weaker. I mean, obviously, you know, that's a gross oversimplification, but that's basically how it works. And I think that what it comes down to is people get overexcited about the end of US exceptionalism, the dollar debasement trade in particular. That started getting questioned whenever Trump nominated Kevin Warsh. And I think a lot of that is what we're seeing now. The kind of heat going out of these momentum trades, and that includes gold, silver, and AI.
Paul, in 20 seconds, what are private equity firms going to do this weekend?
Well, anybody who's not done it already is going to go through their books incredibly carefully and look and see what they've got. But we had results yesterday from KKR and Ares and Blue Owl, and they were all very sanguine about they've gone through everything already. They know what's there. They've already been selling down. It's like, you know, it's fine.
Yeah, probably not a relaxing weekend, but hopefully you've been through the books. Paul Davies from Bloomberg Opinion, John Stepek, who writes Bloomberg's Money Distilled newsletter. Up next, Bloomberg Brief, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's 5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Future is higher right now. The Nasdaq 100, though, set for the worst week since April. Bitcoin bouncing back to a certain extent. This as a busy week of big tech earnings shows massive spending plans for AI. The latest from Amazon vowing $200 billion of spending this year. And indirect talks between the US and Iran. Omani officials say separate talks have been had with delegations from Washington and Tehran in the last few hours. So let's take a look at this market today. Futures firmly pointed higher after a miserable session yesterday. We were down 1.4% on the Nasdaq 100 as that tech sell-off just continued. CapEx spending plans, of course, playing into it. Lack of confidence in software companies that have been doing some of this for eons, right? Will they be able to continue offering the services that their clients require, or will AI just take it over? And then, of course, you had that miserable challenger job cuts situation where we saw the most layoffs since the great financial crisis, playing into the mood. That said, we do seem to be a little more risk on today with futures pointed higher, particularly for Russell 2000 futures. Perhaps that rotation just continues. Let's take a look at bonds because we are seeing the curve lower across the board, but the steepness hasn't changed. So we're all the way down to 347 on the 2-year. We're still at 485 on the 30-year, although we're about 5-6 basis points lower than we were 24 hours ago. That 2s10 spread at about 71 basis points now, the widest in about 4 years. And let's take a look at some of those particular outliers. So we have silver, for example. It was down 20% overnight in Asia, but we're bouncing back today for silver. Bitcoin as well. It got down as far as almost $60,000 a coin. We're almost back at $65,000. And then we're keeping an eye on oil as well as we hear those talks now were indirect, with Oman appearing to be mediating as opposed to direct talks between Iran and the United States. All right, let's get to some individual stocks to watch. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Amazon is firmly in the red this morning after much higher than expected forecast for CapEx. So this, of course, echoes what we had from Alphabet yesterday and really goes to show how concerned investors are getting about how much those bigger tech companies are spending on AI and whether or not that will actually start paying off. And we are down almost 8% for Amazon this morning. Moving on to Stellantis, and there for the car maker, shares are also in the red after saying it expects to take charges of about 22 billion euros. This is part of a business reset to move away from electric vehicles, and the charges came in higher than analysts had expected, and this now really puts pressure on the CEO to show that the big restructuring that is ongoing is actually starting to work. And finally, Doximity, the healthcare software company, is also in the red this morning, down almost 32%. It provided an outlook that was seen as disappointing. And this is also part of this broader sell-off in software stocks that we've been talking about all week, as investors try and limit their exposure to companies that they think will be really disrupted by AI.
That is some drop for Doximity. Chloe, thank you so much. Chloe Melly there. And coming up this hour, we're going to catch up with Citi's Veronica Clark on the labour market. We're not getting the NFP today, though. We'll have to wait until next Wednesday for that. A delayed jobs report will be in focus. Let's get back to these crazy markets. Nasdaq futures back in the green after US stocks posted their worst week so far in months, while the yield curve flattens very slightly off its steepest in 4 years. Let's bring in Bloomberg's Morwenna Conium to join us now. So Morwenna, this sell-off that we've seen all week, it just was like a vicious cycle. Once we saw some selling, we saw even more selling. Was it mainly the retail trade that was getting out? And should we expect some kind of risk-on move again now that we're seeing futures positive?
Well, we really are seeing a rebound in futures this morning, and also in Bitcoin and some of those commodities as well. So the tide does really seem to have turned. Whether that can be sustained, there's some dip buying going on, a sense that perhaps the pile in to sell went too far. Maybe there's still some value there. And a lot of this really speaks to the paradox around the AI trade at the moment. We've seen the sell-off in some of those software developers this week because of concerns about AI disruption. That's sort of taken a chunk out of the AI trade in general. There's also concerns about companies spending too much. We've just seen Amazon's announcement this morning, which is weighing on its shares in the pre-market. But at the same time, dip buyers are feeling, well, maybe this is actually a bit of an overreaction. There is still a lot of growth potential there. And so we're seeing that sort of starting to flip back again. And then that also feeds into the sort of risk appetite as well. It's interesting, we're seeing the commodities splitting there. We're seeing precious metals pick up a bit after their slump, whereas copper futures are still pointing lower. That benefits a lot from the AI trade too. So I think really the sort of sense of whether things have gone too far or not far enough is really what the tension is there this morning.
Yeah, I mean, Morwenna, why are the enormous capex plans sending markets into a tailspin? Typically, spending in an economy should be good for the economy, right? It's creating innovation, it should be creating jobs, better productivity potentially.
Well, I think it's really a case of, capex is good if it actually provides growth and if it also matches the profit potential. I think there's some concern that perhaps companies are spending more than the revenue would merit, and that does lend them up to margin pressure, and it also, to the other side of the industry, this AI growth is also bad for some other stocks. There is that disruption, particularly with those innovations we've seen coming out of Anthropic this week. So I think that there's just concern, and perhaps that these valuations have got overinflated as well. The amount that people are spending, does it really match the potential that's there? So it's really a case of a reassessment as to what's merited and what is hype.
Yeah, it's really messy out there at the moment. At some point, I guess, clarity will prevail. This crisis of confidence in Bitcoin, though, does it preclude it now from ever being a good hedge again, or, a store of value or a haven?
Well, I think certainly that narrative has been disrupted. We've had reports out about the losses, actually, that those investments have sustained over the last year. We have had really quite substantial slumps, the most since back in 2022, where this trade sort of unwound. So I don't think it's ever going to be seen necessarily as that sort of pure opportunity again, but it is a very valuable, part of the market. It does attract a lot of interest, particularly when risk appetite is up. There was that political sort of charge that we saw when the Trump administration came in, and perhaps that's being lost now. So it's difficult to say, obviously, where it will be seen from here, but certainly there has been a lot of volatility, and it is trading very much as a risk sort of asset market.
Morwenna, thank you so much for joining us this morning. That is Morwenna Conium. A closer look now at tech and Amazon's big spending plan for AI. Have a listen.
When I look at this, what's happening, it's kind of unbelievable if you look at the demand of what you're seeing already with AI. But the lion's share of that demand is still yet to come in the middle of that barbell, and that will come over time.
Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. So this 200 billion, it feels like everybody's been trying to one-up each other by, 10 or 20 billion dollars, right, Tom? Is this a necessary spend for Amazon?
Yeah, it certainly feels like that, doesn't it? I mean, if we go back to, for example, the conversation that Microsoft was saying in terms of their plans for, $105 billion of spend, and then it was Meta with 135 billion, then Alphabet with 185 billion, and then Amazon says, I'll raise you and do 200 billion US dollars in terms of capex. So yes, we had another moment, of course, when investors started to fret about the extent and the historical nature of this spend on data centers and infrastructure that's planned now by Amazon. Of course, their spending over 2025 came in well above the estimates as well. So this is a huge commitment from Amazon. I think if you're looking for green shoots or at least some solace, then you could look at AWS, which is a key driver of profits for the company. They saw a 24% jump. That's the highest jump in growth that we've seen in about 3 years for that key part of the cloud business for Amazon. The e-commerce business came through with a beat. Advertising came through with a beat as well. And they have a backlog. And talking of Andy Jassy's comments there, they have a backlog in terms of demand for the data center part and the AI piece of about 250 billion US dollars. But to the point he was saying, this is about a time frame. They're not quite clear when that time frame comes. They know the demand is there. And that is where the anxiety lies for investors. When does it all line up in terms of the spend on capex that kind of aligns with that revenue stream? Andy Jassy says they do have the demand. How it comes through is going to be key.
So this escalating build out and the huge amounts of money that you just mentioned for all of those mega techs that you just mentioned, are they all competing for the same business in the end, or could they all thrive post spending?
I think that's a good question. I mean, it's going to become differentiated. You're seeing the large language models are starting to differentiate. There's OpenAI, which is focused on the consumer. There's an Anthropic that's been very successful in terms of the enterprise piece. And then Gemini of Alphabet, of course, which is catching up very much in the consumer space as well, with also the enterprise offering. In terms of what's happening in the overall capex spend, 650 billion US dollars now, if you combine those four big tech companies in terms of their commitments for 2026. And in historical terms, again, we have not seen anything like that this century. You can put all the automakers in the US together, you can put all the oil companies together, you can put the Walmarts together in terms of their spend and their plans for capex in 2026. It's just a third, just 1/3 of that commitment just from four tech companies. We haven't seen this arguably since the 1990s and the telecoms boom and then ultimate bust as well, at least partly, or even you could go all the way back to the railroad build out in the US as well. So it's historic what is being committed by these companies. And now they have to prove they are going to be able to monetize that. And this coming at a time when Anthropic, for example, is coming through with new products and moving into other verticals because they are also under pressure to show that they can monetize as they lead up to what is expected to be an IPO later this year. It's
all very exciting and terrifying as well, potentially. Tom, thank you so much. Bloomberg's Tom McKenzie. Now to other top stories trending on the terminal this morning. A Brevon Howard fund manager has quietly become one of the world's most successful macro hedge fund managers. Singapore-based Minal Bathwal has had an 18-year winning streak, not having a single down year since he started managing money during the 2008 financial crisis. His fund has scored wins on everything from Korean interest rates to Asian currencies. Societe Generale shares declining after it reported fourth quarter results for its trading units that missed estimates. Revenue from buying and selling fixed income securities and currencies fell 13%, while equities trading fell 5.3%. And European Union regulators have launched an antitrust investigation into the ski equipment industry, casting a shadow over the 2026 Milano Cortina Games. The investigation is examining whether companies may have violated rules around cartels, specifically illicit price-fixing practices, which could have led to increased resale prices within the EU market. Coming up, Oman says it held indirect talks with the US and Iran. More on what that all means next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The president has obviously been quite clear in his demands of the Iranian regime. Zero nuclear capability is something he's been very explicit about, and he wants to see if a deal can be struck. And while these negotiations are taking place, I would remind the Iranian regime that the president has many options at his disposal, aside from diplomacy, as the commander-in-chief of the most powerful military.
Oman says it has had indirect talks with Iran and with the United States. Discussions focused on conditions to resume negotiations. Joining us now from Washington is Bloomberg's Kasia Klimashinska. Kasia, is this a little bit less than we were expecting? Did we know the talks were going to be indirect?
Hello. First of all, I think it's good news that the talks happened. As you said, we have this kind of a readout from Oman saying that Oman talked to both sides. No, we didn't know. We didn't expect that those would be indirect negotiations, but sounds like that's what's needed. Oman said that it kind of tried to establish rules, lay the groundworks for the two sides to talk. And the Associated Press also reported that the U.S. delegation has most likely already left the place where the negotiations were happening in Oman. But it could be good news for the oil market. Of course, the oil market is watching it with concerns. But as long as those talks are happening, that perhaps diminishes this threat of some sort of military action from the U.S. that Caroline Levitt just mentioned at this White House briefing that you showed us.
Yeah, and if anything, you know, when President Trump suggested that there would be direct talks, it did seem surprising. So maybe this is a first step towards direct talks. Let's talk about President Trump calling for an arms treaty with Russia. What's going on there? Why did this come up now?
So this is, again, a difficult relationship between the two sides that don't necessarily talk too often, U.S. and Russia. But there is this nuclear arms treaty called the New START that expired. It expired on Thursday. And President Trump came out through social media saying that he wants a new agreement. It's a common strategy for Trump. He wants to throw away what's already out there and just build something new, something that will have his fingerprints all over it. He also wants China to join those nuclear arms negotiations, and China doesn't want that. So for now, Moscow said that its understanding is that there is no nuclear arms treaty binding it at the moment.
What is happening in Minnesota and with ICE and DHS more generally, Kasia? We know that 700 agents were pulled out of Minnesota. What's next?
It's a very delicate situation after, unfortunately, 2 Americans were shot by the anti-immigration officers sent by the federal government. So President Trump is very careful there. He announced the withdrawal of 700 officers in Minnesota. But at the same time, he reiterated that it's still his mission to get rid of illegal immigrants in this country. And so he will continue perhaps looking at some other cities that he didn't specify.
All right, Kasia, thank you so much. That is Bloomberg's Kasia Klimashinska for us in Washington. Let's take a look at where markets stand now, because if we look at Bitcoin, we got down to literally 60,000 and change overnight. We're back up to nearly 66,000. Dip buyers coming in, maybe that crisis of confidence or that forced selling maybe abating, we'll see. Now, gold has been volatile, but the last couple of days it's been around this level, about $4,900 an ounce. Silver, though, a lot more volatile. That was down 20% once again overnight. It's recovering today too. And if you take a look at iron ore in Singapore, below $100. So there's just one direction of travel for iron ore, and it would seem for copper as well. Coming up, Stellantis shares plunging today on electric vehicle reset charges. More on that story next. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Shares of Stellantis plunging this morning, the steepest drop on record, in fact. This after the carmaker said a business reset resulted in charges of around $26 billion for the second half of 2025. Bloomberg's Craig Trudell joins now with more. The CEO said the company basically overestimated the pace of the energy transition. Craig, is this reset that we're seeing not just at Stellantis but across all EV makers thanks to the Trump administration and current policies, or is it a broader lack of appetite now for EVs?
Yeah, I think it's a little bit of all the above. I also think you have to pin quite a bit of blame here on management teams, right? Where, at Stellantis under, the new CEO who's been in place for a good while now, but also his predecessor, Carlos Tavares, it has been difficult for them, right? They've had to answer to two very different administrations in the U.S. who had diametrically opposed views on the future of the auto industry. That's really difficult to run a business around. But this is also a story of a company that was trying to become competitive in electric vehicles, investing a lot in that and getting their suppliers on board to, feed those batteries and put those EVs on the market. Now that you throw those out in response to the changes in policy, it's going to cost you a heck of a lot of money, and that's what we're seeing this morning, and also have seen at GM and Ford.
Yeah, exactly. And also what surprised me is that China is also seeing a cooling in demand for EVs. We saw, trouble with BYD, this after, a price war between the EV makers in China. So I'm wondering just, what is that broader sort of shift away from electric vehicles? Has it something to do with the difficulty of using them, charging facilities, batteries versus charging, etc., as well as everything else?
Yeah, I think we have to maybe separate China from the rest of the world to some degree, because absolutely we're seeing a slowdown there, but it's a slowdown from a really impressive high level in terms of sales. And it's a very different story in the U.S. And even, I think, Europe is somewhere in the middle. And interestingly, Stellantis has had, this approach of trying to leverage a relationship with a Chinese manufacturer called Leap Motor, that arguably is making their life difficult at some of Stellantis's brands, where if you have this new entrant with a lower cost base out of China and an ability to price very competitively, that puts a high volume manufacturer like Stellantis in this very difficult position over here in Europe. So where we've seen some pickup in demand, but still a bit of a disappointment in terms of the growth not being what policymakers hoped when they were setting these targets to phase out the combustion engine around 2035.
Yeah, that's for sure. Craig, thank you so much for the update. That is Craig Trudell there in London. Time now for your front page news. First up, the Wall Street Journal says Toyota Motors CEO is stepping down after just a short term in office. Toyota has been navigating Trump-era tariffs too and struggling to maintain market share in China. The company pointed to profitability issues in announcing the elevation of the CFO to the role effective April 1st. Next up, the New York Times leading with Trump RX. The Times reporting the site is aimed at helping patients use their own money to buy medicines, but researchers warning, however, many could pay too much if they use the site. The government website will not sell medications, but will provide an entry point for consumers to buy 43 medications, including things like insulin and GLP-1s elsewhere. And finally, the Financial Times reporting President Trump's policies are denting international travel to the US. The FT says the number of foreign visitors fell 4.2% in 2025. That's the first annual decline since COVID. This all as the president oversaw an expansion of immigration enforcement, mounting scrutiny at the border, and a suspension on visa issuance to 75 countries. Coming up, Citi's Veronica Clark expecting a catch-up in job growth in January, though we won't get the data until next week. More next. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures higher now after U.S. stocks posted their biggest sell-off in months. This as a busy week of tech earnings showed massive spending plans for AI. The latest from Amazon vowing $200 billion worth of capex this year. And indirect talks happened between the US and Iran. Omani officials saying separate talks have been held with delegations from Washington and Tehran in the last few hours. So let's look at those markets. We're off our highs, but futures very definitely pointed higher. This after, of course, the Nasdaq 100 dropped 1.4% yesterday. It was a real miserable day. The Challenger layoffs report added to some angst around software companies and AI, and we had metals just bouncing around all over the place. Looks like that might come to an end today, particularly for the Russell 2000, which continues to be the beneficiary of whatever this rotation is. On the bond side of things, the curve has dropped across the board, but it's still at its steepest level in about 4 years. That 2-year yield at 347, the 10-year yield at 419. That's about a 72 basis point 2-10 spread right there. And let's take a look at some metals, because we saw silver drop 20% overnight. It's recovering again, but we're down to 73. It's like 2 steps backward, 1 step forward every morning that we come in. Bitcoin the same. We were down to $60,000 and change. We're back up to nearly 66 now. And crude oil, watching Iran, we came off a little bit, but we're putting on about 48 cents there now to almost $64 a barrel. Let's get to some individual movers now on this Friday session. Here's Chloe Melee in London.
Good morning, Bonnie. It seems the market isn't too thrilled about how much Amazon is planning to spend this year. So the forecast for capex came in way ahead of expectations. And just like Alphabet yesterday, we are seeing that result in quite a lot of weakness in the shares and really fueling investor concern around just how much those big tech companies are spending on AI and when we might see actually start to pay off. Moving on to Stellantis, which is also plunging this morning after announcing that it will take charges of about 22 billion euros related to a business reset to shift away from electric vehicles. And this is not the only car maker that we have seen move away from EVs, but the charges were way higher than expected from analysts. And so we are seeing quite a lot of weakness in the shares this morning. And this is really going to put pressure on the company to show when those benefits from that restructuring will actually come through. And finally, Reddit announced a $1 billion buyback and also projected very strong sales for the first quarter. And this shows how much the company is making headway in the advertising business in particular. And so this is quite a positive move for the company, up more than 9% in pre-market trading for Reddit.
Chloe, thank you so much. That is Chloe Melee there in London. The private Challenger job cuts data yesterday showed the worst layoffs since the great financial crisis, casting gloom over markets. Now, Bloomberg Economics says the layoffs announced so far have been concentrated in a handful of sectors and haven't broadened enough to suggest a shift to a high-firing, low-hiring regime. No non-farm payrolls data today, of course. We get next Wednesday. But Veronica Clark of Citi was expecting a catch-up in job growth in January. Still, though, she sees risks for the unemployment rate tilted to the upside. And I'm pleased to say Veronica Clark joins us now. So, Veronica, we get that data next Wednesday. It's going to be a huge week, as you pointed out.
Yeah.
What is it going to mean to us next Wednesday? What will it tell us about the current state of the labour market?
Yeah, we are expecting seemingly stronger job growth in January. We're at 135,000. Obviously, would have gotten that this morning. Another jobs Friday that wasn't. But I would take that number with a lot of caution. There has been a very clear pattern of residual seasonality around December, January, start of the new year. The last couple of years, and we've seen this January number stronger before. If you look at claims, initial and continuing jobless claims the last few weeks, they've gotten very low. They tend to get very low around the holiday season, start of the new year. That's been a good signal for this stronger January job growth. So I think we will see that in January, but I would really caution not to interpret that as a sign that labor demand is really rebounding, because there are a lot of signs of the weakening labor market still.
Yeah, what did you make of the Challenger layoffs yesterday? Did it give you pause even for that amount of enthusiasm for January?
Not necessarily for January specifically. If anything, we do see these Challenger announcements tend to lead actual layoffs. When they happen, they're announced and then they happen later. We tend to see that lead by maybe about 4 or 5 months or so. It is just a scraping essentially of all the announcements on job cuts. So you do have to take it with a grain of salt. It's not exactly hard data. You do. To believe that layoffs are picking up, you do want to see something like initial jobless claims starting to rise, maybe layoffs in the JOLTS data starting to rise more, obviously, then maybe we'd see that in the slowing payroll job growth. And we don't really quite see those signs in the hard data yet that layoffs are picking up.
Yeah, okay, well, that might be something we have to look forward to in 3 or 4 months' time.
Right.
But does it give the Federal Reserve any ammunition for potentially thinking about another cut sooner?
Yeah, I mean, it probably doesn't right now, but it should in a way. It's been a bit surprising, I think, to hear Chair Powell and some other Fed officials talk about, being encouraged by some recent stability in the labor market. And yeah, we did have the decline in the unemployment rate in December. That will be encouraging, but that was 1 month that followed essentially 5 months where the unemployment rate was rising. And there are, as Governor Waller points out, job growth is essentially flat on the year. There are signs that this is not a healthy labor market.
Yeah, it really isn't, apparently. What about wage growth? Can that be any kind of a silver lining?
Yeah, I mean, we have seen wage growth holding up enough. We're kind of running at a normal pre-pandemic rate. But, if you're looking for signs of how labor demand is evolving versus labor supply, of course, we have had immigration changes this year. Wage growth is a good tell about, how loose or tight the labor market is. And we have seen some better measures of wage growth slowing more recently. The Atlanta Fed wage tracker, that has slowed a lot through the end of 2025. Next week, with all the data, we'll also get the employment cost index for Q4. That's the Fed's gold standard for wage growth. That is slowing. It's not particularly weak or anything, but it's certainly telling us that the labor market is not a source of inflationary pressure.
Well, we know that the Fed had been very worried about the labor market in the run-up to the holidays, let's say, and then it sort of took a back seat with everything that was going on, and it didn't seem like there was that much that was alarming out of any labor data that we were getting. But the Fed doesn't want to be behind the curve, so everybody who's waiting for the first rate cut in the second half of the year, should that not be brought forward?
Yeah, it should in a way. I mean, we've kind of gotten to the high point of where the Fed is comfortable with the unemployment rate going. We know in their last forecast update in December, they were expecting to see something like 4.5% by the end of 2025. We got there. I think anything beyond that, you are getting more uncomfortable that this is just an unemployment rate that continues to gradually increase, and if that trend persists, at some point the level of the unemployment rate is not so low anymore.
Will the market look through what you deem to be the seasonal effects in January that we might see next week and start pricing in a third cut potentially this year?
Yeah, maybe not in that January data. It probably does take some time. Again, I think that January number will look strong because of this seasonality, but because there is this seasonality in the jobs data and the inflation data, there's also a seasonality in Fed pricing the last few years and how people are perceiving the risk of Fed cuts, where it's the start of the year, we kind of price that out, and then as we get the weaker data in the spring and summer, we start to add those cuts back in. So maybe it takes another couple months to really get the market to price more cuts.
Does Kevin Warsh at the helm change any of this calculus?
I don't think in a dramatic way. We are expecting that he'll come in and advocate for more rate cuts. The timing of it is such that he would be joining potentially. We don't quite know how the Senate nomination process will play out, but should be joining maybe by something like the June-July meeting. That's the time of year when we have seen weaker labor market data start to show up anyway.
And it's midterm prep time.
Yeah. And so if we do see that seasonality in the jobs data, we get some weaker data, it would probably be easier to convince some of these hawks that, maybe we should be cutting a bit more. But it starts with the data. I don't think it starts with whoever the chair is.
With Kevin Warsh, yeah. Just curious about these layoffs that Challenger is telling us about, that I guess we would know about if we read every single headline, right? Are they thanks to AI?
So Challenger does do a breakdown of job cuts by reason. AI is one of the reasons that they try to pick out. There has been an increase in that as a cited reason the last couple months, last year or so. A bigger reason is still economic conditions, though. So it's certainly not all AI. If you look at something like the JOLTS data, the pullback in hiring, we have seen that very concentrated. It's broad-based, but it's been particularly pronounced in sectors like professional and business services. Maybe those are AI jobs that AI would maybe be replacing. But the pullback in hiring there also started early 2022. So probably some of this is AI, but I don't think it's all AI.
Right, and if the market really believed most of it was AI, we would not be seeing the gains that we're seeing in the Russell, right? Because some of those companies could be very much affected by AI.
Right. And those small businesses, and I don't even mean necessarily, businesses with equities, but restaurants, right? The bulk of the economy is very small businesses. Those are the businesses that we really saw the pullback in hiring first. And that, happened in 2022, 2023. Those will be more rate-sensitive businesses, people borrowing at banks. And maybe that was a good evidence that, some of this pullback in labor demand is again, not AI, but maybe a function of rates being restrictive.
All right. Well, Veronica, we're not going to make you come back in next Wednesday, but we are looking forward to sharing a jobs report with you very soon. That is Veronica Clark of Citi. Now to other top stories trending on the terminal this morning. A Brevon Howard fund manager has quietly become one of the world's most successful macro hedge fund managers. Singapore-based Minal Batwal has had an 18-year winning streak, not having a single down year since he started managing money during the 2008 financial crisis. His fund has scored wins on everything from Korean interest rates to Asian currencies. Stellantis shares plunging after it said a business reset resulted in charges of around $26 billion for the second half of 2025. CEO Antonio Filosa said that the charges largely reflect the cost of overestimating the pace of the energy transition. And work on a $16 billion Hudson River Rail tunnel is expected to come to a halt today following the Trump administration's decision to freeze its funding. The commission in charge of the project has sued the federal government in an effort to unlock more than $205 million. The tunnel construction is one of the most ambitious infrastructure projects in the United States. Coming up, Oman reporting indirect talks with the US and Iran. Latest on those negotiations. That's next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1-1,
is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The president has obviously been quite clear in his demands of the Iranian regime. Zero nuclear capability is something he's been very explicit about, and he wants to see if a deal can be struck. And while these negotiations are taking place, I would remind the Iranian regime that the president has many options at his disposal, aside from diplomacy, as the commander-in-chief of the most powerful military.
In the Middle East, Washington and Tehran have held indirect talks to de-escalate tensions. Oman's foreign ministry writing in a statement, quote, the consultations focused on creating the appropriate conditions for the resumption of diplomatic and technical negotiations. Joining us now is Bloomberg's Kasia Klimaszinska. So it's a start, Kasia. Apparently the US delegation has already left. It's a start, but did we expect more?
It's a surprise. As you said, those are indirect talks. So Oman met with the U.S. delegation led by Steve Witkoff, and then separately with representatives from Iran. But Iran also said before those talks even started that it won't be a major step, that those will be just some sort of broad talks, and on the top of it, indirect. We haven't heard from President Trump about those negotiations yet, so this could still come later today. He just started posting, and of course, oil traders will follow it very carefully because this has been moving oil prices.
Yeah, and there wasn't even agreement before today on exactly what would be on the agenda, so I suppose this is something at least. Now, domestically, President Trump launched randomly a new website to help Americans apparently directly buy select medicines at a discount. Take a listen to this, Kasia.
We're taking the lowest price paid for drugs. We will pay equal to whatever the lowest price anywhere in the world. That's the price that you're going to be paying. It's a tremendous reduction. Drug prices in other nations will go up by doing this. They had to agree, and the reason they agreed is they used tariffs.
So it's a government website. You don't actually buy anything directly from that site. It's like an aggregator. It sort of sends you to whatever site the medication seems to be cheapest on, potentially. But many of these medications, if you have insurance, are already covered, right, Kasia? So what are researchers saying?
Yes, so this is this push from President Trump to skip the insurers to let Americans buy some medicines with their own cash, especially the medicines that are aimed to reduce obesity. So that's what you can go in there and search for. And this is this concern to increase affordability, especially of healthcare.
Yeah, you would have to wonder if it isn't going to kick people off exchanges if they suddenly think that they don't need to be insured anymore. We'll see how it pans out. What about ICE and DHS? Apparently now the White House is looking for talks with Democrats over limiting ICE.
So this is one of the objectives for the Democrats. They really want those ICE officers out of the streets, or if they are there, they should be less aggressive. They should not wear face masks. They should have body cameras. They basically want to establish some sort of rules to de-escalate the tensions in major U.S. cities between ICE and immigrants as well as Americans. So Democrats have listed their demands. They sent the list of demands to Republicans and to the White House. And so there have to be talks between the two sides, or otherwise the funding for the Department of Homeland Security will expire.
Yeah, I think it's up on the 13th, right, which is only 7-8 days away. Kasia, we have to leave it there, but thank you so much. That is Bloomberg's Kasia Klimaszinska. Well, what a week it's been in tech. The biggest companies in the space out with massive spending plans, totaling as much as $650 billion this year as the AI race seemingly intensifies. Joining us now is Mandeep Singh of Bloomberg Intelligence. So, Mandeep, just in broad strokes, we saw spending plans go up. We saw the likes of software companies sell off. Is the market, are investors getting this right? Are they interpreting everything correctly?
I don't think so. Right now, we are in that fear mode where everyone seems to be panicking about the level of capex from the hyperscalers, and also, the pace at which the disruption will come. So clearly, the LLM companies, whether it's OpenAI, Anthropic, have increased their pace of product launches. But in terms of the impact, it's too early to say, they'll be displacing any existing software. And from that perspective, when you look at these capex numbers, they're obviously 30% above consensus in a lot of cases. That makes you wonder, what is the impact down the line in terms of, what it means in 2027 and 2028? And who is going to be using all this chip capacity? And how do we even make all those chips to begin with? So I think there is a big impact in terms of what this means for wafer production and who are the users going to be in terms of the chip capacity. And I think there are a lot of questions that need to be answered here.
Yeah, are we going to have a chip capacity mountain out there? Let's have a listen to Andy Jassy, because Amazon also announced plans to spend $200 billion this year in AI. And he spoke on the earnings call. He made it sound very palatable even. Take a listen.
When I look at this, what's happening, it's kind of unbelievable if you look at the demand of what you're seeing already with AI. But the lion's share of that demand is still yet to come in the middle of that barbell, and that will come over time.
Yeah, he seemed to act like it was a necessary amount of spending. He seemed to say that it was an extraordinary opportunity to change the size of AWS and Amazon as a whole. How would that happen, Mandeep? Walk us through that process.
A lot of the capex investments that are going this year are for future capacity. So it's not as if they are deploying, the dollars for 2026. That capacity will come online, especially for someone like NVIDIA or TSMC. TSMC really has to ramp up their fab capacity here to deliver for Amazon, for NVIDIA, for Google. And if all these companies have had such a big step up in capex, the wafer capacity is not growing, 100%. And so from that perspective, there will be lags in terms of when they will finally get the chips. So from that, I just feel like right now, everyone is going all in because they want to put pressure on the frontier labs, your OpenAI, Anthropic, in terms of what these companies can do. Remember, they have to rely on the hyperscalers. And Google obviously has that vertical integration. So they have shown the advantage they have in terms of capex efficiency and using it within their own ecosystem. But for others, it is about renting those GPUs or, the accelerator chips down the line. And it'll be interesting to see what sort of demand they'll have.
Mandeep, it feels almost like a trial, right? We've heard from the mega techs, and it's created this narrative in the market. But we haven't heard from the AppLovins and the Atlassians. They're all to come. AppLovin is reporting next week, and it's the worst performer on the NASDAQ 100 year to date. It's down shockingly. So is Atlassian and lots of other companies. Will the narrative shift once their CEOs come out and say, look, this is overblown, this is what we're doing, it's all good for everybody?
I don't think so. And see, that's the thing about this panic is everyone sort of is in that phase where there is a lot of uncertainty. And even if the management team comes out and says, we have had a great quarter, this is going to linger on for a while because people really want to see how this plays out over the next 6 months, as opposed to, making any judgments based on what the companies are reporting this quarter.
Wow. Well, it feels like there have been some judgments made already. Mandeep, thank you so much. Mandeep Singh of Bloomberg Intelligence. Coming up, no jobs report, but we still get data and Fed speak in your day ahead next. This is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Biogen and Carlyle wrapping up the week in earnings, and boy, what a week it was. Then we do get University of Michigan sentiment data out at 10 a.m. Eastern, and Fed Vice Chair Philip Jefferson is set to speak at 12 p.m. Eastern. Let's take a look at some pre-market movers. Amazon planning to spend, obviously, as you know by now, $200 billion on AI capex this year. And it is lower by about 7 to 8% on the session this morning. Stellantis down 23%. It took charges tied to the EV pullback. It said it didn't think the energy transition was going to take as long. It's also dealing with tariffs, and it's something that we're seeing across the board for EV makers. And strategy rebounding just a little bit. Bitcoin rebounded after a 50% dip from its peak. But let's take a look at Bitcoin, because if we look at the macro environment, you can see it's still below $66,000. Now, it reached as low as 60 and change, so that's something. We are seeing futures pointing higher. Maybe it's going to be a risk on Friday. We'll see. That's it for Bloomberg Brief. Surveillance is next. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
There is a sentiment overhang.
We're coming to a point in the AI transformation where dispersion is much greater.
The AI boom is coming.
Rotation is the new momentum trade.
I think there's a number of narratives going on, and so investors are increasingly wondering, which ones do we want to pick?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, struggling to bounce. Amazon stock plunging after pledging to spend $200 billion this year. After tech stocks posted the biggest three-day rout since Liberation Day. And weaker than expected data sent bond yields down the most in months. We begin this hour taking stock of a brutal week on Wall Street. Following a rout across tech, precious metals and crypto. A single Anthropic plug-in providing even more fuel for the software sell-off, spreading across the stocks of private market firms from Blue Owl to TPG. The risk aversion taking on a different flavour going into the weekend as several data points are poking holes in the bull case for the US economy, opening the door to a conversation about rate cuts.
The anatomy of this week is notable for how varied it is. It started with what you were talking about, the rout in software stocks, the potential of Anthropic disrupting fundamental business models and potentially increasing even the default risk of some of these companies. It has shifted into, well, how much can this bull market keep running if you don't have the pillars of a strong economy behind it? Yesterday, we got a 1, 2, 3 punch. We got the challenger job announcements that came out. Then we got jobless claims that were elevated at 8-week highs. And then we got the JOLTS data that came out that showed that job openings fell to the lowest level since 2020, not boding well for the U.S. economy.
Governor Waller is looking smarter and smarter by the day over the last week or so. He said this recently. There is considerable doubt about future employment growth and suggests that a substantial deterioration in the labour market is a significant risk. Now, we can have the debate about it all, but it's certainly a risk.
And he's been consistent. He has been saying this for months, and most recently saying he is still very concerned. And basically, everyone was looking for, why did this individual go out and dissent at the last meeting? Was it just because he was running to be the Fed chair? Governor Waller came out and said, no, it's because I'm concerned about the labour market, and maybe he was right.
So we got real economy concerns on top of a rout in tech stocks and massive moves in private market firms. KKR, TPG, Blackstone, Apollo, all softer this week. Check out Blue Owl, down for 11 consecutive days. We're down 15% this week alone.
And they came out and they tried to stave off some of those concerns by saying, look, software-related debt is only about 8% of our portfolio. The market's response, we don't believe you. A similar response from Ares as well. People not taking any of these assertions as fact or any kind of placation for some of the concerns. It raises this issue. How are some of these companies going to finance these very ambitious plans at a time where, yes, their cash flows are really ample, but ultimately it will come down to some of the credit financing. How willing are people to go and continue to extend that?
They're struggling to put this story to bed. Ari's saying there's a huge disconnect. The narrative is wrong. KKR's Scott Nuttall saying our level of anxiety is pretty low. For them, for the management teams, but right now, if you're holding the stock, I imagine you're pretty anxious.
Blue Owl also saying their technology, that part of the portfolio, is the most pristine. Quote, we don't have red flags. We don't have yellow flags. We actually have largely green flags. Well, I'll tell you, those stocks are anything but green this week.
So here's the bounce so far this morning. Equity futures on the S&P positive by 0.5%. We'll see if this sticks. Coming up this hour, we'll catch up with Brian Levitt of Invesco on a 3-day stock market route. Sarah Kunst of Clio Capital as big tech's CapEx balloons. And Vivek Arya of Bank of America as chip stocks cash in on the spending boom. We begin this hour with stocks inching higher following a 3-day decline. Brian Levitt of Invesco writing the story is far from fully written. We expect leadership to rotate as the market differentiates actual earnings leverage from all the hype. Brian joins us now for more. Brian, good morning. Good to see you.
Good to see you too.
What was the last 24 hours about compared to the previous 2 days?
I would say that this is a market that's been letting off some steam, certainly in the hotter parts of the market, and primarily, I think you got to look. If you look at the broad index level, these markets are not down all that much. I mean, Nasdaq down 5% over the last 5 days isn't great. S&P a couple of percent. It's really the carnage being hit in the software stocks and some of the more speculative parts of the market. You see it in things like what happened with silver prices and Bitcoin. But the reality is, when you look at all the investment that's likely to take place, we can parse whether the big companies at the top of the S&P 500 are right to do so. But if you look at industrials, if you look at energy, if you look at the semiconductors, it's all held up fairly nicely. And it's all part of that rotation story that we're talking about, less about who's going to win in that space, because that's going to be a big investment to win in that space, versus who's going to help support this build out. That story continues to play.
That certainly felt real up until yesterday. And then the real economy scare kind of clicked in just a little bit. I don't want to overdo it, but just a little bit. A couple of data points poking holes in a bull case for the US economy. That's something we need to talk about, because people were piling into small caps. They were comfortable in the equal weight, close to all-time highs. Should they still be comfortable with those trades?
Yeah, I think so. And let's remember, we started the week with one of the great leading indicators of the economy, the Institute for Supply Management Purchasing Managers Index, which surged and climbed to 52. That's an expansion territory. We had not been there in quite a while. The new orders component particularly strong within it, and prices paid relatively flat. So that's a good leading indicator of the economy. Now, when you think about the jobs market, jobless claims rose yesterday. 250,000 is not a blowout jobless claim number. And it's also a little bit of a heads you win, tails you win type of scenario, because the weakness in the economy suggests what I've always believed is lower interest rates on the short end of the curve, which should continue to benefit lower capitalization stocks, more value-oriented stocks. So I'm not ready to say that this is a economy that's rolling over. Credit spreads continue to remain tight. Leading indicators are picking up. Inflation expectations relatively contained. I think the Fed's going to be bringing rates down towards 3%.
It might not be an economy that's rolling over, but it's a really confusing economy. And Amazon exemplifies it in a perfect way. On one hand, they were behind a significant portion of some of those job cut announcements that we got from Challenger Gray and Christmas yesterday. On the same level, they're going to be spending $200 billion so far this year. How important is it for us to understand exactly what they are spending this money on, to be able to infer what kind of growth and benefit to the underlying economy that actually will look like?
Yeah, it's important. But if you take each component of economic activity, you take the consumer, we have to remember that, things may be weakening a little bit. Household net worth is at an all-time high. Unemployment's relatively low. The business investment we know is going to be big, as you mentioned, and the government spend is going to be reasonable this year, not only in the United States, but many parts of the world. So in aggregate, that's a good economic backdrop. Now, when you think of this investment that's going to take place, there's a lot of parts of the economy that should benefit from it. And again, industrials rallying, energy's been rallying, semiconductors were up 15% year to date before this week. So I think that story persists. Would I be diving back into software companies this morning after the sell? No, I'd be mindful of that. But I think the real economic story continues.
And this is arguably the main reason for the broadening out trade. The real question right now is, do you go into the hyperscalers, given the fact that their business model seems to be changing from asset light to basically glorified utilities and real estate managers?
Yeah, I mean, I would go case by case. It's certainly not a monolith. Big story last year was that only 2 of the 7 Mag 7 outperformed the market. And you're right, these stories have changed significantly. I mean, the things that we loved about some of these businesses was that they were near monopolistic, they did not have significant investment needs, and that all changes. So you got to go company by company, be far more selective, and can't say I'm just going to own the whole lot of them. There will be winners, there will be losers. Those business models have changed.
Brian, you say you're not going to wake up this morning and just go dive in and pick up some software company stock. Why not? Why isn't this a buy the dip moment?
Because for a lot of them, we still need to understand what does this really mean for the business model. And we knew all along AI is going to be quite disruptive for a lot of businesses. The question that investors should ask themselves over the next few years, is it disruptive to more businesses than it is beneficial, or is it beneficial to more businesses than it is disruptive? And I'm still in the latter camp. There is a lot of companies that are going to benefit significantly from the AI build. You're already seeing profits high with employment, profits to employment not significantly elevated. So we're in a bout right now where we're looking at the disruption, which always happens when there's technological advances. But history suggests that there's always far more beneficiaries than there are businesses that are disrupted.
Slightly different for you, though. A self-described FOMO guy who's not willing to lean into where the pain is right now. Is it fair to say? Bit of a change?
Bit of a change, but I'm always looking for opportunities. So I have a fear of missing out, across the broad market. And so it doesn't mean that I need to always be buying into dips or into, falling knives, just looking for where the opportunities lie. And, again, that FOMO is good. That FOMO doesn't always exist, Jonathan, most of the time. And it exists when leading indicators of the economy are improving and the Fed wants to ease. I'm definitely a FOMO
At times, this has felt like a falling chainsaw and not a falling knife. Michael Arrighetti said this yesterday. If you're going to underwrite a narrative of AI disruption, you also then have to say, well, what does that mean for the productivity and margin improvement in the rest of your book? And I actually thought it was a really good point that he made just yesterday.
Well, that you could have an offset from some of the gains that you're seeing. For example, KPMG is saying, look, we're going to get lower prices because we can lower the costs of some of our accounting from AI. How much is that sort of the analog to a lot of other companies? That said, how many business models go to zero? And that is what people are scared of, and that is the reason why some of these stocks are falling out of bed. That is the reason why the loans tied to some of these software companies have fallen 10, 15 cents on the dollar in just the span of a week. This is a fear of a fundamental shift in the reality for this justification.
I'm so happy you brought up KPMG. I think it's astonishing that this Financial Times has this exclusive story that they're going to their auditor and saying, we know that AI is working. They should know, because they also are an auditor. They're an accountant, and they're saying, we need a lower price or we're actually going to dump you. And that's what's going on right now behind the scenes in corporate America and global Wall Street.
I wonder how many people read that this morning and thought, you know what, I'm going to call KPMG and ask them the same thing.
Exactly. This is the disinflationary kind of boom that people are talking about. Question is, how many business models get absolutely blown out of bed, and how many of those business models are levered?
It's a pricing power shock that we all need to navigate over the next several years and maybe beyond. Brian, it's good to see you. Thank you, sir.
Thank you.
Brian Levitt there of Invesco on this equity market. Equity futures doing just about OK. We're positive by 0.5% on the session. That is a session high. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Good morning, John. Thank you. Amazon shares trading lower in the pre-market. The company announcing its latest results and plans to spend $200 billion on data centers, chips and other equipment this year. CEO Andy Jassy says the money will predominantly go to the company's cloud unit, and most of that spending will be for AI workloads. Stellantis shares plunging Italian trading. The carmaker announcing it would take more than $26 billion in charges in a sweeping overhaul of its electric vehicle strategy. The write-downs follow similar moves at Ford and GM. Stellantis will incur the charges during the second half of the 2025 fiscal year. Anthropic is releasing a new version of its AI model designed to perform financial research and other workplace tasks. The company says Claude Opus 4.6 can scrutinize company data, regulatory filings, and market information to come up with detailed financial analyses. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie in about 30 minutes' time. Up next on the programme, big tech's big wipeout.
It feels like DeepSeek and Liberation Day are happening at the same time. There is a sentiment overhang, just generally speaking, and some things are just being thrown out in conjunction with, and might not be justified in our view.
A conversation up next with Sarah Kunst of Clio Capital, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's the bounce this morning. Let's see if it sticks. Equity futures up by 0.6% on the S&P 500. The Nasdaq up by 0.7%. The Russell up by more than 1 full percentage point in the last 24 hours. Some concerns about the real economy trade off the back of a handful of data points. It's worth passing through them. Check out the bond market. 2-year bond yields with a reset lower. We're down by 10 basis points just yesterday. This morning we're up by 3. 347.90, still sub 350. Challenger job cuts plus jobless claims just pushing back against the enthusiasm that built after looking at the ISM manufacturing and services.
The idea was that even if you saw some sort of violent rotation in some of the tech trades, you did see the fundamental economy benefiting, if anything, from the capex boom that you're seeing. This really challenged it, and each data point was messy. And you could come out and you could explain why each one is inaccurate, and Stephanie Roth will do that later today. But if you look at them in aggregate, it paints a different picture than some sort of screaming stability in the U.S. economy.
Well, let's talk about another data point. $200 billion. How's that? $200 billion. The capex intentions of Amazon. Check out how the stock reacted. Down 7.7% so far this morning. Call it 7.8. Just a bit of pushback this week from the equity market.
As Lisa would say, Amazon, the CEO woke up and said, Alphabet, hold my beer, because it was insane how much they were willing to spend on capital expenditures. What is so interesting is AWS, which is really important to cloud and this whole future for AI for Amazon, did really well. Double-digit percentage. They are doing really well, but the fact that they're just spending too much, people think it's not equal to how well AWS is doing.
Down by close to 8% of the pre-market, 205.20 on Amazon. Under surveillance this morning, big techs, big wipeout.
It feels like DeepSeek and Liberation Day are happening at the same time. There is a sentiment overhang, just generally speaking, and some things are just being thrown out in conjunction with, and might not be justified in our view. But it's very, very tricky, and you have to be very picky in terms of your exposure when you're thinking about going in, and that doesn't mean that sentiment's going to change overnight.
Here's the latest this morning. Amazon pledging to spend big on AI this year. Investors concerned it might not pay off. Tech stocks posting their biggest three-day rout since Liberation Day. Sarah Kunst of Clio Capital writing, just because the market goes down doesn't mean it's a buy the dip moment. Sarah joins us now for more. Sarah, welcome to the program. We've seen these convulsions across several pockets of the market now. Crypto, precious metals, software stocks. Is this the start of something bigger?
I think it's a continuation of something bigger. The economy is not where we want it to be. Consumer sentiment is not at an all-time high. The news coming out of America right now, politically, it's stressful. And so I think you're starting to see all of that converge with a level of CapEx spending that doesn't feel sustainable, because the reality is these data centers don't really create great jobs. You're going to need a lot of AI spend, and we don't know where that's going to come from to justify filling up these data centers with chips that do depreciate in value pretty rapidly. And so I think it's all kind of coming to a head at once, but it certainly is not just starting. This is a continuation.
Well, Sarah, let's talk about the data we've seen so far this week. So ISM manufacturing was really encouraging at the start of the week. Then we had three data points yesterday that were much less encouraging. The Challenger job cuts, jobless claims, and then a little bit later in the morning, job openings, vacancies fell back. How much weight should we put on yesterday compared to the ISMs at the start of the week?
I think that we are in a moment, unfortunately, where we have to really, really lean heavily on that private data. The reality is that the government has sort of a narrative that they want to push that might not be sort of aligned with the reality of what we're seeing on the ground. And so, I think AI is part of the slowdown in hiring. I don't think it's the whole story. I think that the overall weakening economy is a big part of that slowdown in hiring. We've all kind of forgotten about tariffs from last April, but they are having a big impact in terms of everything from tourism dollars to tariffs. The U.S. economy isn't what it once was, and that means that you're going to see less hiring and over time, more firing.
On a fundamental level, Sarah, that would challenge the broadening out trade that some people have been really leaning into, the rotation into everything else in the economy. On the other hand, people will say, but we're looking at $650 billion being spent by four big companies just this year alone. It's got to go somewhere. How can you pair these stories of a question of how much a U.S. market can broaden out in the face of relatively weak economic data, and then paired with these monster CapEx programs?
Yeah, so, I think a lot of the broadening out is going to happen outside of the U.S. We're seeing a lot of non-U.S. indexes go from strength to strength. We're seeing a lot of money that's interested in tech go right now into areas like South Korea that have, a lot of similar companies. And so we're seeing money go into the Samsungs of the world, into indexes like EWY. We're seeing that FTSE 100 has been having a great year. So I think people sort of remembered that America is not the entire global stock market. It just felt that way for a decade. And we're starting to see a lot of broadening out there. And then on the CapEx spend, at the end of the day, if these companies can't show how they're going to get paid for the data centers they're building and for the chips that they're buying, it's hard to see who really benefits besides NVIDIA.
So given what we've learned this week and given the sell-off in a number of these shares, what do you do with this? What would it take for you to come back into U.S. mega cap tech other than NVIDIA?
Yeah, it's really a case by case. There are names that I think are still screamingly overvalued, the Palantirs and Teslas of the world. The valuation, the stock price just does not reflect the revenue by orders of magnitude. Those aren't names that I would buy the dip on. And then there are other names that I think are getting beaten up a little bit. I love Alphabet. I've long thought that they will be kind of the ultimate AI winner. They are, certainly spending a lot on CapEx, but they also have loads of cash on the sidelines. They have a bunch of money coming in from their advertising. They can actually make money on Gemini, unlike a lot of the other platforms, because it's already baked into existing business models they have. And so I would look at that much differently than, an Oracle, where Oracle has a lot of different irons in the fire right now. And it's hard to say, hey, is there really the focus on any one thing that's going to drive, loads of revenue in the next couple of years?
Sarah, when you mention Gemini and you basically say, unlike others, are you talking about OpenAI? Because I remember in Christmas when you joined me, you were saying how they don't really have the runway potentially for the rest of the year, and they're going to go out and they're going to fundraise. But what does this moment actually mean for a company like OpenAI that plans to IPO?
I mean, if you take the tenor of Sam Altman's tweets, he seems like he is a very stressed out man right now. And for good reason. We all saw last weekend the sort of odd dance between him and Jensen around will they, won't they with this $100 billion investment round. There's not a ton of money that has come in. The competitors, the Anthropics of the world, Gemini, are doing a very good job. We see OpenAI shifting to business models that feel not a position of strength, right? Whether it's letting adults be adults or, bringing advertising into the model when that's not something that's really core to their strengths or historically to their business proposition. What we're not seeing is loads of enterprise revenue, despite being told for years that that's where they were going to make that money. And so, yeah, there's huge concerns about how OpenAI is going to be able to afford to pay Oracle in those round trip deals that we spent so much time talking about last year.
Sarah, you mentioned Anthropic. Let's finish on Anthropic. To what degree do you think that company right now is punching above its weight, making waves that maybe its market position doesn't actually justify?
I think that they are really focused on enterprise business. They're really focused on building, things like coding tools. Time will tell if that works or not. I sort of tune out that noise. They're not really a consumer company. And so, they love to kind of be a counterpoint to OpenAI, certainly to Elon Musk and Grok. And that works well for them in the press. It probably helps them fundraise from a different sort of customer. But at the end of the day, what I think they're going to be judged on in their current trajectory is, can they get enterprise? Can they get engineers to go into their work budgets and pay them for their coding tools? And if they can, that'll be a big win. We also don't know over time where Gemini is going to go in that space. If Gemini decides that they really want to take that business on head on, I think that could be really tough for Anthropic. But for now, they seem to be safe on that front.
Sarah, appreciate your thoughts. Have a good weekend. It's good to see you. Thank you. Sarah Kunz there of Clio Capital. On Amazon, check out the move in the pre-market. A big single name mover for us this morning, down by about 8%. Later on this morning, we'll catch up with Gil Luria of D.A. Davidson. He's got this to say this morning: losing the lead, downgrading the stock to neutral. AWS continues to compare unfavorably to Microsoft and especially Google Cloud. Falling behind also means Amazon has to accelerate investment beyond the $200 billion of capex. Amazon may not have a choice but to follow through with a $50 billion investment in OpenAI.
Which raises this question of where all this money is going to, and can OpenAI hold its weight? But they continue to say AWS accelerated by 24%. They posted a 24% gain in their cloud computing unit, whereas Google's Azure, the cloud unit, posted a 48% gain. So they're growing faster, albeit not nearly enough for the market, because the market wants much bigger gains than that.
We'll catch up with Gil at about 8:15 Eastern Time, a little bit later this morning, a few hours away, so look out for that. Coming up on the programme, we'll catch up with Bloomberg's Tyler Kendall as Treasury Secretary Scott Bessent spars with senators on Capitol Hill. Plus, Yahira has your morning movers. Stellantis plunging 24% as it reverses course on its EV strategy. Some big numbers, some bad numbers coming out of that company. That story up next.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Equities bouncing back. Here's equity futures for you, up 0.5% on the S&P 500 following a three-day slide, the biggest three-day drop going back to November. Compare the S&P 500 to the equal weight S&P. The S&P is down about 2% this week. The equal weight is actually higher. The pain concentrated in places like the Nasdaq 100. The Nasdaq heading for its worst week going back to Liberation Day last April. Switch out the board and get to the bond market. Bond yields at the front end of the curve, lower by 10 basis points in yesterday's session following some weaker than expected data. 347.69 this morning, still close to the lows of the year at the front end of the curve. But check out this in the FX market. This is the story for me not talked about enough. The dollar is on course for its best week of the year, which speaks to just how inversely correlated it was with risk appetite. Best week of the year for the US dollar as the markets begin to sink. This wasn't about debasement. It wasn't about sell America. It was about risk appetite.
Well, it seemed like people, when they did become risk averse, then went back into the dollar. I will note, all the trades that are doing the best are some of the ones that were beaten up, particularly at the end of last year. So it also feels like all of the consensus trades at the beginning of this year got violently reversed, and that's what we're seeing. And the dollar is part of that. And so the Sell America trade coming under question.
We've seen it cascade through financial markets over the past few weeks. Lots of single names out there, including a big move for Amazon and Stellantis. Let's get you more. 3 hours away from the cash open with your morning movers. Here's Yahara. Hey, Yahara.
Exactly, John. Amazon is the latest company getting punished for spending big. Shares are falling 8% in the pre-market as it pours $200 billion into AI infrastructure. It's a move that CEO Andy Jassy insists is necessary, saying that at AWS they are monetizing capacity as fast as they can build it. Still, investors are concerned since the spending is already projected to hit the bottom line. Amazon's forecast for operating income in the current quarter did come in below estimates. Meanwhile, that is creating some winners, and it is in the chip space. We are seeing NVIDIA, AMD, and Broadcom all higher this morning, just as we saw when we got Alphabet's massive CapEx number just this week. But we'll see if they're able to sustain this momentum, because yesterday only Broadcom ended in the green, and only by slightly. I will say NVIDIA is outperforming the Mag 7 this morning, up 3% in the pre-market. And we end on Stellantis. Shares are plunging here, down nearly 25%, as the automaker said it will take a $26 billion hit as it scales back its EV ambitions. Stellantis admitting that it bet too aggressively on EV demand that just didn't show up. It joins the likes of Ford and General Motors, which also took multi-billion-dollar write-downs for the same reason. John.
Yahara, thank you. Painful. And it's been a long time coming. The kitchen sink finally coming from that company, and maybe there's more work to do. As for Broadcom, I'm pleased that Yahara brought that stock up. It's amazing they're in this situation this week where a handful of tech companies have come out and said they're going to spend $650 billion this year. And on the week, Broadcom is lower. by 6%.
I saw a number of analyst notes over the overnight actually pointing to Avco in particular and saying, look, they should be doing a lot better because ultimately they will be a beneficiary. People don't have a sense of where this money is going to go. Otherwise, you would imagine all the semiconductor stocks would absolutely be ripping because $650 billion is a lot of money. I spent way too much time last night trying to calculate what you could buy for $650 billion. I came up with some really creative things.
What did you come up with?
Well, I'm just thinking to power New York City costs about $15 billion a year. So how many cities would you have to finance? How many nuclear power plants? Maybe $15 billion. What about a spaceship that goes up to space and tries to create some of the potential
data centers
in space? I mean, it just starts getting comical when you start looking at how do you spend this money this quickly in this kind of scale.
I was listening to Guy Johnson earlier on this morning. The German federal budget for the year ahead. How about that? I mean, that's insane. That's the German federal budget.
So this is, you start to wrap your head around this and you think, okay, well, this should be a broadening out. But are they just competing with each other to sort of solidify market share, reserve things that aren't going to really come yet? Is this fictitious or is this actually real? I mean, it's hard to get your head really to wrap around it.
Those numbers are big. On our radar this morning, Amazon adding to big tech spending spree, the retail and cloud giant joining Alphabet, Meta, Microsoft, and exceeding capex estimates. The four companies forecasting about $650 billion in AI spending this year. Elsewhere, Anthropic releasing a new version of its AI model specifically designed for financial research and office workflows. This coming just days after the company's expansion into legal services sent shockwaves through the software industry. And finally, Bitcoin finding a floor following its steepest single-day drop since the FTX collapse back in 2022. The world's largest cryptocurrency nearly falling below 60,000 for the first time in 16 months.
This is, to me, a really interesting story under the hood. How much is this part of the violent rotation that we're seeing right now? Bitcoin has lost more than $1 trillion since its peak in October 2025, about half of its value. A question here about how levered this fund, this money was, how much this comes with outflows that aren't coming back, and how much institutional investors are willing to go back into this market. That ultimately is the reason why people find it interesting that there is a floor here. Nonetheless, an existential question of what exactly the role is for Bitcoin at a time where it's not providing an offset to risk appetite.
No, it's trading like a risky asset. And you actually saw this come up this week with the Treasury Secretary. He was asked about this. Could Treasury have the authority to buy Bitcoin or other cryptocurrencies? He says, I don't as the Treasury Secretary, and I also don't as the chairman of FSOC. So basically, that whole idea that there were some Republicans actually pushing for that was dead.
Taking stock of things, it's kind of impressive that we've had these crash-level moves in places like crypto, in places like precious metals and software stocks, and yet the index is still within 3% of all-time highs on the S&P 500. That's quite something.
What struck me is the lack of fear this week. We saw these really violent moves. We've seen semiconductors, we've seen software stocks down 30% from some of the highs over in October, and yet not a lot of fear. Some people come in, they say, this is way oversold, we're just waiting to find a place to go in, and it's because of that stability in the overall index. If the economy cracks, that changes. And that's the reason why yesterday was a different story.
Excited about the rotation until a couple of data points. We'll see if that's backed up over the next week. Let's turn to Washington. The Treasury Secretary, Scott Bessent, and the Democratic Senator, Elizabeth Warren, fighting it out on Capitol Hill.
Can you commit right here and now that Trump's Fed nominee, Kevin Warsh, will not be sued, will not be investigated by the Department of Justice if he doesn't cut interest rates exactly the way that Donald Trump wants?
That is up to the president. Can you commit that you will?
I'm sorry.
Can you commit that you will not hold up?
He won't be sued if he doesn't drop interest rates. If this was a joke, why not just say so?
It was a joke, and he made a joke about you too, Senator Warren.
Yes,
got a lot of laughs.
Bessent's comments coming after President Trump's joke about suing Fed Chair nominee Kevin Warsh over interest rates. Bloomberg's Tyler Kendall joins us now for more. Tyler, it looked like they were getting along just yesterday.
I mean, John, this was a rather contentious 2 days of hearings for Treasury Secretary Scott Bessent on Capitol Hill. This was perhaps the most heated exchange before the Senate Banking Committee between two people that often spar with each other. But the Treasury Secretary there saying that it would be up to President Trump about whether or not to sue or order the Department of Justice to investigate a potential Fed chair, Kevin Warsh, if he does not drop rates, appearing not to rule out the potential. Now, as you mentioned, Warren's comments were referencing these reports from over the weekend that President Trump had joked about the possibility, though we should say he was asked directly about those comments afterwards by reporters on Air Force One. And the president said it was, quote, all comedy. But still, the Treasury Secretary's remarks came after an equally contentious hearing the day before in front of the House Financial Services Committee, where he declined to express a view about whether or not the president has the legal authority to remove a member of the Federal Reserve Board over policy disagreements, saying that ultimately he's not a lawyer and that's going to be a matter that has to be decided by the courts, though he did go on to say that he does believe that the Federal Reserve is an independent agency. But yesterday, the Fed pick was definitely front and center because this is the Senate Banking Committee. This is that gatekeeping committee that has the ability to block Kevin Warsh's nomination from proceeding to the full Senate floor. And as Senator Tom Tillis has said on this program numerous times, he's not going to let up on his threats to follow through in blocking that nominee until the legal matter against Fed Chair Jerome Powell is ultimately resolved. And John, I actually had the chance to catch up with Senator Tillis yesterday. He told me he's still not backing down on the threats. He told me that he's not in touch with the White House on them either at this point in time, that he has no idea when a potential confirmation hearing date is ultimately going to be set.
Tyler, great reporting yesterday. I also saw you spoke to Senator Kramer, who basically told you this is a waste of time. Do you think more pressure is building from Republicans in Congress on the White House and the DOJ to just drop this investigation altogether?
Right, Anne-Marie, we're starting to see almost a theme emerge, a common thread here, because Republicans are trying to thread the needle with going with President Trump's criticism against Jerome Powell, but they're against how it's ultimately manifested in this investigation against him. And I spoke to a lot of Republicans on the Senate Banking Committee, this key committee yesterday, that are saying while they disagree with Powell's stewardship of the Fed, they don't think that his testimony amounted to anything criminal, because we have to keep in mind the DOJ investigation, it isn't necessarily about those cost overruns. It is about whether or not Jerome Powell misled Congress about those cost overruns. I spoke to Kevin Kramer. I spoke to Cynthia Lummis. I spoke to Senator Mike Rounds, numerous who have told me that they don't think that what Jerome Powell said ultimately had criminal intent, and that they want to see this investigation wrapped up as quickly as possible. In fact, Anne-Marie, they say that that actually shows why they are in favor of the president's policies, that they want to make sure that this investigation can go away so that they can get Kevin Warsh confirmed as quickly as possible.
That might take some time. Tyler, thank you. Tyler Kendall down in Washington, D.C. Let's park the legal issues and just focus on the data. Who do you think sounds better right now? Chairman Powell last week. Indicators suggest the conditions may be stabilising in the labour market. Governor Chris Waller. There is considerable doubt about future employment growth and suggests that a substantial deterioration in the labour market is a significant risk. Based on the data in the last 24 hours, Governor Waller is sounding a lot better than Chairman Powell.
It feels like the market is one big applause audience, and it seemed like everyone with Jay Powell until yesterday, and then all of a sudden it was like, ooh, all right, we're going to head over here to what we hear from Chris Waller. Look, we don't know, and I think that ultimately is the real question, and there's a lot of disagreement on the Fed committee, which is the reason why it is so important to understand which Kevin Warsh we're getting, to understand what the leadership will be to guide what is otherwise an incredibly bifurcated committee.
More data next week. Payroll's Wednesday, I believe. February 11th will be playing that game, so looking forward to it. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Iran and the United States are negotiating to de-escalate tensions. Tehran saying the talks are the first stage of a longer diplomatic process. The U.S. delegation, led by Steve Witkoff, Iran's by its foreign minister. Toyota shares rising in Japanese trading. The company naming a new CEO, Kenta Kon, who will replace Koji Sato, who will become vice chairman in April. Kon served as Toyota's CFO as well as Akio Toyota's personal secretary for almost a decade. As CFO, he oversaw a period of record annual earnings and worked on next-gen cars and mobility technologies. Brevon Howard Asset Management's Minal Biswal is one of the world's most successful macro hedge fund managers, making billions of dollars. He hasn't had a single down year since he started managing money during the 2008 financial crisis. His fund has scored wins on everything from Korean interest rates to Asian currencies. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next, a memory crunch.
The industry is now defined by the availability of the memory that is going to be available for consumer electronics. And it creates, a sudden change in how OEMs look at their build plan.
Up next, we'll catch up with Bloomberg's Mandeep Singh, live from New York City. You're watching Bloomberg TV.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
So here's the bounce. We're up by 0.6% on the S&P 500. Announced bounce on the Nasdaq as well. Likewise on the Russell. We'll see if it holds following the rout over the past 3 days. On the Russell 2000, higher by 1.26%. On the Nasdaq, up by 0.75%. The numbers this week, absolutely humongous. Let's go through them, company by company. Amazon, $200 billion. CapEx intentions over at Alphabet, $185. Microsoft, around $100. Meta, $135. $650 in total. Absolutely ridiculous, Bramo, to try and get your head around.
And when you try to get your head around, the numbers seem even more ridiculous. But what really is getting people off guard is A, these numbers are growing much more quickly than the underlying revenues or profitability. And B, the fact that the numbers keep climbing so much far beyond analysts' expectations.
ये नेचुरल गैस का ध्यान रखना, नेचुरल गैस में एक्सपेक्टेड है यहाँ पर एक रेजिस्टेंस मिल सकता है मार्केट को. आई एम लुकिंग फॉर सेल ऑफ. थोड़ा सा मुझे लग रहा है यहाँ से एक सेलिंग वापस दे सकता है, इवन तो मेजर रेजिस्टेंस दूर है, बट एक पॉइंट ऑफ इंटरेस्ट यहाँ पर अभी भी है. एंड जब तक इसके ऊपर सक्सेसफुली ब्रेकआउट नहीं होता 326.5 के ऊपर, तब तक ये रेजिस्टेंस की तरह ही काम करेगा अभी भी. तो बाइंग में जो लोग हैं मेरे अकॉर्डिंग तो इस लेवल के आसपास निकल जाना. छोटा सा ही ट्रेड था ये. यहाँ पर मैं एक सेलिंग का प्लान देखते हैं होता है तो ठीक है. रहेगा प्राइस के लिए ऊपर जाना. क्योंकि यहाँ का ब्रेकआउट मुझे लगता है ट्रिगर कर सकता है प्राइस को वापस 380 की तरफ जाने का. वैसे देखोगे कंसोलिडेशन काफ़ी हो रखा है कल से. कल पूरा दिन एक रेंज के अंदर ही था. कल रेजिस्टेंस एरिया पे, वैसे परसों भी आ गया था रेजिस्टेंस एरिया पे 4 फरवरी को. एक सेलिंग आई थी कल, एक सेलिंग मॉर्निंग पे आ गई थी, फिर एक डे आफ्टरनून पे आई थी, और एक शाम को इवनिंग पे 6:30 के अराउंड आई थी. तो 3-4 बार यहाँ से सेलिंग दिखा चुका है प्राइस, बट मुझे लग रहा है नीचे लिक्विडिटी है अभी भी 304.6 के आसपास. तो एक कुछ इस तरह से प्राइस जाके यहाँ गिरे और फिर अगर ऊपर जाता है तो बेटर है. अब एक लास्ट टाइम सेलिंग, बट या कंसोलिडेशन बहुत है यहाँ पर, ज़्यादा ही कंसोलिडेशन हो गया प्राइस में. कैंडल भी देखो ओपन इक्वल टू लो है, या तो ब्रेकआउट के लिए है या ट्रैपिंग के लिए है नेचुरल गैस में इस पर्टिकुलर जोन पे. ज़्यादा रिस्क नहीं, एसएल जाएगा, थोड़ी कम क्वांटिटी से प्लान करते हैं, थोड़ा एसएल तो बड़ा रखना पड़ेगा एटलीस्ट। ठीक है, एक छोटा सा सेलिंग का ट्रेड फ्रॉम दिस लेवल। वैसे टेस्ट हो चुका है मल्टीपल टाइम, बट मैं एक्सपेक्ट कर रहा हूँ एक लास्ट सेलिंग यहाँ से हो, नीचे जाके फिर वापस बाइंग करें फिर से, क्योंकि यहाँ पर ब्रेकआउट हुआ तो फिर मुझे लग रहा है शायद ये 335 पे भी नहीं रुकेगा, ये लेवल होल्ड नहीं होने वाला, बिकॉज जिस तरह से कंसोलिडेशन हुआ है ना यहाँ पे प्रीवियसली चार्ट में देखना, तो अगर ये फटता है तो फिर ऊपर की ओर इतना बड़ा मूव कर सकता है कि सीधा 380 की तरफ जा सकता है। So if seller wants to defend this level, एक फेक ब्रेकआउट 326 तक हो सकता है, मुझे लग रहा है फिर प्राइस को रिट्रेस देना चाहिए। लेट्स सी, एसएल रख के चलना, एसएल के साथ कॉम्प्रोमाइज नहीं। बाहर की निकलना चाहो तो निकल जाओ यहाँ से, बाहर का तो हो गया, छोटा सा ही ट्रेड था वो। थोड़ा एसएल स्ट्राइक रखना, ठीक है, एसएल जाएगा तो निकल नहीं सकते, अब निकलना ही पड़ेगा। बाकी एसएल यहाँ पर एग्जैक्ट नहीं है, एसएल कैंडल बेसिस पे होगा, एक के ऊपर एक दो कैंडल अगर क्लोज करती हैं 15 मिनट की तो ब्रेकआउट माना जाएगा। 326.5 के ऊपर अगर 15 मिनट की दो कैंडल एक के ऊपर एक क्लोज कर दें तो ये ब्रेकआउट है। एलिवेशन अराउंड 3 पॉइंट का रहता है, 3 to 3 4 पॉइंट फ्यूचर चार्ट में एक्सटेंडेड एसएल के लिए, उससे ज़्यादा बड़ा एसएल तो रखना बेवकूफ़ी हो जाएगी वैसे, बट कैंडल बेसिस पे ही ज़्यादा सेफ रहता है। लास्ट टाइम यहाँ पर हुआ है आपका 276 के अप्रॉक्सीमेटली आई थिंक। यहाँ पर भी लगभग 2.3 पॉइंट का एलिवेशन है, तो मैक्सिमम 3 पॉइंट इनफ है। इन्वेंट्री बेरी जरूर आई थी, मार्केट ने सेल ऑफ भी दिया, रिकवर कर लिया था वापस। इसके ऊपर अगर ये ब्रेकआउट करता है तो फिर भी अच्छा है बाइंग का, नीचे 306-7 के आसपास, दैट इज आल्सो गुड सपोर्ट स्टिल। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम, जिन लोगों ने लाइक नहीं किया स्ट्रीम को अभी तक। कैंडल तो ओपन इक्वल टू लो ही है ये, ओपन इसका 322.2 है, लो भी 322.2 है, नेचुरल गैस, दिस इज द ओपन इक्वल टू लो कैंडल। इसलिए थोड़ा सा उस वजह से रिस्की भी बन रहा है, बट है रेजिस्टेंस तो देखते हैं, इतना रिस्क ले सकते हैं अब। लास्ट मोमेंटम में इतना प्रॉफिट मोमेंटम निकल गया है कि इसमें रिस्क लिया जा सकता है। टारगेट बड़ा रखना, रिस्क एसएल जितना है कैंडल बेसिस पे, एक के ऊपर एक कैंडल क्लोज होती है तो निकलना पड़ेगा। ऊपर निकलता है तो फिर सीधा 350 तक ही मिलेगा, 350 आ जाना चाहिए। फिर भी स्ट्रांग है ऊपर 350 वाला जोन। पर ध्यान रखना इस पर्टिकुलर जोन पे कंसोलिडेशन बहुत हुआ है, कहीं मोमेंटम में ना चला जाए। थोड़ा सा रिस्की है इसलिए टारगेट बड़ा है, एसएल छोटा ही है, उतना बड़ा भी नहीं है। कोई क्वांटिटी उसी हिसाब से रखना जितना रिस्क ले सकते हो। ब्रेकआउट होगा तो निकल भी जाना है। एक के ऊपर एक दो कैंडल क्लोज होती है 15 मिनट की। लेवल वाइज रखोगे तो हो सकता है कहीं अननेसेसरी ऐसा हिट करे फिर नीचे आ जाए, इसलिए क्वांटिटी का ध्यान रखना। टारगेट बढ़ाई रखना इसमें, और नीचे और कोई टारगेट नहीं है। ये भी ओपन इक्वल टू लो है क्या? दिस कैंडल आल्सो ओपन इक्वल टू लो। देखिए टारगेट बड़ा ही रहेगा इस ट्रेड में। एसएल जाए तो छोटा जाए, टारगेट मिले तो बड़ा मिले। बाकी अगर ये ब्रेकआउट करके यहाँ से निकल जाता है तो फिर अगेन नेक्स्ट टारगेट सीधा 350 का है। बाकी कैंडल का ध्यान रखना, ओपन इक्वल टू लो पे डायरेक्टली एंट्री मत लेना, ठीक है। लास्ट कैंडल भी ओपन इक्वल टू लो थी, ये भी ओपन इक्वल टू लो बनी है। ओपन इसका 324.8, लो 324.8। सो ओपन इक्वल टू लो पे डायरेक्टली सेल नहीं कर सकते, अपना लो ब्रेक कर दे नीचे आ जाए बेस्ट है। आ चुकी है रेजिस्टेंस पे कैंडल, ध्यान रखना। बट बिकॉज ओपन इक्वल टू लो है तो थोड़ा सा वेट करना। हाँ, अगर ये ओपन इक्वल टू लो बनते हुए निकल जाती है, मान लो नेक्स्ट कैंडल भी ओपन इक्वल टू लो बनती है और ऊपर ही जाता रहता है, तो फिर तो एंट्री नहीं बनेगी। बट एक भी कैंडल अपना ओपन इक्वल टू लो ब्रेक कर दे या नॉर्मल कैंडल में कन्वर्ट हो जाए, दैट इज आवर एंट्री पॉइंट। कल से देखोगे वैसे है मार्केट रेंज पे। मॉर्निंग पे जब ओपन हुआ था नेचुरल गैस आज अर्ली मॉर्निंग, तो एक पुल बैक जो आया था मॉर्निंग पे 12 पीएम के अराउंड, मुझे लग रहा था थोड़ा सा नीचे पहले आएगा 307 या 8 के आसपास। वो 312 के नीचे आया ही नहीं, वहीं से कंसोलिडेशन करते करते अभी इसी लेवल पे आ गया सीधा। पहले नीचे आता तो बढ़िया था, फिर हम यहाँ पर सेलिंग का प्लान ही नहीं करते, बिकॉज उस केस में नीचे से लिक्विडिटी निकल जाती 307 5 के अराउंड, एंड देन मार्केट फिर इस रेजिस्टेंस को इतना वैसे भी होल्ड नहीं करता। अगर प्राइस यहाँ से पहले ब्रेकआउट करके ऊपर निकल जाता है इन केस, तो फिर ये सेम लेवल सपोर्ट की तरह बन जाएगा। ये ब्रेकआउट हो जाता है तो ये सपोर्ट ही बन जाएगा। फिर उस केस में ये लिक्विडिटी मार्केट लेने कैसे आएगा, बड़ा डिफिकल्ट हो जाएगा बायर्स के लिए। पॉसिबल बट काइंड ऑफ अ डिफिकल्ट थिंग। बड़ी शार्प स्विंग की तरह मार्केट मूव करता है। बिटकॉइन काफ़ी रिबाउंड कर गया, ऑलमोस्ट 60,000 को कल हिट किया था, ऑलमोस्ट 66,000 पे पहुंच गया। 10% मोमेंटम में है पॉजिटिव कल से। मेटल्स भी ठीक ठाक ही चल रहे हैं, गोल्ड सिल्वर। सिल्वर भी वही कल 70। ठीक है, श्योर। ठीक है, कल 4 आवर टाइम फ्रेम पे $70 को हिट किया था, नीचे गया, काफ़ी नीचे गया। 4 आवर टाइम फ्रेम पे ऑलमोस्ट आप कह सकते हो $63-64 तक चला गया था। क्लोजिंग बेसिस पे $70 के नीचे क्लोज नहीं हुई, क्लोजिंग 72-71 के आसपास क्लोज हुआ था। 4 आवर की कैंडल वापस $70 के ऊपर ही ट्रेड कर रहा है, तो स्टिल होल्डिंग $70 लेवल। कल हम बात कर रहे थे कि हेड एंड शोल्डर पैटर्न की, उसका ब्रेकडाउन ही नहीं हुआ। देखते हैं क्या ये डबल बॉटम बनाने की कोशिश करता है या फिर नहीं। देखो जिस तरह से सिल्वर सपोर्ट लेके गया है ना नीचे $60 से, थोड़ा सा जिस तरह का मोमेंटम उससे स्मॉलर टाइम फ्रेम पे, 4 आवर टाइम फ्रेम पे तो खैर कैंडल ही क्लोज नहीं हुई, बट जिस तरह से $64 गया है, थोड़ा सा हो सकता है आने वाले टाइम में 61 तक भी आ जाए, 60 तक को भी एक बार हिट कर ले। वही ना, $60 के आसपास। $15 पे तो ऐसा लग रहा था कल $60 को हिट करेगा। ओनिडा के चार्ट में तो नहीं किया है। ओनिडा के चार्ट का लो देखोगे 64.04 है कल मार्केट ने जो हिट किया है। तो एक पॉसिबिलिटी बनती है अभी भी $60 को टच करने की इन सिल्वर। $47.50 ठीक है, अगर ऐसा होता है तो ऑलमोस्ट अपने ऑल टाइम हाई से 50% फॉल कर जाएगा ये। कल जितना गिरा है उसको लगाओगे तो अराउंड 47% बनता है। 3% और गिर जाता। सिल्वर के MCX के चार्ट को अलग देखना, उसमें थोड़ा सा प्राइस एक्शन अलग है। बट फॉरेक्स का चार्ट देखोगे ओनिडा में तो $60 लग रहा है वहाँ पर। प्राइस हो सकता है आए वापस एक बार। ऑल टाइम हाई से ऑलमोस्ट 47% फॉल है अभी तक। थोड़ा रिकवर कर गया वैसे तो। 50% एग्जैक्टली आ जाएगा अगर $60 पे आता है तो। 17% रिकवर कर चुका है कल से। फॉरेक्स चार्ट लो से देखोगे इंट्राडे में ऑलरेडी 5% अप है। क्रूड में अभी कुछ नहीं चल रहा है। क्रूड में सेम सिचुएशन ही है नेचुरल गैस की तरह। ये भी कल से देखोगे रेंज के अंदर ही चल रहा है एक। 6:30 पे न्यूयॉर्क सेशन भी ओपन होगा, ध्यान रखना। बाकी ईरान और यूएस के बीच में जो टॉक चल रही है ओमान में, उसका अभी तक कुछ खास अपडेट आया नहीं है। वहाँ से कुछ अगर अपडेट आती है तो क्रूड पे उसका हमें इम्पैक्ट देखने के लिए मिल सकता है। Satellite imagery dated February 5th from Diego Garcia shows that the following United States Air Force assets: two P-8 Poseidon aircraft on the apron, three KC-135 stored tankers positions nearby, two C-130 aircraft identified as MC-130 variant. Oman US Iran talks. Iranian demands, according to Iranian state media, comprehensive sanction relief. Uranium enrichment conducted on Iranian territory is non-negotiable. David Albright, who leads the Institute for Science and International Security, said the Earth works likely reflect preparation for potential strike, suggesting the site may contain assets of high importance, possibly enriched uranium. यहाँ तो फॉल करता है तो लगभग 60% हो जाएगा इसका। पर में ना 55 से $60 अच्छा सपोर्ट है अब नीचे, अगर प्राइस $70 के नीचे ब्रेकडाउन सक्सेसफुली कर देता है। यहाँ पर आई थिंक 1 मंथ का भी ब्रेकआउट लेवल है। वो सिल्वर का फ्यूचर ही है वहाँ पे। क्रूड ऑयल कल के एक पॉइंट ऑफ इंटरेस्ट पे वापस पहुंच गया है। नेचुरल गैस कहाँ तक होल्ड करें? नेचुरल गैस मैंने बताया एक के ऊपर अगर एक कैंडल क्लोज होती है तो इसमें एसएल मान लेना। इसमें एग्जैक्ट लेवल पे एसएल नहीं रख सकते कि जितना रखा हुआ है, क्योंकि कैंडल बेसिस पर ही ब्रेकआउट समझा जाएगा। फेक ब्रेकआउट होने के बहुत चांसेस हैं बिकॉज रिस्की है थोड़ा सा ट्रेड। क्योंकि यहाँ पर ब्रेकआउट हुआ तो फिर प्राइस ऊपर जा सकता है 350 तक, नेक्स्ट लेवल वही है। फोर आवर टाइम फ्रेम पे भी ये कंसोलिडेशन में ही है क्रूड, सुपर कंसोलिडेशन। ठीक है, कल के पॉइंट ऑफ इंटरेस्ट पर है एक वापस से। वहाँ से एक क्रूड ऑयल में भी बाइंग एक्सपेक्टेड है। रिफ्रेश कर दो। पर क्रूड ऑयल में भी सेम ही सिनेरियो रहेगा, एक के नीचे एक दो कैंडल क्लोजिंग होगी तो वहां पर भी एसएल उसी बेसिस पर लेना। क्या हुआ? स्क्रीन स्टक तो नहीं हो गई? स्क्रीन तो चल ही रही है ना? स्क्रीन इज रनिंग.
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Karen Moscow. $650 billion. That is how much 4 of the biggest U.S. technology companies are planning in capital expenditure this year. Bloomberg has calculated that the outlays planned by Alphabet, Meta, Microsoft, and Amazon would set a high watermark for capital spending by any single corporation in any one of the past 10 years. Meanwhile, shares of Amazon are lower, down about 7.5%. This after the company announced plans to spend $200 billion this year on data centers, chips, and other equipment. CEO Andy Jassy said the money will predominantly go to the company's cloud unit, and most of that spending would be for AI workloads.
I think this is an extraordinarily unusual opportunity to forever change the size of AWS and Amazon as a whole. We see this as an unusual opportunity, and we are going to invest aggressively here to be the leaders, because like we've been the last number of years, and like I think we will be moving forward.
And that's Amazon CEO Andy Jassy. The AI disruption trade has the S&P 500 on track for its worst week since April. The risk-off mood has also extended to crypto, and we get a market roundup with Bloomberg's John Tucker. John.
Let's start with the tech-heavy NASDAQ, now down 3% since the start of the year. Investors have been spooked by the rollout of these models from the AI startup Anthropic, and also the eye-watering spending plans of the tech companies like Amazon that you mentioned. And then there's crypto, Bitcoin, suffering a sell-off that briefly dragged the token to a more than 50% retreat from its October peak. A Nobel laureate, Paul Krugman, says crypto investors are experiencing a possible crisis of faith.
A lot of people sold Bitcoin as being the next gold, and it turns out that in the face of doubts about stability, doubts about politics, the next gold turns out to be gold, not Bitcoin. I think it's a big wake-up for people.
Well, Krugman was on Bloomberg Business Week Daily. Bitcoin fell over 13% yesterday. That's its largest single-day drop since November of 2022. That's when Sam Bankman-Fried's FTX collapsed. Now, have we hit bottom? Bitcoin whipsawing in a volatile trading session this morning, Karen, and also the stock futures. They are modestly higher. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Well, geopolitics in focus. Iran and the U.S. held indirect talks today to reduce tensions that have threatened to spiral into war, with Tehran saying the meetings will be the first stage of a longer diplomatic process. Oman's foreign ministry, which is mediating the talks, said in a statement that Oman's foreign minister met separately with the Iranian delegation led by Abbas Araghchi and with the U.S. team, including Special Envoy Steve Witkoff and President Donald Trump's son-in-law Jared Kushner. The U.S. and Russia have agreed to reestablish high-level military-to-military dialogue for the first time in more than 4 years. The step is another sign of warming relations between the two countries since President Trump took office and sought to end the war in Ukraine. The agreement emerged from a meeting between senior Russian and American military officials in the capital of the United Arab Emirates. Meanwhile, talks in Abu Dhabi between American, Russian, and Ukrainian officials on ending the war entered a second day. A deputy chief of Russian military intelligence has been shot. Officials say Lieutenant General Vladimir Alexeyev was attacked today by an unidentified assailant in Moscow. Back here in the U.S., President Trump is looking to address Americans' cost of living concerns with the launch of a new prescription drug discount website. The president says more than 40 medications will be available at reduced prices through TrumpRx.gov.
We're taking the lowest price paid for drugs we will pay equal to whatever the lowest price anywhere in the world. That's the price that you're going to be paying. It's a tremendous reduction.
Speaking at a White House launch event, President Trump said his administration negotiated with more than a dozen drug makers, including Eli Lilly, Novo Nordisk, and Pfizer, often in exchange for lower threatened tariffs. The site lets patients search for a specific medication, then sends them to drug companies' platforms to buy them directly at a reduced rate. Looking at some election news, the race in New Jersey between a one-time political director for Senator Bernie Sanders and a former congressman is too early to call in a special House Democratic primary for a seat that was vacated after Mikey Shkreli was elected governor. Former Representative Tom Malinowski started election night with a significant lead over Ana Lilia Mejia, based largely on early results from mail-in ballots. The margin narrowed as results from votes cast that day were tallied. With more than 61,000 votes counted, Mejia leads Malinowski by 486, or less than 1 percentage point. Turning to Tucson now, there are new appeals for the life of Nancy Guthrie, the missing mother of Today Show host Savannah Guthrie. Cameron Guthrie, Nancy's son, has put out a new video addressing his mother's potential kidnappers.
Whoever is out there holding our mother, we want to hear from you. We haven't heard anything directly. We need you to reach out, and we need a way to communicate with you so we can move forward. But first, we have to know that you have our mom. We want to talk to you, and we are waiting for contact.
The FBI announced a $50,000 reward for information leading to Nancy Guthrie's recovery or the arrest and conviction of people involved in her disappearance. Sources tell Bloomberg Tesla is evaluating multiple sites across the U.S. to begin manufacturing solar cells. It's turning what sounded like a moonshot just weeks ago into an active industrial push. One component of the plan is said to be expanding production at its Buffalo, New York factory. Capacity there could reach 10 gigawatts, which would be equivalent to 10 nuclear plants. Stellantis is taking more than $26 billion in charges, mainly linked to reversing course on its electric vehicle strategy. That's prompting a record plunge in the Jeep and Fiat owners' shares. And dip buyers are driving a rebound in U.S. stocks, betting that fears over artificial intelligence's disruptive impact and the spending plans of its frontrunners were overdone. Bitcoin rising as the risk-off tone subsides. And we check the markets here with S&P futures up 0.5%. So are Dow futures, NASDAQ futures up 0.6%. 10-year Treasury yield at 4.2%. And Bitcoin, it's at $66,300. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
As a place to do business, the UK stands apart. Not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day, fueling innovation across every sector. Home to 4 of the world's top universities, it provides exceptional talent and breakthrough research. This sits alongside a clear 10-year industrial strategy, unlocking smarter regulation and making it faster and easier to operate. Stability with dynamism. Global connectivity with local depth. It all adds up to greater growth. Visit business.gov.uk/growth. The UK.
Hi, I'm Kim Vanell in Wanganui, New Zealand. Today, the US and Iran hold nuclear talks in Oman. A $50 weight loss pill sends Novo's shares plummeting. And why penis injections, and yes, you heard that right, are the big topic at this year's Winter Olympics. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. To Oman first, where the US and Iran are set to hold high-stakes negotiations today. But disagreement over the agenda for the Oman talks suggest any progress will be hard to come by. Washington wants the talks to tackle the nuclear program, as well as its ballistic missile support for regional armed groups and its treatment of Iranians. Tehran only wants nuclear issues on the table. Telehealth company Hims announced this week that it would start selling a weight loss pill with the same active ingredients as Wegovy for as low as $49. The move could expand sales to many Americans, but as always, there's some fine print. Health insurance reporter Amina Nies explains how this cheaper drug came about and how the big weight loss players are responding.
During 2023, there was the shortage of Wegovy or the branded drugs, and the FDA which is the regulator in this space, allowed Hims and some other players to produce the drugs as compounded versions. Compounding under this specific framework is done to meet patient need. You basically mix ingredients to get the active ingredient, which is semaglutide. So that means if someone experiences gastrointestinal side effects and you need a lower dosage of Wegovy, the company would personalize it to you because there are just some dosages that you can't get from Novo. The branded manufacturers are saying there's a risk to patient safety and they're not FDA approved. So as a clinician, you're weighing whether the lack of the FDA approval is more or less important than that patient need.
Even so, shares in Novo Nordisk fell sharply after the announcement from Hims, all the way down to their 2021 levels.
The biggest risk for Novo is this pricing pressure element. Novo's executive recently said that it expected a lot of payers, thinking of insurers and pharmacy benefit managers that offer the drug, to pressure the company to sell the drugs to them at a lower price.
Amazon has projected a 50+% surge in capital spending this year as it joins its peers in a spending spree to build out its AI infrastructure. And its shares sputtered on news of the $200 billion spend. For more business and finance news, you can listen to our sister Markets podcast, Morning Bid, wherever you get your podcasts. President Trump has rejected an offer from Russia's Vladimir Putin to voluntarily extend a nuclear arms treaty, writing on Truth Social that they should instead have our nuclear experts work on a new, improved and modernized treaty. Washington and Moscow have agreed to re-establish high-level military-to-military dialogue, possibly signaling a move toward normalizing some ties between the two. In the US, Democrats are pushing for new limits on President Trump's immigration crackdown ahead of a deadline, now a week away, to keep funding the Department of Homeland Security. But Republicans who control Congress so far aren't budging. At issue is whether immigration agents can wear masks, enter homes without judicial warrants, and conduct sweeps instead of targeted raids. Democrats hope they'll have better luck with Trump. White House spokesperson Caroline Leavitt says Trump will consider the demands to a point.
I know Senator Schumer and Leader Jeffries sent over a very long list of demands, some of which the administration is willing to discuss. Others don't seem like they are grounded in any common sense, and they are non-starters for this administration.
Immigration courts, meanwhile, are facing a record backlog of more than 3 million cases, and the Trump administration is trying to address that. More than 30 new immigration judges were sworn in on Thursday, many with military backgrounds. More than 100 judges have been fired or pushed out since Trump's return to office. The White House says President Trump has not discussed formal plans to deploy ICE near polling sites in November, but it wouldn't rule it out. The statement follows comments from former advisor Steve Bannon saying ICE should surround the polls, and Trump's call this week to nationalize elections, both of which are raising concerns about voter intimidation ahead of the midterms. Investigators in Arizona say they still believe Nancy Guthrie, the 84-year-old mother of NBC Today Show host Savannah Guthrie, is alive. Authorities have discovered her doorbell camera and pacemaker app were both disabled early Sunday morning when she was taken. And Pima County Sheriff Chris Nanos says they've found DNA evidence too.
The blood on the porch, that was one we did. It came back to Nancy.
With no suspects identified and no proof of life, the FBI has offered a $50,000 reward for information. Japan heads to the polls on Sunday, and the country's 64-year-old Prime Minister, Sanai Takaichi, is finding followers in unexpected ways. Younger voters are driving a full-blown craze, creating a youth-led fandom being dubbed Sanakatsu, or in English, Sana Mania. Reporter Tim Kelly has more from Tokyo.
So if you look at how many followers Prime Minister Takaichi has on the X platform, 2.6 million. By a US or European standard, that might not seem too many. But if you compare that to the leader of the main opposition party, he has 60,000 followers. So there's a huge gap. She's appearing on viral videos of her drumming with the South Korean president or singing happy birthday to Italian Prime Minister Meloni. So they're very much doing a lot of online TikTok, Instagram, YouTube, X. You see a lot more posting.
But Tim says there's also a physical element to it.
So she carries a bag that's made by a bag maker in Japan called Hamano. They've seen a backlog of 9 months in orders because of demand. She carries a pink pen that she's been seen scribbling notes with in Parliament and at press conferences, and there's been an increase in sales. Also, the polling ahead of the election shows her on course to get a big majority, a landslide victory. And we do believe, from what the indications we've seen and from what we've seen in the polling, that a lot of that could come from the young voters.
And finally, the Winter Olympics officially kick off tonight with an opening ceremony at Milan's San Siro Stadium. But the most curious story so far is about penis enlargement. Claims that male ski jumpers are artificially enhancing their penis size to gain an aerodynamic advantage. Oshin Chine, our sports editor, has more.
Yes, opening day at the Olympics. So obviously, all anyone is talking about is penis enlargement. Essentially, it's about ski jumpers injecting their penises with hyaluronic acid or paraffin, apparently, to secure a different cut of their ski suit, which can add meters to their jumps. So think about it like, I guess, a flying squirrel and the fabric. The ski jumpers are measured at the start of the season, and there's a certain measurement point. And from that point, the ski suit is cut. So if they can enlarge their genitals in some way, then the distance between the neck and the bottom of the trunk of their body where the ski suit is longer. And just 2 centimeters of additional fabric can add 5.8 meters to a jump. This first surfaced in Bild. The German newspaper reported that ski jumpers were doing this. I mean, certainly people go to great lengths to get an advantage in the suit. This obviously would be fairly extreme. FIS, the World Ski Federation, has said, there's nothing to see here. Nobody's doing this. WADA, the World Anti-Doping Agency, said that they would look into if this was happening and if it would constitute technical doping.
There's a magical place where the desert meets the sea, brimming with history and culture.
There's no place on earth for art like this.
With globally renowned museums.
We're standing in front of one of the first sculptures of humans.
And spellbinding ancient wonders.
This watchtower was the highest building hundreds of years ago.
Abu Dhabi Unwrapped is a sonic guide to a very special destination. Paid and presented by the Department of Culture and Tourism, Abu Dhabi. Listen now, wherever you get your podcasts.
And for a final play before your weekend, we will stick with sports and a recommended listen. Tune in to On Assignment with Ethan Plotkin, our very own Pats fan, for everything you need to know ahead of the Super Bowl 60. And it's not just about the touchdowns, but also the noise outside the lines, as this year's game has become a lightning rod for the culture wars. That pod drops on Saturday morning. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show.
says making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I think what investors are looking for is managements and insiders to step up and start buying their own stock. I think that would really kind of instill some confidence rather than just telling investors the sell-off is overdone, maybe launching some corporate buybacks. Management teams need to step up, insiders need to step up and show the confidence they have in the outlooks of their own businesses.
That was Stefan Slavinsky of BNP Paribas joining us a little bit earlier on. I talk about when moves like this happen, it brings the best out of Wall Street. Some great research out there at the moment. This came from Manish Kapur of SocGen, writing the following. US software stocks are down 17% year to date. They've lagged the S&P by almost 30 percentage points over the last 6 months. He goes on to say, this is the outlier, a sector that has delivered 13% annualized profit growth for the last 3 decades, almost double of the S&P 500, and built its status as one of the market's most reliable defensive engines.
How do you price in something that hasn't happened yet? And the promise that Anthropic put out there is essentially what we cannot price, which is mass disruption. And that's what these stocks are trading on, not necessarily the performance that not only analysts, but also the heads of private investment firms are trying to tell us day in and day out.
The worst relative performance in 25 years. Amazing. That's that from Manish Kapur over at SocGen. Equity futures doing better this morning. Let's check out the price action going into the open and about 1 hour and 13 minutes away. Equity futures on the S&P 500 positive by 0.5. The Nasdaq up, the Russell outperforming, the Russell 2000 higher by 1.26%. That's the price action. Let's get you some morning calls with one stock in focus, Amazon. First up, Cantor Fitzgerald lowering its price target to $250, citing concerns around long-term ROI. Your second call from Evercore ISI, slashing its target to $285, anticipating negative free cash flow for the year. And finally, Wedbush cutting its target to $300, noting investors need to see tangible returns from high capex. That stock is down by 8%. Let's stick with that name. A $200 billion capex price tag weighing on shares. Gil Luria of D.A. Davidson downgrading the stock to neutral and writing this. With the context of results from Microsoft and Google, we see AWS continuing to lose its lead and now scrambling to catch up through escalating investment. Gil joins us now for more. Gil, welcome to the program. Read the note earlier this morning when you published it. What stood out to me was this. It sounds like you think that $200 billion is starting to look a little desperate. Is that fair?
It is, because they're escalating their capex. So is Google, so is Microsoft, so is Meta. It's just that Amazon is not getting as good of a result as those other companies. Google is investing a lot, but they just grew their cloud business 48%. Microsoft grew Azure 39%, and that's just because of internal allocations. They could have grown it faster. Amazon is only growing that business 24%. More importantly, we look at the backlog that this investment has delivered so far, and we see that Google's backlog is comparable to Amazon's. Google is half the size. Microsoft's backlog is almost twice as high as Amazon, and they're the smaller business. So Amazon is investing a lot. It's just not getting as good of a result as Google and Microsoft. Google is lapping them, and Microsoft still has the lead in terms of delivering AI compute. That's why we're concerned.
Gil, do you think this is a structural disadvantage, a structural hole that the company would ultimately struggle to get out of?
Yes, and it's a result of a couple of things. It's a result of the fact that Microsoft aligned with OpenAI early. It has primacy there. And Google was able to create Gemini as one of the leading chats and AI engines, and that's giving them the lead. Amazon doesn't have either. It had an early investment in Anthropic, but Anthropic wisely diversified and is also getting investments from Google and Microsoft. So Amazon doesn't have the primacy there either. So the leading models are what are leading the race. Microsoft's aligned with one, Google with the other. Amazon is just trying to catch up.
Gil, is there any chance that Amazon could catch up? What are they investing in that could potentially get them over the finish line?
Well, that's why they're investing so aggressively now, not to mention the $50 billion they want to invest in OpenAI in order to get better access there. So they're going to try to catch up, but this race is happening very fast, and up until now, they're just continuing to fall behind those Microsoft and Google.
So, Gil, do you see this really as the reason behind the spending raising concerns for you, the idea of being defensive rather than offensive, and not this idea that the nature of these businesses is fundamentally shifting, where suddenly they are spending exponentially more every single year as they become more asset intensive and more like utilities and real estate managers than the tech companies that they once were?
The business is definitely shifting, and it is becoming a lot more capital intensive. We're not saying it's not a good investment, though. To be clear, Google, Microsoft, and Amazon, the reason they're building so many data centers is that they've booked those 3 years in advance. They have the customers. Let's not forget, combined between those three companies, they have all the customers. All business customers use one of those three. So when they're investing in data center capacity, it's pre-sold. We're not worried about the return they're going to get because their customers want this AI compute capacity and they're willing to commit to it in advance. What we're worried about is among the three, who's going to do better. And we don't think that looks like Amazon right now. But in terms of the return on the AI investment, those companies are getting the good return. But let's not forget who's really getting all the profits. That's NVIDIA. All three of these companies are now taking all of their cash flow and passing most of it to NVIDIA. And yet right now, NVIDIA is actually trading at a lower multiple than any of them.
Gil, when it comes to Amazon Web Services, though, I understand that potentially it's not doing as well as you're talking about with the other peers. But for them, it's the fastest pace for them in more than 3 years. Doesn't this show that actually when Amazon comes out and is talking about all this money, it is going to a part of the company that is growing within their portfolio?
Yes, again, it's a good investment. They should be making it. They have to make it. They're just not getting as good of a result as Google and Microsoft. That's what we're saying. And again, they're trading at a higher multiple than Microsoft. Microsoft trading at 22 times, with Microsoft Azure growing 39%. Amazon trading at 26 times, with AWS growing at 24%. That means that Microsoft has a lead. It's more attractive as a stock. And again, we think they're going to keep the lead, if not extend it over Amazon.
Amazon's talking about they're spending it on AI, chips, robotics, and low Earth orbit satellites. Gil, is that the right place to be spending the money?
Well, most of their investment is still in AWS, and a lot of it's in retail, and they're getting phenomenal returns in retail, right? The fact that they can generate the level of profit that they do in retail while growing that business high single digits is very impressive. Our concern on the retail side has more to do with how quickly the internet is now changing. The internet used to be person facing, like human facing, and increasingly it's chat facing. It's ChatGPT and Gemini that are increasingly driving traffic to the web. And Amazon has so far refused to allow those chatbots access to Amazon. So even on the retail side, where they're doing really well and getting great returns on robotics and distribution center investment and regionalization, even there, we have a concern that they could lose their lead, because if you're a Shopify merchant, your website is now linked to ChatGPT and Gemini. If you're selling on Amazon, it's not. And these things are changing very quickly. The volume on the web is turning from human to chat at a very fast pace. And for now, Amazon is emphasizing Rufus, which I don't think any of us is using, while ChatGPT and Gemini do not have a direct connection into the Amazon inventory.
Gil, can we finish on Anthropic? It's made a lot of waves this week, and I've really struggled to understand whether they're punching above their weight, whether the waves they've made are justified by their market position, whether a lot of the headlines this week is just the pre-IPO roadshow, or if it's actual real legitimate disruption. How are you framing things for clients?
Anthropic made the smartest strategic decision, which is to focus on code, on STEM, on math, on enterprise, on solving hard problems. And now their models are solving hard problems and are very focused at solving the types of problems that we have in the workplace, where ChatGPT and Gemini from Google have been more focused on consumer interactions. Anthropic has stayed very focused on solving enterprise problems, which is a very big pocket that they're addressing now. Now, I'm in the camp that believes that they're not going to replace all of software, but I do believe they're going to make us a lot more productive. And they're only starting to get paid for the productivity gains they're going to help enterprise customers get.
Gil, thank you, sir. Appreciate it. Thank you. Gil Lurie there of D.A. Davidson on the tech story of the week so far, and what a story it's been. The week isn't over. Equity futures positive by 0.6%. Up next, we'll catch up with Stephanie Roth of Wolf Research after a string of weaker than expected labour prints. Plus, Yahira is back with your morning movers. Stellantis, look at this move. Stellantis is down by 23% after a massive EV write-down. That conversation up next.
We on gold for intraday. तो न्यूज़ आने वाली है. I will suggest wait for the news. 8:30 का डेटा इंपॉर्टेंट है. मे भी उसके बाद थोड़ा बहुत मार्केट मोमेंटम कर सकता है. जैसे मॉर्निंग से देखोगे मार्केट MCX में तो बुलिश ही लग रहा है. फॉरेक्स में भी चेकआउट करोगे तो बुलिश ही है ओवरऑल. सेल ऑफ मॉर्निंग पे आया था मार्केट में फॉरेक्स में, उसके बाद रिकवरी अच्छी कर चुका है. फिर देख लेते हैं एक बार 15 मिनट में इफ देयर इज एनी रेजिस्टेंस. फॉरेक्स चार्ट देखो 4970 के अप्रॉक्सीमेटली एक रेजिस्टेंस मिल सकता है वापस से प्राइस को 15 मिनट टाइम फ्रेम पर, थोड़ा सा दूर है। रेजिस्टेंस तो है नहीं यहाँ पर प्रसाद जी राइट नाउ। थोड़ा हायर टाइम फ्रेम पे देख रहे हो तो अलग बात है। 15 मिनट टाइम फ्रेम पे एक स्मॉल रेजिस्टेंस है। रेजिस्टेंस वहाँ बना नहीं है 15 मिनट में फॉर इंट्राडे, तो वेट कर सकते हो उस लेवल तक आने का। तो प्राइस बुलिश ही लग रहा है, डेटा आएगा तो फिर शायद हो सकता है थोड़ा सा मोमेंटम करे। डॉलर इंडेक्स नजर में रखना, डॉलर इंडेक्स भी थोड़ा बहुत साइडवेज ही है, उतना फॉल नहीं किया जितना नॉर्मली गोल्ड जितना ऊपर गया है उतना करना चाहिए था। ठीक है, इंट्राडे में देखोगे साइडवेज ही चल रहा है, इवन थोड़ा बहुत नीचे भी आ गया है अभी, बट या वही $97 से 97.500 के आसपास ही ट्रेड कर रहा है काफ़ी टाइम से अब। सो अगर इसी लेवल पे रहता है, थोड़ी बहुत सेलिंग आती है तो गोल्ड के प्राइस जा सकते हैं थोड़ा सा ऊपर। 4970 लग रहा है, मुझे लगता है जाना चाहिए वहाँ तक अगर होल्ड करता है। और कोई सपोर्ट नियर बाई रेजिस्टेंस है नहीं यहाँ पर अभी, एटलीस्ट 15 मिनट अलग टाइम फ्रेम पे हो सकता है हो।
Already announced a lot of these job cuts. Then the jobless claims come out. Yeah, it's at an 8-week high, but ultimately still at a pretty low level. Then JOLTS comes out and you look at it and it's saying, look, we're looking at the lowest job openings going back to 2020. I mean, how many of these can you explain off before you start to get a little self-conscious? Wait a second, maybe something else is going on here.
I mean, I think you have to take a step back and reassess your view. But our sense is, one, the consumer path is pretty good. We're going to also have fiscal stimulus that is starting to hit. The momentum seems to be improving. If you rewind just a couple of days ago, we were looking at the ISM, and we were starting to get questions of, is this early cycle? So how can it be both early cycle and late cycle at the same time? Our sense is that we are starting to improve cyclically. There were some negative news from some of these data sources that's probably not indicative of the trend. This happens very frequently, especially in the month of January, where you get some prints, especially associated with layoff news, which tends to be a January phenomenon.
Well, maybe it's early cycle for fiber optic cables, but it's late cycle for humans that are actually trying to enter the workforce. I mean, how much do you glean that some of this weakness truly is coming from less human-intensive jobs that really result from some of the capital expenditures that are supporting economic growth?
There might be an element of that. So we ran some estimates looking at the rising unemployment rate since ChatGPT launched. And we found that about half of the rising unemployment rate was tied to AI, and then the other half was more cyclical in nature. So the extent to which, sure, there is half of it that is structural that will probably continue to rise, but the portion of it that is cyclical might actually reverse this year if we actually do get a cyclical improvement in the economy. So we do think that you could see about 1 to 2/10 of downward pressure on the unemployment rate this year, just because of economic uncertainty fading, given last year was true peak tariff uncertainty, a modest improvement in the consumer, in which case you could see some modest hiring across cyclical industries.
ChatGPT was launched in 2022, and they're taking 50% of the jobs right now. How does the Fed deal with that?
It's a tough backdrop. I think they have to be thinking about the productivity. And it's kind of a call about whether this is a productivity cycle. There's no harm in waiting at least through the middle part of the year, which is probably what the Fed's going to ultimately end up doing. And then in the back part of the year, they could probably cut a couple more times, and Warsh is going to guide them towards that, because that will be an environment where inflation is also starting to fade. When in productivity cycles, you don't have inflation problems at the same time the growth is strong. So if we start to see that inflation cools down, then it's an environment where they can still cut a couple more times.
What will be the main driver of disinflation? Torsten Slok was out a note today, and he was talking about actually you could see inflation creep higher with things like the One Big Beautiful Bill coming out. For you, what is disinflationary?
So in the first part of the year, I think that's right. We're going to probably see inflation move a little bit higher, in which case that's why we don't think that the Fed is going to be cutting under Powell anymore. However, in the back part of the year, it's going to be driven by the typical disinflationary forces that is tied to productivity, which is lower wage inflation than would otherwise be the case. So first part of the year, I agree. We're going to likely see some pretty hot inflation prints, especially in Q1. That will probably start to fade, and then the narrative will shift in the back part of the year, because that's when you'll start to see inflation cooling, and then labor costs also fairly modest.
I don't expect a precise number from you, but just how much of GDP growth this year is going to come from the tech capex? Not just the 4 companies, but everybody else as well.
Yeah, I think it'll probably be 50 or so basis points on GDP.
That's pretty impressive stuff. This is why it's interesting for the Federal Reserve. They could be cutting interest rates, potentially responding to a labour market at the same time GDP is close to 3. You ever seen that before?
It's a very unique environment, and that's why they certainly will have a tough time cutting in the first part of the year when you see growth actually accelerating. So the news this week, I think, is perhaps a bit of a one-off, and we'll shift to data prints that are starting to surprise to the upside, consumer data starting to pick up, sentiment improve, companies want to invest again because the economic backdrop is a bit better than where it's been, in which case the fears about the economy really decelerating, the labor market crashing.
Well, it's basically what they did do at the end of last year. They were basically cutting interest rates with GDP 3-4 percentage points high because of what we saw from tech capex, even though payrolls growth has totally stalled.
Look, they've been looking through this. They've actually been acknowledging that a productivity boom could come at the behest of an employment market that is sluggish. The one challenge to this, and the one thing that I've not heard people fully explore, is how do 4 companies spend $650 billion in 1 year without causing inflation? Because ultimately what they're buying, yes, it's raw materials, it's land, it's housing, it's all of these different aspects. It's a lot of money. So how do we get that kind of spending without any kind of price distortion on the other side?
Stephanie, how does it show up in GDP? Does Does it come up through imports, investment? How does it show up?
So the way that we've been tracking it in GDP is looking at only the domestic portion of it, because it gets funky with the imports because imports end up being a negative on GDP just based on GDP math. So we look at it based on the tech portion of CapEx, the construction, and what we find is that tech-related domestic portion of AI CapEx is about in terms of size, is about 1.5% of GDP. So that compares to, say, housing, which is about 3.5% of GDP. So it is large, it is growing. If Jensen's forecasts are right, it'll grow to 5% of GDP by the end of the decade. I'm not sure I would bet on it being quite that high, but it's an important part of GDP, but perhaps not as big as.
Okay guys, crude oil काफी volatile हो रहा है, news की वजह से थोड़ा ध्यान रखना. There is a news regarding the US and Iran talk in Oman, जो भी currently चल रही है. तो ऐसे क्रूड थोड़ा सा ज़्यादा ही वॉलेटाइल हो रहा है.
You know, 2% of the population produces 90% of the violent crime. Think of that. Think of that. And Washington now is a very safe place. I get it all the time. I go into the White House and people that work in the White House come up, "Sir, I want to thank you so much." Young woman, man. They say, "I walk to work." I couldn't have walked to work. I wouldn't have even thought to walk to work before. They walk to work. The place is booming. Restaurants are opening up. The restaurants were almost going to be all closed. They would have been all closed. You couldn't even go. Even if you got there, the restaurant would be robbed with people sitting there. "Hold up your hands, everybody. Give us your money." And then they'd whack people with the butt of a gun. And Washington is a very safe city. We have almost no crime. And it's a miracle, but it took place very quickly. You know, 2% of the population produces 90% of the violent crime. Think of that. Think of that. And Washington now is a very safe place. I get it all the time. I go into the White House and people that work in the White House come up, "Sir,
Iranian state media, US-Iranian talks can take many days. Iranian demands, according to Iranian state media, comprehensive sanction relief. इसकी वजह से थोड़ी सी वॉलेटिलिटी है क्रूड में.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
You got to go company by company, be far more selective, and can't say I'm just going to own the whole lot of them. There will be winners, there will be losers. We knew all along AI is going to be quite disruptive. The question that investors should ask themselves over the next few years, is it disruptive to more businesses than it is beneficial, or is it beneficial to more businesses than it is disruptive? And I'm still in the latter camp.
Brian Levitt of Invesco is still bullish, joined us a little bit earlier on this morning. If you're just joining us now, welcome to the programme. Your scores look like this. Equity futures on the S&P 500 higher by 0.5%, following a three-day slide on the S&P 500. On the Nasdaq, bouncing back by 0.6. We were heading towards the worst week since April of last year. Let's see if that changes going into the opening bell and beyond. Switch up the board and get to the bond market. Two-year yields down 10 basis points in yesterday's session off the back of weaker than expected economic data. Two sub 350 at 347.49. Yields higher on the session by some 2 basis points. The misses we saw on the data yesterday just adding a bit more importance to the data we get next week and over the next week. Your trading diary looks like this. At 10 a.m. Eastern time, we'll get you, Mitch, consumer sentiment. Look out for that. Over the weekend, elections in Japan. On Monday, Fed speak from Waller and Bostic. Wednesday is the main one, the big one. The January payrolls report. On to Thursday, jobless claims, and on Friday, some CPI data.
I just think that if it's not Friday payrolls report, does it have the same importance? Does Wednesday payrolls have the same ring? Look, we're going to get that data point. What does it tell us not only about the month of January, which is noisy and typically highly seasonally dependent, but also the revisions to all of 2025 to get a sense of the momentum heading into this year?
What would the Super Bowl be if it was played on Wednesday?
Right?
Totally with you, Brown. It's just not the same.
It's just not the same. I mean, does it even matter? Does it have the same ring?
No one's going to tune in. The audience is going to drop off. No one wants to see that.
NFP Wednesday, not payrolls Wednesday.
You know,
it doesn't work.
Payrolls Wednesday. 8:30 Eastern time. Tune in. Let's turn back to your top story on Wall Street. Alphabet, Amazon, Meta, Microsoft forecasting a record $650 billion in combined capex for 26. Julia Herman of New York Life Investments writing capex, once enough to drive AI conviction, now needs to clear a higher bar. Proof of faster monetization. Julia joins us now for more. Julia, good morning.
Good morning.
Feels like this has been building for a number of months now. Is the market starting to push back?
Yeah, absolutely. We're essentially seeing a shift from total focus on the infrastructure layer of AI and big support for how much infrastructure AI is going to need to a focus on the application layer, how it's used. And honestly, I see a lot of impatience in the market in wanting to determine winners and losers in software, in wanting immediate monetization of AI capabilities. But those conversations are 3 to 5 years or more premature, in my view. I think where the market is going to have to come back to, yes, today, but maybe also in the next few quarters, are two key hubs of conviction in AI. The first is, are the core profit centers of these hyperscalers doing well? Those earnings hubs have nothing to do with AI just now. but they enable the second key hub, which is for the recycling of operating cash flow back into CapEx. As an investor, the number one reason I have to believe in AI as an investment theme is because these hyperscalers believe in their own theme. And so we actually see CapEx as a support of this conviction as opposed to a detraction from it.
One surprise we've seen through the week is to see this number, 650 billion, and then see stocks like Nvidia trade lower. Broadcom trade lower. Those two names are up in the pre-market, but Nvidia on the week is down by 10%. Does that make sense to you that semis have struggled this week in the face of spend that big?
Well, you know, I think that sometimes everything is painted with a little bit too broad of a brush. And the reality is that this is a complex supply chain, right? And NVIDIA is in a completely different part of that supply chain than some of the other hyperscalers, Microsoft, Meta, Google, et cetera. And honestly, what I would expect to see from here is a focus on that core profitability. Not just that, but even as leverage enters some of this financing, that is a prudent capital structure decision. That financing has become 175 basis points cheaper on the front end of the last 18 months. So even as more leverage enters this zeitgeist, I would expect to see maybe more of a market demand for monetization, yes. But we should also probably see a recognition that as long as actual cash flow is behind this AI boom, that we can keep going from here, and that money is, again, going exactly where these companies, where their mouth is.
There are a number of investors who are looking at U.S. tech companies and saying, I don't like your business model anymore. I like China tech companies that are looking on building up much more on this asset-light type of model and not necessarily the infrastructure that is really expensive. Do you agree with that? Do you think that tech ex-U.S. is actually looking more attractive as the U.S. model goes heavily into infrastructure and real estate?
Well, up until this point, international growth equity has actually not been the play. We have actually seen value outperform in those segments. In terms of how early we are in the development of AI, though, I think that all of this competition is a healthy thing, right? DeepSeek early last year was seen as the great threat to AI. But actually, isn't it a really positive development that maybe this can be done with a little bit less energy? And given that we're so behind in the infrastructure that we do need for AI, not just in the US, but globally, further competition, model efficiencies, I think all support the 10-year thesis around AI, even if they create bumps in the next one-year thesis.
At the beginning of this year, a lot of investors were saying that they preferred equity exposure to debt exposure, given the potential for growth. Is that shifting? Do you now get the sense that some people are saying, wait a second, maybe the equity exposure is a little less clear based on the spending programs and the debt side looks better? Do you agree with that?
I think that in general, conviction in the AI theme is still there. And I think what's happening in fixed income markets is the proof in the pudding there. We are seeing debt investors gobble up the exact same issuance that equity investors are now saying that they're concerned about, right? And you're also seeing small cap tech do reasonably well. So that tells me that there's still conviction in this overall theme. The jitters that we've seen hit large cap growth, I think, are more about valuations and concerns about where allocation has ended up, given that diversification rewarded investors last year.
So you sound very constructive on this, and you think potentially this is going to be a washout, and these are still companies that people should get behind.
Yeah, I do, absolutely. We did a lot of long-term research on this theme, and honestly, our conviction in AI rests on the fact that if you compare AI to historical waves of innovation, it has all the right ingredients. It has public participation, public funding. It has the actual private sector helping the rubber meet the road, and there's also this sense that this technology is universal. One proxy for that would be to measure retail investor participation in the Magnificent Seven, for example. So over the next 10 years, we have incredible conviction. And in the short term, what we're looking for to bolster that conviction is, again, are these core non-AI profit centers remaining strong such that they can enable further CapEx financed by both cash and an increasing degree of leverage in the next few months?
Julia, this was smart. Thanks for making time for us.
Yeah, absolutely.
And welcome to the programme, the first appearance as well.
Thanks
for being here.
Thank
you. Julia Herman there of New York Life Investments on the AI trade and the rout of the past 3 days.
We've just heard a number of people push back against it and say, hold on a second, there's a lot of value here. Question is, how do you value that, right? And I think that ultimately there will be a lot of discussion about this in the months ahead. Is there a different multiple put on some of these names as they continue to plan spending programs that would take us to the moon?
Also, I've been thinking they had to come out and announce more CapEx than they did the previous years. What level would have the market liked? Because at some point, if it was too low, we could have also seen pushback as well from investors saying, actually, these companies should be spending a lot more if what they are promising is so big.
You joke, but they are literally spending plans that will take us to space.
I'm serious.
Yeah, data centers in
Right.
space. Elon Musk and Jeff Bezos want to put data centers in space.
What a week it's been. $650 billion.
We're going to space.
The intentions to spend from these big four companies, just amazing. Equity futures up by 0.5% on the S&P 500. The final day of a very, very busy week. Looking ahead to next week, CPI and payrolls on deck. Payrolls on Wednesday, inflation data on Friday. Coming up on Monday to preview the week ahead, we'll catch up with Cameron Dawson of New Edge Wealth, the former Fed Vice Chair Rich Clouder, Jill Carey-Hall of Bank of America, and Austin Kwon of Wells Fargo. From New York City, have a wonderful weekend. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi.
क्रूड ऑयल भी देखो सपोर्ट के अराउंड आया है, थोड़ी सी वॉलेटिलिटी हो रही है न्यूज़ की वजह से कंटिन्यूसली. थोड़ा एसएल का ध्यान रखना कैंडल वाइज, ज़्यादा रिस्क मत लेना. न्यूज़ बेस्ड मोमेंटम है, कहीं ऐसा ना हो मोमेंटम करता हुआ गिरता ही रहे. काफ़ी देर से रुका हुआ है प्राइस, रहेगी इस लेवल पे अब जब तक यूएस मार्केट ओपन नहीं होता. आधा घंटा और है. The United States on Friday called for trilateral talk with Russia and China to stabilize new nuclear arms limit after the US-Russia treaty expired. Large fire at a reported cold storage facility under construction in northwest Iran. Wow. ठीक है, 8 बजे सीधा यूएस मार्केट ही ओपन होगा अब. US-Iran talks in Oman have ended for today. Another round of talks to take place in the coming days. Access reporter. कुछ कंस्ट्रक्टिव निकला नहीं है वहां से मुझे लग रहा है.
President Trump and I had a good working relationship for 4 years. I'd like to say he was not just my president, he was my friend. It was a fluid relationship. The president gave me extraordinary opportunities to champion our agenda on Capitol Hill, around the country, represent America around the world. So the fact that we reached an impasse on my duty on January 6th was difficult, but I thought my duty was clear.
नेचुरल गैस भाग जाएगा क्या? अगर ब्रेकआउट होता है तो जा सकता है. अगेन ओपन इक्वल टू लो कैंडल है के ऊपर एक कैंडल क्लोज होती है तो फिर ये ब्रेकआउट माना जाएगा. मैंने जैसा पहले ही बताया. प्राइस ट्राई तो कर रहा है वहां पर रेजिस्टेंस लेने का. ऑलरेडी काफी मल्टीपल टाइम टेस्ट हो चुका है यहाँ पर. ये पहली बार नहीं आ रहा है. इसका लोअर एंड देखोगे तो 320-22 के आसपास कल से रेजिस्टेंस पर ही था. दैट इज द लास्ट टाइम, इसलिए थोड़ा सा रिस्की ट्रेड भी लिखा हुआ है. तो अगर एक क्लोज देता है एक के ऊपर एक कैंडल तो ब्रेकआउट है. फिर रीटेस्ट भी करेगा उसके बाद. तब तक यहाँ पर थोड़ा कंसोलिडेशन कर रहा है. देखते हैं. कंटिन्यूसली ओपन इक्वल टू लो ही बना रहा है. ध्यान रखना ये रिस्की ट्रेड है बहुत नेचुरल गैस का. यूएस मार्केट अभी ओपन होगा 8 बजे. 50 मिनट लेफ्ट. इसका ब्रेकआउट होता है नेचुरल गैस का तो फिर 350 तक जा सकता है उस केस में. इसलिए लेवल बड़ा इंपॉर्टेंट है. 4000 टू $4,200 जोन में एक्सपेक्ट कर सकते हैं कि अगर ईरान इशू रिजॉल्व हो गया तो कर सकते हैं वैसे. बट अभी का जो अपडेट आया है उसके अकॉर्डिंग तो अभी ईरान और यूएस के बीच में जो बातचीत चलने वाली है वो काफ़ी दिनों तक चलेगी। आज की जो उनके बीच में डायलॉग हुआ था वो ऑलरेडी ख़त्म हो गया है। वहाँ से फ़िलहाल के लिए तो कोई अपडेट नहीं है इतना, बट यस ऐसा होता है तो डेफिनेटली चांसेस हैं गोल्ड वापस फॉल करे। बट गोल्ड के लिए सिर्फ ईरान और यूएस का सिनेरियो नहीं है, वहाँ पर और भी सिनेरियो है। गोल्ड जो ऊपर जा रहा है दैट इज बिकॉज ऑफ द सेंट्रल बैंक कंटिन्यूसली बाइंग गोल्ड। सेंट्रल बैंक रुक नहीं रहे अराउंड द ग्लोब। सेंट्रल बैंक थोड़ा सा बाय करना अगर रोकते हैं तब हो सकता है गोल्ड रिट्रेस करे। सो देयर आर मल्टीपल रीजंस। हो सकता है ईरान और रसिया के सॉरी ईरान और यूएस के बीच में वॉर हो जाए तो गोल्ड और ऊपर चला जाएगा। यूएस मार्केट ओपन होने वाला है, थोड़ा सा पोजीशन का ध्यान रखना। ओपन होती वॉलेटिलिटी स्टार्ट हो जाएगी। बाकी फॉरेक्स में देखोगे यूएस मार्केट तीनों इंडाइसेस रेड में ही चल रहे हैं वहाँ पे। एंड डेटा भी है एक 8:30 पर कंज्यूमर सेंटिमेंट और इन्फ्लेशन एक्सपेक्टेशन। दैट इज ऑल्सो इम्पॉर्टेंट फॉर गोल्ड एंड सिल्वर एज वेल एज विद द इक्विटी मार्केट। 15 मिनट लेफ्ट, एक कैंडल और है यूएस मार्केट ओपनिंग से पहले। यूएस मार्केट से पहले अपना एक ही कैंडल है बिकॉज एसएल कॉस्ट पर रख लेना दोनों जगह पे, क्रूड नेचुरल गैस। यूएस मार्केट में कहीं रिवर्सल ना हो जाए, सो पुट योर एसएल ऑन कॉस्ट बिफोर यूएस मार्केट ओपन। 10 मिनट लेफ्ट गाइस, यूएस मार्केट ओपन होने वाला है। फिर रिपीट कर रहा हूँ, अपना एसएल कॉस्ट पर रख लेना दोनों ही जगह पे, क्रूड में और नेचुरल गैस में। स्पेसिफिकली क्रूड में बहुत वॉलेटाइल हो रहा है, न्यूज़ में कहीं 8 पीएम पे वॉल्यूम आए नीचे ना चला जाए। ठीक है, यहाँ पे भी सेम ही सिनेरियो है, कैंडल वाइज ही बेसिस पर ही ऐसा रखना पड़ेगा, नॉर्मल एग्जैक्ट एसएल नहीं रख सकते। क्रूड ऑयल में भी ध्यान रखना है, एसएल कोई एग्जैक्ट नहीं है, ठीक है, कैंडल क्लोजिंग बेसिस पर ही एसएल को रखना पड़ेगा बिकॉज ऑफ द वॉलेटिलिटी। यूएस मार्केट होता है ओपन, फिर देखते हैं थोड़ा मार्केट कहाँ तक मूव कर सकता है। स्पेस तो है, अभी भी सपोर्ट जोन पर ही है, वॉलेटिलिटी एक्सपेक्टेड है। मिनट लेफ्ट, यूएस मार्केट ओपनिंग। साइड में से देखा जाए तो एटलीस्ट 15 मिनट में एक लिक्विडिटी जोन यहाँ भी मिल जाएगा हमें 6050 के अप्रोक्सीमेटली। दूर है बट वहाँ पर है एक लिक्विडिटी। मिनट है, यूएस मार्केट ओपन ही होने वाला है बस। फिलहाल के लिए अगर ये लेवल सस्टेन नहीं करता है प्रॉपरली तो फिर लोअर एंड पे 5350 तक जा सकता है प्राइस उस केस में, अनटिल अनलेस कोई नई ऊपर सेलिंग साइड की लिक्विडिटी बहुत पास में क्रिएट नहीं हो जाती। बीच में और कुछ लेवल तो सो ही नहीं हो रहा इसमें एग्जैक्ट मेजर लिक्विडिटी के साथ। लेवल बड़ा इंपॉर्टेंट है क्रूड के लिए, डिफेंड नहीं किया तो फिर बड़ी प्रॉब्लम होगी बायर्स को। ठीक है, वॉलेटिलिटी तो ठीक है, नॉर्मल रहेगी। बाय द वे इस लेवल से देखोगे एक बार हाई बना है, दूसरे बार हायर हाई बना है, तीसरे बार लोअर हाई बना है, ये चौथी बार आया है प्राइस लेवल पे। US market open now.
At futures that are up across the board with dip buying going on after the drops that we saw yesterday, really across assets. Right now, S&P futures up about 0.5% as our NASDAQ futures, small caps gaining 1.4% this morning. Maybe that's on some optimism about the Fed. I recognize it's Jennifer Garner.
Correct.
That's great. Once Upon a Farm, OFRM, I guess, is the ticker there. And also, my mother was her advisor at Denison University.
Oh, I thought maybe we were going to say for this IPO.
No,
that
I mean
maybe
in
makes
college.
more. Yeah, that makes sense.
Which was
very cool for your mom.
Which was a while back. Okay, Spyglass Pharma ringing the bell at the NASDAQ. The important thing to note today is that we have dip buying going on, even after Amazon said it's going to spend $200 billion this year on CapEx. That's what has been hurting Mag 7 companies throughout reporting season thus far.
I say dip buying, but not for Amazon, to be clear. Those shares are still getting hurt, and I actually have a look at them and what they're doing at the open at the moment. I think, there we go, there's today's trade. So you can see it was already down 4% yesterday. It adds to that, down almost 9% this morning. As Matt, as you said, $200 billion on its AI efforts. That is 27% higher than the average Wall Street estimate. The money will predominantly go towards the company's Amazon Web Services cloud unit, according to Andy Jassy. But even after the sell-off, it is clear this market is nervous if you're putting up hundreds of billions of dollars worth of spending, even if it's on AI.
Yeah, a big drop there, to be sure, especially considering, so many people associate the business with other things than AI. Of course, Amazon Web Services, as Ed Ludlow tells us, is the profit center for them, and it does have a backlog in terms of its cloud services of $244 billion. Stellantis says its pivot away from EVs will cost the company $26 billion. The write-downs cover cancellations of certain models, compensating suppliers, and I would hope also bringing back other models. We need to see the 6.4-liter Hemi V8. And they're going to be lowering prices as well across the board, but especially at Jeep for the base price and for options. So look out for that. Joining us now to talk about all that's going on in the markets right now is BlackRock Global Chief Investment Officer of Global Fixed Income, Rick Reeder. And Rick, we book you on every jobs day, but this is yet another Friday when we don't get the jobs report because of a short government shutdown. It looks like we could have another one, partial shutdown, at the end of next week. What do you make of this sort of muddy data picture when we don't get the things we need in time?
Well, so first of all, it hasn't been jobs day in a number of months anyway, because we're not getting any of those. So I think the last 3 months we've had negative, we had a government shutdown, but you still had negative jobs. Listen, I mean, it's a little trickier when you don't get the actual published reports. The markets pivot off it. By the way, the volatility markets, you strike a lot of options in and around those dates. So it does create a little bit of trickiness. That being said, I mean, particularly for jobs, and we've talked about it a number of months on your show, you look at what we got yesterday, you look at the JOLTS report, you look at the Challenger job cuts, you look at the claims data, you look at the ISM services in terms of jobs, there's no ambiguity around where we are in the jobs market. We're having a really tough time. We're watching productivity explode higher in terms of growth being really good, but a job market that's really tricky.
That dichotomy, Rick, is the most fascinating. Well, there's a lot of interesting stuff going on, but it's one of the most fascinating things about this economy, because it's difficult for anyone to say, even with jobs looking very challenging, that we're heading anywhere near a recession, as long as the Mag 7 is spending, 2.1% of GDP on CapEx, as long as a government's running a 6% plus deficit. Is this economy going to be okay, even if the jobs market starts to have some cracks in it?
Yeah, the answer is yes, and I think people don't look at jobs and look at this economy like it was 20, 30 years ago. You have an extraordinarily different economy, service-oriented versus goods-oriented, but you've got an economy that's operating incredibly well, but only on a couple or three cylinders. Today, you've got, like you pointed out, you've got CapEx that is robust and will continue. You've got consumption that is robust, but it's driven by wealthier, older savers, and it's part of why the interest rate tool is not nearly as effective as it used to be, because that cohort is doing extremely well. Where the burden today is in terms of low income, small business, younger people. And so, when you aggregate the data, and I hear a lot of people talking about, oh my God, the jobs market is softening, the economy is going to come under pressure. It's actually, this is an economy that's more asset-oriented than labor-oriented, and that cohort, I don't want to understate this. We have a problem in terms of we need to employ more people, but that cohort isn't that much in terms of aggregate spend. So the economy can continue to motor along, and productivity, I mean, you watch it play out every day. I mean, now the equity market has taken it on about where is productivity manifesting itself effectively. Some spaces, not other. Who are the winners? Who's building a moat? Who's not going to be a winner in this? But at the core, you're watching something play out that's pretty historic.
Anthropic putting out another AI tool, this time for financial analysis. They did earlier this week for legal services, both of them kind of rocking the market. That will affect sales at big companies, I imagine, big and small, as well as the jobs picture, right? We're talking to a lot of people. Yesterday, we were talking to Mike Arrighetti from Ares, who pointed out that, you know, the younger talent, the new hires aren't going to be doing the same work and may not be as plentiful as they once were in that industry. What do you make of AI changing the way we work or the fact that we work at all?
Well, Mike's a very smart guy. I would say a couple of things. You know, I chair the board of, we have 14 charter schools in Newark, New Jersey. We just had a discussion this week at our board meeting about what is our curriculum going forward. How does AI evolve how we teach kids? What are the disciplines we're teaching our kids for going forward? How do we use AI to augment a traditional teaching process? This is all new territory, and this is all new land in terms of where we're going. Listen, I think there's a bunch of things that are, you know, that have been standard operating procedure that, you know, that we used to teach people for, and quite frankly, AI is going to fulfill that function going forward. I still think learning and interacting with people and the core of education will be sincere to what it was. But gosh, there are so many things we got to think about what can AI do that can make the economy more efficient, make people more efficient, and then move people into the zones that are going to be fulfilling going forward. But that is, I'll tell you, Matt, there is no roadmap for this.
Well, what do you make of, I mean, I look at BINC, the ETF that you manage very well, and we'll show in a second how you've beaten returns of the benchmarks by a lot. But there's some corporate assets there, right? 45%. And I wonder how you judge whether or not a company has a moat, what that moat would look like so that it can defend itself against AI disruption.
So there is, how do I describe this? By the way, I will take it in a couple of different directions. One, that's interesting. You know, you hear the discussion about CapEx, and the CapEx was too high. And, you know, I would argue there's some other things at play there. CapEx is your moat. CapEx and R&D spend are the way companies can build their moat, and it's actually data utilization. And the companies that are exploiting data effectively, that are building bigger moats, that is at the core of what is happening. You know, there's something also that's different today. Some companies, the free cash flow generation that's been so robust over the last couple of years, you see some of these big companies buying back a huge amount of stock. Now they're spending more on CapEx. It has real ramifications for the technicals in the equity market that we got to think through. Listen, it's a lot of hard work. Yep, go ahead.
Well, I just want to jump in about the other hard work you do at BINC and how you're thinking about positioning the fund and where on the curve. Yield curve just shy of its 2022 highs, somewhat reversed a little bit yesterday, but some of that steepening continues. Yeah. We have an incoming Fed chief who's been talking about trying to shrink the balance sheet over at the Fed. When you think about the rest of this year, are you thinking about changes to BINC at all? Where do you want to be positioned for the road ahead in fixed income?
So a bunch of changes. Your point about credit, we've reduced some credit, we've reduced some IG, because quite frankly, it's not that fulfilling. We're going to get a lot of supply. The spread's not that interesting. You know, we've cut a little bit of the low quality, high yield. By the way, we're running a bit less high yield than we're running overall. We've added to mortgages, although recent last few days, maybe we've cut a little bit of mortgages because the balance sheet discussion becomes a little less enthusiastic than it was before. But we still like mortgages. We like EM a lot. The dollar will stay contained. And so EM, the yield differential between EM and high yield, is as good as it's ever been. And then the key one for us is securitization markets that will allow you to structure the collateral, the covenants, what your attachment point is. So we love the securitization market. But you're right, it's a different expression, a little less credit, a little more EM, a little more in the securitization zone. By the way, Europe killed it last year. And now the benefit you're getting from Europe is not nearly as robust as it was. So we've dulled down a little bit of that, and more Asia in the portfolio. So yeah, we've been moving around a fair amount to keep it dynamic and where we think the best opportunity is.
Hey, Rick, we're going to have to leave it there. Thank you so much for joining us. We look forward to you talking next not Jobs Friday. Hopefully it will be a Jobs Friday next time we talk. Rick Reeder of BlackRock. All right, let's get a check on your equity market right now. About 10 minutes into your trading day. Have we found a floor? We're up 1% after 3 consecutive days of declines for the S&P, 7 days of declines for the software sector. It's down almost 30% from its high, so we're in a bear market for software. Leading us higher is NVIDIA this morning, and Broadcom and Apple and Microsoft. So some of the rebounds of the things that were hard hit. I guess NVIDIA and Broadcom do well when you get $200 billion thrown out there of spending from Amazon. The banks having a good day. JP Morgan, Eli Lilly, Tesla rounding out the top 10 of the movers. To the downside, it's Amazon. Again, it's those earnings, that punchy spend that was hugely above what was expected. Amazon.com falling 8%. Alphabet has another rough day after yesterday. Google also suffered too. It was down 1.2% today. Julian Emanuel writing in his note, the reaction to Google, despite a double beat, just shows the intensity of this market. If we look at what the individual sectors are doing today, let's get a look at that. Consumer discretionary, that's falling 2.6%. A largely positive day, despite the fact Amazon is dragging things down and Meta and Alphabet are down. That's why communications isn't doing well. Tech is up 2.6%. Industrials, financials, utilities, those also rallying 1%. I guess it's the good old question of, was all of that this past week, was that the worst of it, or is today a bounce of a dead cat, Matt?
All right. Dead cat bounce is one of my favorite Londonisms. Coming up, 4 magnificent 7 companies have forecast capital expenditures that will reach $650 billion this year. Some are getting punished for it. We discuss with Mandeep Singh next. This is Bloomberg Open Interest.
ओके इस यूएस मार्केट को देखोगे ऑलमोस्ट डाउ जोन्स एस&पी 500 पॉजिटिव ही चल रहे हैं. थोड़ा सा नैस्डैक डाउन हुआ था बट अगेन पॉजिटिव हो गया है. 8% डाउन, 8 to 9% डाउन ओपन हुआ है अमेजोन उसकी वजह से. बाकी तो मैग्निफिसेंट 7 के सारे स्टॉक्स पॉजिटिव ही लग रहे हैं. एप्पल भी ठीक ही कर रहा है. गिफ्ट निफ्टी भी थोड़ा बहुत ऊपर गया है. क्रूड ऑयल ठीक ठाक अपर साइड पर ही है, सपोर्ट पर. नेचुरल गैस साइडवेज हो गया रेजिस्टेंस पे. ठीक है रेजिस्टेंस पर ही है. इट इज स्टिल ऑन रेजिस्टेंस. आई एम स्टिल एक्सपेक्टिंग कि थोड़ा फॉल हो. जब तक ब्रेकआउट नहीं होता इस पर्टिकुलर लेवल के ऊपर प्रॉपरली, तब तक रेजिस्टेंस पे ही कंसीडर करेंगे. नीचे आता है तो वही 306 to 300 का लेवल है जहां तक प्राइस फॉल कर सकता है उस केस में. करने के लिए 328.5 के ऊपर प्रॉपरली ब्रेकआउट होना जरूरी है नेचुरल गैस का. टिल देन इट इज ऑन रेजिस्टेंस. Negotiations between Iran and the US in Muscat, Oman were concluded with an agreement between the two sides to continue the talks. The parties, while explaining their respective and demands, reached an understanding to make decision regarding the next round of talk in consultation with their capitals. सो ओवरऑल देखोगे कुछ खास आउटकम तो मुझे लग नहीं रहा इनकी बातचीत से हुआ है. Oman foreign minister, very serious talk meditating between Iran and the US in Muscat today. Both Iranian and American thinking and Iran foreign minister Abbas Agarchi. Overall, it was a good opening to the negotiation. Decision regarding how the talks will continue will be made in the respective capitals. It was agreed that the negotiation will continue. I do not want to judge prematurely, but if the course of the talks continue in this manner, it will be possible to reach an agreed framework. देखा जाए जो बातचीत निकल के आ रही है that will be bearish for crude oil अगर देखा जाए. Jeffrey Epstein offered a tall Swedish blonde woman to Anil Ambani. The disgraced financial spent years cultivating a relationship with a Silicon of India's wealthiest family. टेस्ला पॉजिटिव है, Palantir भी पॉजिटिव है, Amazon ही डाउन है आज.
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Nathan Hager. We have made it to the end of quite a hectic week on Wall Street. That is the sound of the opening bell from the floor of the New York Stock Exchange, and investors are hoping to end the week with some gains. At the open, the S&P 500 is higher by almost 0.5%, a gain of about 30 points. The Dow Jones Industrial Average is in the green by 0.2%, a gain of more than 310 points. And the NASDAQ Composite is higher as well, up 0.4% or 80 points. The 10-year Treasury yield up about a basis point to 4.19%. So a bounce back from a 3-day tech-led sell-off in stocks, but Amazon is lower by more than 8% at the open. The e-commerce giant is planning to spend $200 billion on its AI build-out this year, bringing the total for just 4 companies, Amazon, Microsoft, Alphabet, and Meta Platforms, to $650 billion. Parmi Olson is a tech columnist for Bloomberg Opinion.
What really intrigues me about this is this kind of almost an identity shift for these companies, because if you think about why they're so valuable in the first place, it's that they're asset light, right? Like they have a lot of staff and they maybe have some data centers, but then they build this incredibly valuable software and they have incredible margins. now they're becoming these kind of capital intensive infrastructure operators. They're almost like telecoms now.
You can hear my full conversation with Parmi Olson of Bloomberg Opinion on the Bloomberg Daybreak U.S. edition podcast. Indirect talks between the U.S. and Iran have ended in Oman. This was a bid to dial down tensions that have threatened to escalate into war. Bloomberg's Kasia Klimashinska is following from Washington.
Oman met with the U.S. delegation led by Steve Witkoff, and then separately with representatives from Iran. But Iran also said before those talks even started that it won't be a major step, that those will be just some sort of broad talks.
Bloomberg's Kasia Klimashinska in the nation's capital. Iran's foreign minister says today's talks were a good start. He says both the U.S. and Iran will decide on a way forward after consultations with their capitals. The New York Times says it has analyzed satellite images that show Iran appears to have made rapid progress repairing its ballistic missile facilities after last year's U.S. attacks, but it says it has only made limited fixes to the nuclear sites that were damaged by the U.S. and Israel last year. President Trump's social media feed is getting even more attention. The president reposted a video last night that briefly portrayed former President Barack and ex-First Lady Michelle Obama as apes. The minute-long video about 2020 election conspiracies depicted other Democrats as jungle animals. Democratic California Governor Gavin Newsom says the post is disgusting behavior by the president. White House spokeswoman Caroline Leavitt is calling that fake outrage. Last night, President Trump was looking to take on Americans' cost of living concerns through a new website.
Starting tonight, dozens of the most commonly used prescription drugs will be available at dramatic discounts for all consumers throughout a new website. It's called TrumpRx.gov.
And we get more on the effort from Bloomberg Government's Maeve Sheehy.
This is something that we've heard the Trump administration kind of toy with and talk about for a little while. If you go to this website, they have more than 40 medicines available. These include major weight loss drugs like Ozempic and Wegovy, and they're available for just cut prices, basically.
Bloomberg Government's Maeve Sheehy says it remains to be seen whether more Americans will shop for medications through the site rather than through their insurance companies. A special Democratic primary for New Jersey Governor Mikey Sherrill's open house seat is still too close to call. With 91% of votes counted, Bernie Sanders-backed organizer Ana Lilia Mejia leads former Congressman Tom Malinowski by fewer than 500 votes. Decision Desk HQ says Mejia did better than expected in two key counties. The search is now into a sixth day in Arizona for Today Show host Savannah Guthrie's mother, Nancy. Pima County Sheriff Chris Nanos is still holding out hope.
For me, it is simply this. Somebody asked, Sheriff, how do you know, can you prove that she's alive? And I just simply turn it around. Can you prove she's not? Why would I operate from any other position?
Pima County Sheriff Chris Nano says investigators are also looking into a ransom note that was sent to media outlets to see whether it's genuine. Turning back to the market now, Atlanta Fed President Raphael Bostic says he sees cautious optimism in the part of the country he covers. Bostic spoke this morning to Bloomberg's Michael McKee.
The tariffs, people have gotten used to those. And so those effects will have run through by the middle of the year. We see some of the stimulative aspects of the tax bill last summer. Those will be coming on board. And if consumers start to feel like there's more certainty, then I think businesses think there's some upside potential in the economy.
Atlanta's Raphael Bostic tells Bloomberg's Michael McKee it's important to keep interest rates at a level that restricts economic activity and returns inflation to 2%. Bostic is retiring from the Fed at the end of this month. Still a lot of pessimism for investors in Stellantis. Those shares are down 25% at the open. The Jeep and Fiat maker reported a $26 billion charge from its pivot away from electric vehicles. Better news for bankers on Wall Street. Bloomberg News has learned JP Morgan Chase, Goldman Sachs, and Bank of America are boosting their bonus pools by at least 10% thanks to a banner 2025 for deal-making and market activity. That's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
As a place to do business, the UK stands apart. Not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day, fueling innovation across every sector. Home to 4 of the world's top universities, it provides exceptional talent and breakthrough research. This sits alongside a clear 10-year industrial strategy, unlocking smarter regulation and making it faster and easier to operate. Stability with dynamism. Global connectivity with local depth. It all adds up to greater growth. Visit business.gov.uk/growth.
The ride-sharing company has maintained that it is not liable for the misconduct of drivers on the platform, whom it classifies as independent contractors, not employees. Steve Kathan, CBS News.
How far will an actress go for her art?
Why did you leave me?
Why did you betray your own heart?
Margot Robbie posed for pictures at the London premiere of her upcoming movie Wuthering Heights, wearing an exact replica of the mourning bracelet Charlotte Bronte wore after her sister Emily died 175 years ago. Deborah Rodriguez, CBS.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube as well. We're also streaming at Bloomberg.com/videos. That's where Bloomberg is curating all the video product that we put out. Busy Friday. We got some green on the screen here today for once. We got a big bounce back in Bitcoin. We'll get to all that. We're going to talk to Joanne Shu, University of Michigan Surveys Consumers Director. We had some UMich data came out today. Pretty darn good numbers, I would say. Jillian Wolf, Bloomberg Intelligence Global Equity Strategist. We'll get her thoughts on these markets. What a wild week it's been here as we bounce back today. Mandeep Singh, Global Tech Research Head of Bloomberg Intelligence. We're going to talk all things tech, starting off with some of the big numbers out of Amazon and just the cloud and what's going on in big tech as the software companies were selling off hard this week, getting a bounce back today. Poonam Goyal is going to join us. She covers all the retailers, including Amazon.com, so we'll get the latest there. So a lot coming up on the stock front and on some economic data and general geopolitical news in the market. That's all coming up. The next 2 hours, Scarlett Fu and Paul Sweeney with our Bloomberg Intelligence program. Let's kick it off. John Tucker, Bloomberg Business Flash.
All right, guys, this Bloomberg Business Flash being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests. Learn more at ibkr.com/RIA. You mentioned the numbers, Paul. Let's get right to it. University of Michigan, the headline number, the sentiment indicator, more than expected. We're a little more confident, 57.3. The expectation was for 55. It's also better than the prior month. I always go to the inflation expectations. Shorter-term inflation expectations, 1 year, 3.5%. The survey of economists by Bloomberg, that was looking for 4%, so better there. The longer-term 5 to 10-year inflation expectation, 3.4%. That's higher than the prior month and also higher than the expectations. So maybe less of a reason to raise rates. That's why you're seeing the immediate reaction in the 2-year, more policy reactive there. That is up close to 5 basis points at 349. Well, the major stock averages, they are higher, risk on today, but there is so much focus on Amazon. Among the worst performers in the S&P 500, shares of Amazon right now down over 9%. Just the latest tech company to test investor nerves with the big AI spending. Sean Simons at UBS Securities has been kind of less enthusiastic about the technology shares.
We still hold it as a neutral in our view for the year. So I do think there's going to be some opportunities within tech, but it's not necessarily going to be the stalwart driver of the overall market.
And right now, the S&P 500 up 60 points. That's a rise of 0.9%, 68.59. The Dow up 771 points. That is up 1.6%. And right now, the NASDAQ 100 is up 146 points. We are up right now 0.6%. So the question's going to be raised, did we hit bottom? We check the markets for you all day long. Of course, I'm not going to answer it. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Paul Sweeney and Scarlett Fu, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com/videos. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Alexander Semenova. Alex, what are you looking at?
So we have to start with Amazon, of course. If you are an Amazon investor, you might want to close your eyes, close your ears, because it is taking a painful move lower today. The stock is down 9%. This is actually the biggest one-day decline since the tech rout of 2022. This is after the company announced plans to spend $200 billion this year on data centers, chips, and other equipment. This is, of course, consistent with the story that we've seen that investors have just been punishing companies that are spending a lot on AI. They're scrutinizing those expenditures a lot more heavily than they did in the past. This is worrying people that these big AI outlays may not pay off for the company. CEO Andy Jassy said that the money predominantly would go toward the company's Amazon Web Services cloud unit. Much of it would be used for AI workloads. And they did say that the spending will weigh on profits. It gave a forecast for operating income in the current quarter of $16.5 billion to $21.5 billion. Analysts on average had estimated $22.2 billion. And of course, we saw earlier this week, Microsoft and Alphabet also outlined heavy spending plans, and their shares fell lower.
Yeah, I'm looking at Alphabet shares down now for a fourth straight day. So big tech is certainly getting a rethink from investors. What's next on your list?
So we also have to talk about crypto. Crypto dip buyers are finally wading in after a brutal run. Bitcoin has reclaimed about half of the losses registered during the crypto meltdown yesterday, which, by the way, guys, was the largest since the collapse of Sam Bankman-Fried's FTX. Right. Really, really brutal moves there. That is putting crypto shares into focus today, and predominantly strategy. It is actually jumping. It is up about 15% right now, even after it reported a net loss of $12.4 billion in the fourth quarter, of course, driven by the declines in Bitcoin, which it holds. It's usually moving in tandem with the cryptocurrency. I saw some pretty bullish commentary from TD Cowen. They say that strategy can actually withstand further Bitcoin declines without having to sell because they have $2.25 billion in cash reserves. And they said that this feels uncomfortable when crypto is falling, but strategy is actually better positioned than ever to participate in a recovery.
All right, last one.
And the final one is Stellantis. It is taking a more than 22 billion euro or $26 billion charge, mainly linked to reversing some of its electric vehicle strategy. This is the maker of cars like Jeep and Fiat. Its shares are down 25% right now. This is the biggest one-day drop ever. It is now trading at a 2020 low. A lot of superlatives that we're using today. The write-downs will cover the cost of canceling EV orders and compensating suppliers. It actually exceeds the write-downs that we have seen from Ford, from General Motors, and some of its other competitors. And the CEO said that these write-downs largely reflect the cost of overestimating the transition to energy.
Okay, this is certainly not unique to Stellantis. All these automakers have been winding it down.
It's unbelievable the write-downs they've all taken. It's just extraordinary. I mean, tens of billions of dollars. I mean, and I think GM, the stock, has actually been a great stock because I think they've signaled to the marketplace, we're stepping back from EVs. We're slowing it down big time. And the street likes that because we're going to build the stuff that actually makes money today.
We're going to double down on the big gas-guzzling SUVs that American consumers favor right now.
Kevin Tynan, formerly of Bloomberg Intelligence, that was his clear message for years. They're going to focus on what makes them money.
They're bread and butter.
And the big trucks make money.
Yeah,
the EVs don't.
And that platform, you could use it for various things, right?
Exactly.
So he's vindicated then.
He is completely vindicated.
Thank you so much, Alexandra Semenova, with our movers to watch. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, let's get to that consumer sentiment data that we just got at the top of the hour, which did show that things improved unexpectedly to a 6-month high when it comes to how consumers are feeling. Joanne Shu is University of Michigan Surveys of Consumers Director, here with us to give us a little more context on this. So what do we chalk up the unexpected improvement in sentiment to?
So this improvement is very, very small. It's less than 1 index point. It's not, it's well within the margin of error. This should be interpreted as a no change reading.
Okay.
And overall, we're still actually in the bottom decile of readings, historically speaking. So this is still very, very low levels of sentiment. Consumers are very much really emphasizing the pressures on their budgets. So they are both worried about continuing to worry about weakening labor markets as well as the persistence of the high prices. Really, the gains that we saw this month were primarily from people with large stock portfolios. And I want to note that our interviews closed on Monday. So that's before we had the market drama during the week.
Important context.
You know, I'm just looking at the consumer sentiment index going back like 5 years. If I had to just eyeball an average, kind of in the high 60s, maybe a 70 range, is that a number that reflects a good sentiment out there?
You know, coming into the pandemic, it was more like in the 90s. After the pandemic, it's been pretty low.
Wow.
And so this reading in the 50s, this is not a good reading looking back historically. I'm not sure if sentiment is going to go back to that pre-pandemic level anytime soon, but we want to get out of the 50s. We want to see sustained upward trajectory. We've seen a couple of increases in recent months, but they've, like I said, been very, very small within the margin of error, and overall sentiment's kind of been stagnating.
This is another example, Scarlett, where context matters.
Oh, absolutely.
I just put the GP, the chart of this thing going back to like the 1980s. You're right, Joanne. I mean, this thing was like in the 90s, averaging high 80s over the last 20, 30
But it also depends on who you ask, right? Because what University of Michigan does is look at sentiment by political party. And what we've seen, Joanne, is that Republicans are scoring somewhere in the 90s, high 90s, in fact, when it comes to sentiment.
Yeah, so we've seen a partisan divide in consumer sentiment going all the way back to the Reagan administration, if not earlier. So it's always the case that if your party's in power, you feel better about the economy than if your party's not in power. But if we take away Republicans and Democrats and we only look at independents, we get the exact same national number. The national number is exactly on the pulse of the independents who aren't really swayed by those wins.
With a one-year inflation, that's a big step down. The consensus was 4%. The last period was 4%, and it came in at 3.5%. I'm guessing the Fed's going to like that, if nothing else. What do you make of that move?
Consumers are definitely starting to feel a little bit less worried that inflation is going to come surging back. They were expecting a worst case scenario back last April and May. They're not worried about that worst case scenario anymore. 3.5 is still higher than what we were seeing in 2024. So consumers don't think we're out of the woods yet.
And their outlook for long-term inflation, 5 to 10 years, really hasn't changed very much. It's still holding at about 3.3, 3.4%, which is in line with the one-year inflation outlook. So they don't see inflation getting better either.
That's right. The 3.4% that we see this month, it's still higher than 2024. So it's stabilized, but not necessarily at the level that we'd like to see long-term.
All right, very good. Joanne Shu, Surveys of Consumers Director at the University of Michigan. Some good stuff there. I think the numbers look pretty good, but boy, you put them into context going back, and we got to get out of the 50s. She's right. So there you go.
I know. So even though we say it's at a 6-month high and unexpected gain, if you look at the long-term view of the chart, it's still very much bumping along the bottom. So yes, off those lows, but still not back to where it was before the pandemic.
All right, folks, you can explore live streaming news and interviews, all of our Bloomberg TV shows, documentaries, reporter analysis, and more. It's all in one place. Check out Bloomberg.com/videos, and that's where you find it all. S&P up 65.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Good. I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. 6 of the 11 major industry groups in the S&P 500 are higher right now as this risk-on rally continues. Energy is right up at the top. I'm going to guess that's because the icy grip of winter will envelop a large swath of the nation this weekend, like single digits. I showed you the picture of the wild turkeys.
Yep.
By my house. They were trying to get into my house. They were so cold.
I'm supposed to do a polar plunging in the Atlantic Ocean Saturday
You're
morning.
rethinking that one, right?
You'll come out like a block of ice.
I don't think that's happening.
Don't do that. Information technology, that's right there as well. That is higher. But, Amazon, that's the story of the morning, not participating. The share is actually declining right now. They're down 8%. Same old story. Investors worried they're spending too much on all that AI stuff. S&P 500, 78 points higher. That's up 1.2%, 68.77 on the index. The Dow Jones Industrial Average up 825 points. And the tech-heavy NASDAQ 100, 258 points higher. That is a rise of 1%. I'll have to do Bitcoin, 8% higher right now. Still $68,000 per token. Remember, it was at what? 125,000 last year?
In October,
Anyway.
Then it got below 63,000 yesterday, so it's all over the place.
We'll continue. I mean, somebody's going to be along and explain all this to us. We check the markets view.
Price goes up, price goes down.
Yeah, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live also at Bloomberg.com/videos. Markets rebounding, as John's been reporting all morning, with the S&P up 1%. But that selling that got your attention in the last 4 or 5 days.
Yeah, and it was sustained for a couple of days, too.
It was with some volume there. So I don't know what's going on here, but we have somebody who does. We pay people to do this stuff. Jillian Wolf, global equity strategist for Bloomberg Intelligence. She joins us here in our studio. Jillian, what did you make of the trading over the last 4 or 5 days? That selling was something. We do have a rebound today. What do you think's going on out there?
It feels like Groundhog Day a little bit because over the past, I want to say 2 years where we've been covering this and the AI volatility, we've seen a lot of these panics, right? We saw this in mid-2024 after TSMC gave some bad guidance. We saw the market get shaky on that. We saw this after DeepSeek. We saw this during 4Q earnings. After each and every one of those periods of shock, the market has managed to recover. It seems like investors are on edge, definitely with anything that can threaten the AI thesis, like Anthropic, like earnings not coming in quite as good as they'd like. But every single time, it's just been shakiness, volatility, and then a rebound. So honestly, on the BI desk, we're not taking it too seriously.
Okay.
We haven't seen any real structural changes in the AI thesis occur just yet. One thing that we do think is interesting is that a lot of these tech stocks are beating consensus estimates, but still falling, which tells us that the expectations are even higher than the consensus is telling us. And it's not just about earnings anymore. These companies have to really justify these insane valuations and have to perform so perfectly across all facets of the balance and cash flow sheet to rise. So definitely volatility to come, but I don't think there's really many structural changes that could cause a shift in that thesis.
Right. As long as their CapEx numbers keep coming in higher than what analysts had forecast, that generates a negative knee-jerk reaction. How are you thinking about the moves in credit? Because oftentimes credit leads equities. Equity investors could stay optimistic for a lot longer than credit investors. And we haven't seen that much panic in credit markets, except when you look at certain really junky loans on the leverage market side. And that is where some of the stress shows up. Is equities leading the rest of the market right now, or is equities kind of following?
Well, one thing we've been discussing is a bit of a breakdown in the traditional relationship between the credit and the equity markets, right? Typically, they're more anti-correlated with one another, but right now it seems like so much of the equity market is driven by the Mag 7 and that performance that it's become a little bit more dislocated from what's happening broadly in the credit markets. And we've seen this really across the globe, not just in the US, that the standard credit equity relationship, you rotate out of one into the other, isn't holding up quite as much in this new AI era. There's a lot more at play here, and we've definitely entered a different regime when it comes to the relationship between credit and equity. I mean, we've seen a big regime shift in the relationship between a lot of assets. We've seen a big regime shift in the relationship between gold and equities, between the dollar and equities. So I think the standard playbook of we normally see certain correlations between one asset class and another, definitely, particularly with the Trump administration and with the AI regime shift, we can't rely on those past relationships quite as much going forward.
You guys buy into, we're seeing a rotation in the market, maybe starting last November, out of some tech, maybe into some of the better valuation stories, maybe into small and mid cap stocks. Is that what you guys are seeing?
So we're definitely seeing a little bit of earnings rotation occurring. What the expectation was heading into 2025 was that what we call the 493, the non-Mag 7 stocks in the S&P 500, earnings were supposed to accelerate for that group and decelerate for the Mag 7 so that they would roughly be in line with each other by the end of the year. That didn't happen. The thesis has been pushed out to the end of 2026 because of tariffs. But I think the consensus might be more on point this time because we don't have as much of the tariff tailwind happening in our direction, that we could see definitely some catch up in the non-AI stocks. That's at least what the consensus is thinking right now, that earnings are going to pick up in the non-AI space, decelerate, not decline, decelerate in the AI space, and we'll end up kind of on the same footing by the end of the year.
I'm so glad you bring that up because I feel like the earnings story has really moved on from the Mag 7. Yes, we'll be getting enterprise software companies reporting, but they don't move the market the way that the big tech guys do.
Yeah.
And then, of course, we're going to hear from consumer companies as well. And we know that we have a K-shaped economy, so it really depends on what kind of consumer you serve. How do you see that influencing the overall direction of markets and, the appetite for risk?
I think what's interesting about the consumer, and I've been following consumer and consumer sentiment for the past year, is one thing to note is that the consumer is pretty dour, right? Consumer sentiment has been basically near record lows for the past year. There's a lot of concerns about purchasing, but people keep spending and the balance sheets are strong. We had a delay in cash balance sheets for the households in the US because of the government shutdown, but we just got those numbers about 2 weeks ago. And what we're finding is that the consumer is still quite strong and still has quite a decent amount of buffer to spend. I think, again, it's Groundhog Day a little. Every quarter I hear, this is the year that the consumer is going to stop spending and retail sales are going to turn around. It doesn't happen because they're just sitting on so much liquidity and so much cash, and the stock market run has really helped. Net wealth for household balance sheets, so that's total assets minus total liabilities, is at a record high because of the equity run. So it's not just people who hold, let's say, stocks. Those are people that have pensions and 401ks that are tied to this. So people feel better. They feel like they have this buffer and they can spend more.
Jillian, thank you so much. Really appreciate it. Jillian Wolf, she's global equity strategist for Bloomberg Intelligence. She's on the 10th floor, but she walked all the way down to the 5th floor to Bloomberg Interactive.
On a Friday, no less.
On a Friday, no less. I mean, if I go up to the 10th floor, I'm not sure I'm going to see too many Jillians up there. We'll have to see about that. Jillian, thanks so much. We appreciate it. We got another data point last night in terms of how the market views this tech capex. Amazon, they have to take the cake. $200 billion in capex. That's well above what the consensus was. Guess what? The stock is trading down today. So let's get a sense of kind of where this tech spending theme is for this sector. Mandeep Singh, he joins us here. He runs all the tech research for Bloomberg Intelligence. For those, Mandeep, that were looking for another data point to say, how does the market view tech spending? Did we get it last night with Amazon and now the stock trading off today?
Yeah, I mean, this was as big as it can get in terms of, a capex number out of the hyperscalers, and probably because they went last in terms of, reporting earnings. But look, I think had they not gone that big, the stock would have been up because they posted best AWS growth in the last 3 years. And, sequentially, things seem to be improving. It's just that $200 billion number and the fact that their margins are going down on the AWS side, that's why you see this kind of stock reaction. And there wasn't enough justification to ramp up capex by about 55% to $200 billion.
Mandeep, how long are we going to see these massive increases in capex? I mean, this was for 2026 full year. I mean, are we going to see this for another 2 years, 3 years, or have we, is there an end in sight, I guess is the question.
So based on our work, at least so far, we feel this is the peak capex growth. You will still see growth, but it's not going to be of the same magnitude. I mean, 2026, we are talking about a year where capex from the hyperscalers will grow almost 60%. So, and last year we had 2024 to 25 was also 70% growth in CapEx. So we've gone from $200 billion of hyperscale CapEx to now $650 billion. I think that growth rate will certainly come down, but there's no doubt that, we are still in that part of the S curve where, there is more demand, and everyone has called out supply constraints, and they would have grown faster had it not been for, the limited supply they had for AI infrastructure.
So, Mandeep, you talk to institutional investors all around the world here that focus exclusively on technology. Where are they? Has their narrative shifted about where and when and to what degree this industry should invest in AI? Has the fundamental view of AI and how this tech industry is going to get there, has that changed among some of those big tech investors that are big shareholders in so many of these companies?
Yeah, I mean, right now you see both, anxiety and some sort of panic as well in terms of, the level of free cash flow that's going to get hurt because of this spend and how fast it's happening. I mean, the cloud market grew almost, 20% plus for a decade, and everyone was fine. You could see, predictable free cash flows. This is a very big upfront spend. And look, it makes sense that you have to spend first to build the infrastructure. But I think you really have to take a leap of faith that all these companies that are putting, $200 billion will see ROIC for their spend. And I think that's where there are question marks that some of them may not have that level of ROIC. So I think that's what's reflected in the panic so far. But there's no doubt that, workflows are changing, and there are some real productivity benefits you're seeing out of this spend.
We talk about these numbers and we throw them around like they're gospel. 650 billion from big tech this year, 200 billion from Amazon. I mean, it's kind of squishy at the end of the day, Mandeep, because this is a lever that companies can toggle. So I wonder how reliable they are. Ryan Horan, who's one of our listeners, wants to know, is the risk to higher CapEx from here, or is it more that hyperscalers can pull back on what they say is their CapEx plan?
No, that's a very good point. And look, a company like Apple so far has resisted the urge to spend on CapEx, and now that they are leaning on Google. So that's where, a Google raising CapEx made a ton of sense this earnings season, because one, they saw that steepest acceleration in cloud. In fact, next year could be 60% growth in their cloud segment. And also Anthropic and Apple are new customers, in terms of who will be using their compute. On the other hand, for an Amazon, you have to ask yourself, is OpenAI the buyer for all of the compute that Microsoft is spending on, Amazon is spending on, Oracle is spending on? Because it's going to come down to a handful of, foundational model players. Meta is on its own, it's spending, but it's not very clear OpenAI needs all this compute.
Mandeep, good stuff as always. Mandeep Singh, he runs the tech research thing at Bloomberg Intelligence. It's quite an offering, and we've got him all over the world of tech analysts, and it's a big story here. CapEx, do you like it? Do you not like it? The worm's turned a little bit, it seems, for these tech stocks. We'll keep on top of it. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, risk on after a really tough week for equities. The major averages all up over 1%. The Russell 2000 of small stocks, small and mid caps, that's actually the best performer among the indexes. That's up 2.5%. Robinhood Markets, best performing individual stock in the S&P 500, up close to 12% as crypto recovers a little, but don't get too excited. That's still down 47% since October. Amazon remains one of the worst performing individual stocks. Amazon shares down 7.5%, so recovering just a bit. Also, time for earnings analysis. 291 companies in the S&P 500 have reported so far. 80% delivering positive earnings surprises. 66% delivering positive sales surprises. Meantime, Priya Misra at JP Morgan Chase firmly focused on next week's jobs data.
We did see some data this week that made the market a little nervous about the job market. I mean, we know there's low hiring. If the firing starts to pick up, then the Fed is cutting a lot more than what is priced in. We're currently only pricing in 2 rate cuts this year.
The S&P 500, 86 points higher, up 1.3%, 68.85 in the index. The Dow up 867 points, and the Nasdaq 100, 282 points higher, and that is up 1.1%. Yield space, the 2-year up 5 basis points. That's at 350. The 10s up about 4. That's at 421. And just bringing this headline to you, it's not really unexpected, but the Gateway Commission.
All right, now this is getting serious, John.
Yeah, suspending construction of the new rail tunnel between New York City and New Jersey. I mean, if you live in Des Moines, you're like, so what? But a $16 billion project. It's been going on for a couple of years in the Trump administration, and especially Russell Vought at OMB. They don't want to pay for it, so they've canceled it. And, you know, my friends in construction are like, you can't just stop a project and maybe it gets funding, you know, somewhere down the road
That just
and
makes
start
it more
it up
expensive.
again. It just makes it more expensive, and you have to go out and bid for this stuff again. So it's a real nightmare. And it's like the stuff deteriorates as you've already built.
I tell you, these workers were cranking along, making unbelievable progress. It's none of this thing where one guy's working and 6 people are standing around watching. These guys are working like crazy.
And for the Northeast, this is a really important, the Northeast, which, you know, generates how much in terms of revenue for the nation as a whole. But
So if you take the Amtrak from Boston to Washington, D.C., the I-95 corridor, this matters to you.
yeah, and it's
if you don't want the tunnel,
one or two tunnels, and they're over 100 years old. But anyway, I digress.
we digress.
We
don't
check
get me
the
going on
markets and other stuff all day long right here on Bloomberg Radio. I'm John Tucker. We'll have to find some stocks that are related to this. You know, construction companies or something like that. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John. Well, maybe some of the construction workers were wearing Under Armour under their, construction wear. How about that
I don't know
connection?
where you were going with that.
That's a tough segui there.
Okay, well, I'm trying here. Under Armour, one of the companies that reported earnings, and in line with the gains in the broader market, the stock is up 11% right now. This is a company that is still very much in restructuring mode. Poonam Goyal is our senior U.S. e-commerce and retail analyst here at Bloomberg Intelligence, and she's got more on this. So how low was the bar, or did Under Armour knock it out of the park with this latest report that has its stock soaring 11%?
I'd say the bar was very low for Under Armour. There's been a lot of conversation about, will this turnaround take place? Will it be a sustained turnaround in the past few months, especially with the loss of Steph Curry? So I think the bar was low. They did post respectable numbers. I'd still say that I'm still not completely sold on the story. Their biggest region, the U.S., North America, sales were down 10%. They're expected to be down 8% in their fiscal year. So things aren't still, where we want them to be. And I've heard this narrative so many times where they kind of take out the low-hanging fruit, get the inventories right, get back into the right wholesale doors. We're repeating that. For me, it's a wait-and-watch situation still.
When a brand like this loses a spokesperson like Steph Curry, how material is that of a loss? to the financials?
It's material for basketball, right? If Under Armour is trying to make a stake into basketball and really compete with the Nike and even the Adidas or Pumas of the world, which have renowned basketball players supporting their brand, Nike notably so, the loss of Steph Curry is going to be a headwind. We estimate, and what we've seen just by industry estimates, is it's more than $100 million franchise that Steph Curry had with Under Armour. So that's obviously now not going to be there.
So we've also heard that the Warren Buffett of Canada, Fairfax Financial, has disclosed a roughly 22% stake in Under Armour. This came out about a month ago. How does that change how the company operates, how it moves forward? Do we presume that Fairfax is going to be an activist investor or have some ideas on what Under Armour does?
I'm sure they'll have some ideas. Right now, what we're seeing Under Armour do is follow the retail 101 playbook on a turnaround, which is let's get out of off price. Let's start selling more full price. Let's pick our wholesale doors and let's get product innovation front and center in front of the consumer. The question is right now that they can do that because they have very easy comparisons from prior years. As they begin to recoup and reset the bar, can they continue to grow and compete with the larger players, notably Nike and Adidas, and can they make a claim for their brand without leading sports personnel?
Amazon also reported last night, stock trading off, people not real psyched about $200 billion of CapEx, I guess, but how did the retail business do?
The retail business did very, very well. I think they're continuing to gain share. We saw an increase in online retail sales, low double digits. That was impressive and shows share gains. I think what's really neat about their retail business right now is all the investments that they're making in AI, especially Rufus. You know, it was interesting to me, and I guess I hadn't known this, is that Rufus can now execute an order for you. And that's pretty cool. If I say, I want, this stereo for $100. So watch the price. When it gets to 100, it just buys it for me. That's a new way to shop, and they're definitely leaping forward into AI and making the bets with Rufus and Alexa Plus, which I thought were pretty interesting.
I guess these would all be kind of value-added services from Amazon. Does that mean that they're going to start raising fees for Amazon Prime, for instance?
They've raised fees periodically. They're not ones to raise fees every year. So every several years, do we see a slight bump in price? We have, and the fees have gone up in the last 10 years, 15 years, quite substantially. But I'd say they're also giving you a lot more, right? With Prime Video, with just other things. They make the Prime membership, if you were ever to unbundle it, it's quite a great value that you're still getting. And they talked a little bit about everyday essentials now just being a bigger focus for them. It's surprising and it's mind-boggling actually that it's a $150 billion GMV business for them. That's pretty significant that 1 out of 3 purchases are everyday essentials. That just means that you're going to Amazon for everything. You're going
That's
there
their
for
white label brand,
needs.
right?
Yeah.
The everyday essentials.
I don't know.
It's like their supermarket brand.
I think so. So 30 seconds left here, Poonam. Based upon Amazon, maybe some other retailers you've heard from, how's the consumer doing?
The consumer is doing just fine. We have been waiting to see if the consumer will crack. We haven't seen that yet. The consumer is shopping, but they are being mindful and they're watching where they spend and how they spend it. So this is where brands like Amazon and the large retailers that have the power of scale to keep prices low do well.
All right, Poonam, thank you so much. We appreciate that. As always, Poonam Goyal. She is Senior U.S. E-commerce and Retail Analyst for Bloomberg Intelligence here. Coming up, we're going to check in with Randall Williams, Bloomberg Business of Sports reporter. He's out at the Super Bowl.
He's escaped the cold. He's going to be in California for the weekend and for a couple weeks, I think, afterwards.
Because the NBA All-Star Game is also out there, so he's staying for that.
Yeah, so lucky him.
He's doing all the business of sports stuff out there on the West Coast. So we'll check in with him, see what's happening out there. Right now, the markets are just ripping here. Higher, S&P up 84 points. That's 1.25%. The Dow's up 822 points, 1.7%, and the Nasdaq up 255 points. That's 1.1%. So, Bitcoin up 9.4%. That's almost $6,000 higher. We're now sitting right at $69,000 per token. And 10-year Treasury yields, they're up a little bit here, up 3 basis points, 4.21% on your 10-year U.S. government bond. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube.com. You know how to do that. And now you can also go to Bloomberg.com/videos, and that's where we find a lot of all the live video stuff coming out of Bloomberg, as well as all the archive stuff and all the podcasts and all that kind of stuff. It's all one spot there for you. Let's get out to San Francisco. Let's get out to the Super Bowl. It's really Santa Clara, folks, let's be honest, but all the fun stuff's happening pregame up in San Francisco. Randall Williams, U.S. sports business reporter. He's out there. We haven't seen him forever. I'm not sure we're going to see him again. He knows what's going on. He's out there in the West Coast, the warm weather. Hey, Randall, talk to us about just the buzz level for the Super Bowl out in San Francisco. You've been to a bunch. How's this one feel to you?
It's high. It's high. It's definitely more spread out, as you said. Santa Clara, San Jose, Oakland, they're sharing this. It's called the Bay Area Host Committee for a reason. But the hype is high. People are having a good time, and so am I.
There you go.
I'm curious as to the deal-making environment at an event like the Super Bowl. The Super Bowl is not just like the game itself. It's like all the people coming in, all the people like gathering. And I mean, there's a lot going on in this space right now. Big time professional investors in sports as an asset class. What are you anticipating some of the conversations to be like?
There are plenty of conversations. I've run into business people, bankers, all, athletes, agents, executives, all over. They're running around the city like sort of like it's a safari. And we're all just wild animals, having a good time. And, these meetings take place a lot of times in the evenings. I mean, while the way that it's set up is these venues sort of put one floor that's calm, and the higher you go, the crazier it gets. So there's plenty.
Hey, this is big for the Bay Area, big for San Francisco. One could argue.
Absolutely.
Not many major U.S. cities were hit harder by the pandemic than San Francisco. We're now hearing in the last year or so some positive reporting that San Francisco's coming back. What's your view as they stage this huge event?
Yeah, San Francisco has been incredible. To me, it's walkable. The weather has been amazing. Look, I've had great dinners. I've just had a really good time here. I think there's a lot of narratives out there about San Francisco.
Are we paying for this?
All right, go to the.
I'm coming back.
Here's my recommendation. Go to the Tadich Grill, Tadich. That's where you'll go. Get a cocktail, maybe get a steak. There you go. That's where it's old school Wall Street.
Absolutely.
Yeah, put it on my tab. It's open. Don't worry about it.
So it's not just the Super Bowl this weekend, right? Because you also have the Olympics opening ceremony in Italy today, in fact.
Yeah. And also, go ahead, Randall.
No, I was just going to say it's a huge weekend for NBC and Peacock. I mean, they have both the Super Bowl and the Olympics, and that's going to make for either a very fun time or an incredibly busy time for that production studio.
Talk to us about Santa Clara and this stadium, Levi Stadium. It's recently built. I've seen it. I go out to Santa Clara University all the time. What's that stadium like, and are they fired up and ready to host this big game?
Absolutely. That stadium cost $1.4 billion to build. They put another $200 million into it. I think they finished renovations probably at the beginning of last season. So it's a nice building. I went to a food and beverage tour earlier this week. The food was incredible. They had some prime rib. I had one of the best cinnamon rolls I've had in my life. All of this was for a show that I have called Sports City that launched yesterday. So you can watch on LinkedIn, and it's been a lot of fun. Levi Stadium is great. I'm looking forward to it. I just need to figure out where I'm sitting.
Oh.
Well, I mean, I'm sure you have plum seating.
Plum seating.
Absolutely.
Yeah, I'll make a phone call.
And AI is going to be, AI is obviously a big theme here because this is San Francisco, this is Silicon Valley we're talking about. But with that renovation of the stadium, that Levi Stadium, is this idea that they've really infused high tech into the offerings there.
Yep, they've upgraded the video screens, and outside of the tech, of course, they've added luxury suites and more seating. It's all to bring an elevated experience for customers who want to pay a premium price to sit in these boxes. And I think the technology is 100% part of it. They tout, their 4K screens, and they look pretty the other day.
Okay, and also there's a game happening on Sunday. Do we think this is going to be a high-scoring game? Or I mean, these are both like defensive giants, right?
They are defensive giants. I don't think it's going to be a high-scoring game. My prediction is 27-17 Seattle. I think the Patriots are a great team. They're also a little young. Their offensive line has been bleak, and Drake May has not played well in the playoffs, and the Seahawks defense has smothered everyone except for the Rams. And when it came time for crunch time, they smothered the Rams too. So I have the Seahawks, and this will probably be Jody Allen's swan song.
Whose swan song? Oh, yeah,
Jody
yeah.
Allen. She is the sister of the late Microsoft co-founder Paul Allen.
That's right.
Who died years ago.
No. To follow on that, we could see a sale of the Seahawks after this game then, if they win or if they lose.
I think industry insiders predict a sale, regardless of what happens of the result. And when that could happen, now, if you ask the Seahawks themselves, they will tell you that this team is not for sale, as we've reported, as ESPN has reported, and so many other people. But if you ask people around the league, they will tell you that, look, the Seahawks will be for sale later this year. And so, I don't think there's going to be a battle over, if it's going to be for sale or if it's not. But I do think that Paul Allen had in his will that this team would one day be for sale. The Trailblazers sold last year.
Yep.
And so the signs are pointing towards a Seahawks sale sometime soon.
All right, Randall, have some fun out there. There's a football game. Have fun at the game, too. Randall Williams, U.S. sports business reporter for Bloomberg News. He's out there in San Francisco.
Eating his way through the city.
Yes, eating his way through the city.
Apparently.
It's a great city to do that into. I love San Francisco. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Intelligence team here at the Bloomberg Interactive Broker Studio from Midtown Manhattan. Paul Sweeney and Scarlett Fu with you in the second hour of Bloomberg Intelligence. A lot to get through with markets rebounding. Equities have not erased their losses for the week, at least for the S&P 500 and the NASDAQ, but the Dow is higher for the last 5 days. We are seeing gains across the board. We'll get into that in a little bit, but there's plenty of earnings which is demanding our attention. We're going to check in with Ken Shea, our senior consumer products analyst, to talk about Philip Morris results. Philip Morris, of course, a consumer staple company. That kind of company has done a little bit better in this week's declines. Ken Belson is the author of Every Day is a Sunday. And of course, there's a big football game on Sunday. So we'll get his take on the business of sports and the business of the NFL. And it is Munis in Focus Day. We're going to check in with Shruti Singh, our Muni finance reporter, to discuss the latest moves there. And Adam Minter, he's a Bloomberg opinion columnist, talking to us about the Olympics, which also will have their opening ceremony just this afternoon. Olympic crisis is coming for Team USA. So looking forward to that conversation. And my co-host on ETF IQ, Eric Balchunas, our senior ETF analyst here at Bloomberg Intelligence, will wrap things up with his outlook for ETFs. First, though, John Tucker has our markets and Bloomberg Business Flash.
You said the Dow was higher. It's not only higher, Scarlett. It's at a record.
What? Really? Wow.
Yes. Dow Jones Industrial Average, 844 points higher, up 1.7%, 49,756. You know where I was when Dow crossed 10,000?
Wearing a hat?
Right here. So, yeah, had a good ride. Are we bouncing off the bottom? I don't know. But after a tough week for equities, definitely risk on today. You have makers of the stuff, the gear used in artificial intelligence computing, rallying after that big spend by Amazon, $200 billion for 2026, far exceeding the average analyst estimate. Those are the spendees like NVIDIA, right now up over 6%. Now, the spender, Amazon, lower, but off the worst level of the session, down over 7.5%. Consumer staples also increasingly becoming one of the prime beneficiaries of investors who try to seek AI-proof stocks. The consumer staples by far the best performing sector. That's up over 5%. Meantime, Brian Levitt at Invesco says the latest market gyrations, well, they're healthy.
What you're now seeing is a market that's become more discerning regards to who's going to be the software winners within it, but increasingly optimistic about the ongoing build.
And right now, the S&P 500, 89 points higher. That's up 1.3%, 68.87 there. The NASDAQ 100, 302 points higher, up 1.2%. And again, the Dow up 894 points, 49,804. I guess I'll do a Bob update. Bob's Discount Furniture finished the day little changed. Trading debut on the New York Stock Exchange. They had a market value of $2.2 billion based on the outstanding shares. They intend to use the IPO proceeds to repay a $350 million loan. So,
well, they are owned by private equity, or were owned by private equity. So
yeah, so
there's some debt there.
Stock up 5% today. So it was kind of steady yesterday on the opening. Rate stayed right at the bid, but then it's trading up 5% today. That's good.
And I'll do Jennifer Garner's snack company. There's an IPO there too.
What's it called?
Once Upon a Farm. How about that? Stock symbol OFRM. I've been following it this morning. What can I tell you?
We'll go to IPO Corner.
Yes.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
Well, let's just finish this up. Once Upon a Farm priced last night at 18. Not open yet for trading. Indications 21.22. So there you go. That could be a good first day trading. It helps when the Dow's up 1.8%.
I'm just looking at the management, and Jennifer Garner is the chief brand officer and co-founder, and not the CEO.
No.
John Forker is the CEO.
Kid-friendly pouches of fruit and veggie pure. Oh my God, this sounds disgusting. Puree.
No, pureed is good.
Really? As well as bars, frozen meals,
you don't need tea for pureed food.
and smoothie packets.
You know what my lunch was for 8 years, first through 8th grade? Bologna and cheese sandwich, chips, and like a little thing of milk. That was it.
Yeah.
Look how well that turned out.
The cafeteria at St. Mary's. Yeah, that was not gourmet.
This was Blessed Sacrament, Trenton, New Jersey. That's how we rolled back in the day.
Anyway. All right, Nora, save us here. Nora Melinda.
I'll see what I can do.
Yeah, she's been listening quietly to all this, wondering how this is going to segue to what she covers. You've got our stock movers. What are we looking at?
Well, let's look at Amazon. This is ticker AMZN. We've been watching this stock very closely. One, because it's a big name, but two, because this stock is plunging for its worst day since August of 2024. This is after the company announced plans to spend as much as $200 billion this year on data centers, chips, and other equipment. We've really been seeing a lot of these tech companies being punished for this, but it seems like it's a bit mixed. It depends on the name that you're talking about. I know that we did see Alphabet getting some pressure for this. Clearly, Amazon also seeing the same. We are seeing shares of the stock down about 11% so far this year.
All right. What else you got for us here for the stocks? How about Stellantis?
Yes.
Oh, my goodness.
Let's talk about some automakers. Ticker STLA. Brutal day. We're seeing shares down about 22% right now as we speak. Earlier, plunging as much as 26%. This stock is hitting and falling for its worst day ever, lowest level since 2020. This is after the company said that it's taking more than $26 billion, that's USD, in charges, mainly linked to reverse in the course of its EV strategy. I mean, we've really been seeing a lot of people putting this bet on EVs, and we haven't really been seeing it paying off for some of these companies. Stellantis has obviously been one of those that's been struggling with this. Stock is down 32%. Just this year alone. So really seeing struggling. But I mean, when you look at the numbers too, it is important to note the stock is just around $7. So you do see these big moves when we think about a percentage basis, but also important to note the value of the actual stock as well.
All right, you're also including an ETF in your stocks to watch. And this is one that I've heard this ticker all week long.
Right. I mean, it's Friday, so I feel like we kind of have to do a little bit of a recap on the week. I've been looking at this ETF that you mentioned. IGV is the ticker there. Software stocks, I mean, there's been so much in play this week. We are seeing a rebound today for this ticker, earlier rising as much as 3.2% for its best day since September, but it's still struggling. I mean, the stock or the ETF is on pace to end the week for its worst week since 2008, losing as much as 12% in value. So, I mean, we have our colleague Bill Maloney. Of course, he is a chartered market technician and a strategist here who writes for Bloomberg. And he was just talking about the fact that it seems to have notched a short-term bottom after falling just 5%. That was yesterday. But it's interesting because we do see that it did have 2 straight days of record volume with over 40 million shares changing hands in each session.
Guys, ये क्रूड ऑयल में देखो यहाँ पर हाफ प्रॉफिट बुक कर लो, अगर चाहो तो पूरा प्रॉफिट बुक कर सकते हो। वैसे तो अभी टाइम है 9:30 हो रहा है, 2.5 घंटा और है, बट मुझे लग रहा है शायद मार्केट साइडवेज जा सकता है। यहाँ पर देखो कोई रेजिस्टेंस नहीं है, ठीक है, इस एरिया पे कोई रेजिस्टेंस नहीं है। नेक्स्ट मेजर रेजिस्टेंस 30 मिनट में जो मुझे दिख रहा है वो 6030 to 6050 के अराउंड ही दिख रहा है। अब वहाँ तक अभी जाएगा, वेरी रेस्ट चांसेस, 400 पॉइंट अभी मूव कर जाएगा, 200 पॉइंट और अनलाइकली है, तो लगभग 200 पॉइंट का ये टारगेट है, इसी को लेके चलेंगे। बाकी नेचुरल गैस देखो आ जाता है नीचे, तो है ये रेजिस्टेंस पर ही, स्टिल होल्डिंग द रेजिस्टेंस, ठीक है। मैं एक्सपेक्ट कर रहा हूँ कि नीचे गिरे, यहाँ से कहीं अगर सपोर्ट ले ले और फिर ऊपर जाए तो बेस्ट है। सो नेचुरल गैस मोस्ट प्रॉब्ली साइडवेज, बट या इन क्रूड ऑयल फाइनल टारगेट वैसे 6050 30 तक का है। मुझे लग रहा है बीच में हो सकता है 15 मिनट में कोई रेजिस्टेंस हो, दिख नहीं रहा है वहाँ पर एक्चुअली, तो यहाँ पर पूरा प्रॉफिट बुक करके निकल सकते हैं, या फिर अगर हाफ प्रॉफिट बुक करेंगे तो ओवरनाइट फिर रिमेनिंग पोजीशन लेके जाना। बट याद रखना कल और परसों मार्केट क्लोज है, ओवरनाइट कुछ न्यूज आ गई तो हो सकती है, ठीक है। बाकी मैंने पहले भी देख लिया है, यहाँ पर कोई रेजिस्टेंस मुझे नज़र नहीं आ रहा है, सो ध्यान रखना जो लोग ट्रेड कर रहे हैं, बुक द प्रॉफिट और इफ वांट टू ट्रेल फॉर ओवरनाइट पोजीशन ऑन फॉर मंडे। अब क्योंकि मंडे को ही ओपन होगा, कल परसों मार्केट क्लोज है, तो थोड़ा सा अपनी पोजीशन साइजिंग का ध्यान रखना, ठीक है। हो सकता है मंडे को गैप अप मिले, हु नोज, या हो सकता है नीचे सपोर्ट ब्रेक कर दे और फिर सीधा 5350 तक जाता हुआ दिखे। लेट्स सी, मंडे को देखेंगे। अभी के लिए यही लेवल है, यही टारगेट है, इसमें और कोई मुझे नया ट्रेड अभी लग नहीं रहा बनने वाला है। मोस्टली मैं नेचुरल गैस को वॉच कर रहा हूँ कि ये थोड़ा नीचे आ जाए तो बेटर, या फिर ब्रेकआउट कर दे प्रॉपरली और 350 355 के अराउंड चला जाए, दैट विल बी अ सेलिंग जोन।
Investment is needed for us to see that return that investors want.
Yeah, hi, Scarlett. Well, Philip Morris really took a big step before its peers when jumping into the smoke-free opportunity years ago with what it's calling IQOS, IQOS. That's its flagship family brand, I guess you can call it. It's pretty much sold around the world, pretty much in most of the markets that it sells cigarettes. And it's already comprised more than half its sales in some pretty big markets, Japan, South Korea, and some others. So it's really caught on well. And basically what it is, it's a device, it's a device that you use to get the facsimile of a cigarette smoking experience, but you use little plugs you put in it. So the business is really selling the plugs once the device is in the hands of the consumer. That's doing really well. That's the biggest piece of that business. The second is it's what it calls its nicotine pouch business. In the U.S., people probably know it by Zyn. It's a round plastic can people put in their pockets, and they can very discreetly get their nicotine hit that way. It's been really popular, doing really well. And the third, kind of more of a distant business for them, but one they want to be in, is their e-cigarette business. They call it the closed pod system, sort of like the Juul. Their brand is called Vive. It's kind of a low-end, low price point way for consumers to get into get their nicotine fix, but it wants to be in that business because it wants that brand to be out there as an alternative to smoking.
So just real quick there, is that where the growth is for this company going forward in the broadly defined smokeless part of the business?
That's right, Paul. It's already around 42% of their sales.
Yeah.
Believe it or not a lot of people in the U.S. know about it because IQOS really isn't sold in the U.S. yet. They're waiting for FDA authorization to roll out its Illuma IQOS system. And then people will really know more about it in the U.S. But it's, over 40% of their business. It's over $16 billion in sales. So that's why they're bringing transparency to that business. It's a big business. You know, I think what they're implying, down the road is that maybe they can separate the businesses, that is their combustible business from its smoke-free, because they have different investment characteristics.
All right, good stuff. When people referring in social media to Zin, for the longest time, I thought they were talking about Zinfandel. I didn't know I was talking about the Zin pouches.
The white
there
wine.
You go, learn something. So we appreciate it. Ken Shea covers all the consumer products companies for Bloomberg Intelligence. Want to get back to the Super Bowl. It is Sunday, a big game, huge media event. It's just become an event. 2 weeks to gear up for it. It's become just a monster event. And here we are, Super Bowl 60. Ken
It's like
Belson
a national
joins.
holiday, by the way.
It is. Well, go to that next year when they go to 18 games. It's going to be on President's Day weekend. That Sunday.
Which makes a lot more sense because most people don't show up to work the following Monday anyway.
Right. Ken Belson joins us, New York Times business and NFL reporter and author of Every Day is a Sunday. Joins us from San Francisco via that Zoom thing. Hey, Ken, I tell you, there's so many storylines here for this game. One of them to me is the Patriots are back. After that huge run they had with Belichick and Brady, now they're back again. I mean, Robert Kraft, that's a pretty good success story right there. What do you think?
Yeah, most owners don't get second chances like that. The Steelers might be one example where you go a decade or two and then they come back. But in NFL terms, their rebuild, if you will, in New England has been incredibly rapid. They're pretty disciplined, I think, in the sense that they obviously picked a good quarterback, but they have a lot of no-name players who play very well. So I think they surprised a lot of people, but I think they deserve to be here.
As an owner, what is Robert Kraft doing that enables the team, the franchise, to be able to be so successful on the field?
Well, this goes all the way back to when he bought the team in 1994. He and his son, Jonathan, have always had a very analytical approach. And they came in 1994 when the salary cap first started. And that's all about assigning value to a player in a very sort of methodical way. You only have so much money to spend. And so they were actually kind of ahead of the curve in terms of having or trying to understand how much cap space they'd have, how much salary, how far they can get it to go, how to stretch it and so forth. So they're very disciplined investors, if you want to call it that. And that was, a lot of other teams, it was mostly based on a hunch, relationship between a coach and a player, GM, so forth. So they were kind of ahead of the curve, and I think that's paid dividends over the years.
Ken, what do you make of the Seahawks this year? They have played so well. I think they're about a 4-point favorite here. What's the buzz out in San Francisco about these Seahawks?
Yeah, it's very much, this may be by the fact that we're on the West Coast, but it feels much more like a Seahawks dominant game. There's many more fans here. You can tell with their jerseys. And, they don't get to the Super Bowl every year. They haven't been there since 11 years ago when the Patriots beat them in Arizona. So there's a lot of buzz. They have a very good defense, the best in the league this year, and a quarterback who seems to have found a second or a third life in Sam Darnold. So they have a lot of great pieces, but when everybody's betting on one team, it's usually a good bet to take the other team as well.
Yeah, and I'm sure a lot of sore 49ers fans, given how the 49ers did versus the Seahawks this season in the playoffs. Ken, I want to ask you about international, because this has been a huge topic for fans, for the teams, for the owners. The Cowboys will play in Mexico City. San Francisco and LA will play in Melbourne. The Saints will play in Paris. How much further does this go? Are we going to start to see more than just one token game per team overseas?
Well, their goal is to get to that 18th game you mentioned earlier. They're not there yet. They need the union to reopen talks on the contract to allow for an 18th game. But if they get there, they want to go to 16 overseas games a year. They'll be at 9 next year. So they're not quite there yet. They basically want every team to take at least one international trip a year. Melbourne is a long way to go. It's 14 hours from the West Coast here. So in terms of a regular rotation of games, it's, an East Coast team's going to have to fly 5 hours to the West Coast to get to the 14 hours. So there's only so many windows they can get that into. Having said that, they've returned to Mexico City. It's a very good market. There's a lot of American-style football in Mexico, and that stadium had to be refreshed partly for the World Cup. And so the Cowboys, perfect team to go down there. They have a huge following in Mexico. So the NFL is sort of placing teams not just to break ground in new markets, but to really bring the most popular teams. And of course, the Saints in Paris, given their heritage in New Orleans, makes perfect sense as well.
Yep, the NFL knows what they're doing yet again. Ken Belson, thanks so much for joining us. Ken Belson, he's a New York Times business and NFL reporter. He's also the author of the book Every Day is a Sunday. He's out there in San Francisco with the Super Bowl. Markets continue to hold to their gains. The Dow's up 90 points. That's 1.4%. The Dow's up 875 points, 1.8%. And NASDAQ up 310 points, 1.4%. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Let's start with NVIDIA. This is a stock that benefits when everybody starts spending on artificial intelligence. It is up close to 7%, also among the most active They have a huge share of the market for AI chips, something like 85 to 90%. NVIDIA is also in the Dow Jones Industrial Average, and it's a leader in the Dow, and the Dow at an intraday record. Right now, up 889 points, a rise of 1.8%, 49,795 on the Dow. And when everybody wants to run and hide from all the volatility this week in tech, they run to consumer staples. Philip Morris is one of those consumer staple stocks. That's up 2%, reported higher profit in the fourth quarter. S&P 500 right now, 96 points higher. That's up 1.4%. It's at 68.94 on the index. The NASDAQ 100 up 374 points, and that is a rise of 1.5%. Let me do the yield space because they're higher. The yields 2-year, which is more policy reactive, it's up 0.6%. Right now at 350. The 10s are up just about 4 basis points. That's at 421. And down to Bitcoin, still under 70,000 a token, but it is up 10% today. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Big news out there today for us in the metro New York area. New York, New Jersey River Tunnel project, the Gateway project, suspended after President Trump blocked funding here. What does that mean for the municipal bond market? I don't know, but let's just go do a muni bond. Take some cash and get this thing going again. I don't know. Shruti Singh joins us here, municipal finance reporter for Bloomberg News. She's based in Chicago. Shruti, is the municipal bond market financing any of this Gateway Rail project in the greater New York, New Jersey area?
I think the bigger concern right now is in terms of the federal flow of funds.
Yep.
The difficulty with that is what has halted the project today. A lot of infrastructure projects are funded in various ways, and federal funding for transit projects is actually a very key component. And I'm based here in Chicago. We certainly have, questions about federal funding going forward for projects here. But this is today in the New York area is sort of the biggest, evidence of some of these challenges.
Yeah, they just basically halted work after 2 years. And
so
getting it started again is going to be massive.
In about an hour's time, my train's going to go right by this thing as I go back to shore. So I would report in if they're there, but I'm guessing they're not there now.
No, there's no funding.
Okay.
So that's part of it. All right, so Shruti, we're going to go ahead.
Yeah, I was going to say that that's exactly what's on the minds of a lot of people, I think, whether it's in New York or in other parts of the country, is that, how are these types of delays or challenges going to impact commutes for everyday people, right? And so that's what it really gets down to, is that what happens next, this isn't going to be something that's going to impact your daily commute today, but this is part of the longer term sort of effort to fix congestion and figure out how public transportation plays a role in all of our daily commutes.
Absolutely. And we should mention that New York and New Jersey are seeking a temporary restraining order that would force the administration to continue funding the project. There is a hearing set for federal court in Manhattan on Friday afternoon.
Okay, very good.
We'll watch to see if that results in anything. Meantime, Shruti, you have also written about how in your backyard, the Chicago Bears are now the focus of a new push in Indiana's House of Representatives. They're looking at trying to lure Chicago over to the neighboring state.
Yeah, so I've been following the winding road of where the next Bears stadium is going to be for a few years now. Initially, a few years ago, there was questions about whether the stadium was going to be built in suburban Arlington Heights. The Bears actually own a property that's about 326 acres just in the northwest suburbs. And initially there was a lot of expectations that that land was going to be transformed into a stadium. Then there was a proposal to build a stadium along the lakefront, not far from where the current Soldier Field is. Then it went back to Arlington Heights. But there has been some challenge in terms of the talks between state officials and the Bears. And then Indiana has come along and now is proposing legislation that the Senate in the state has already approved to create a stadium financing facility. Illinois actually already has something like that. This legislation in Indiana now, like I said, passed the Senate and now is in the House, and it's going to be taken up. There's hearings expected, and potentially there could be a vote by the end of this month.
So, all right, here in the New York area, both our football teams, the New York Jets and the New York Giants.
Don't play New York.
They play in New Jersey. Their practice facilities are in New Jersey. Their offices are in New Jersey. And I think if you ask anybody involved with either team, they would say not good. But that's the way it is. So, rethink that Indiana thing, perhaps. Illinois Governor J.B. Pritzker is reviving a proposal to fully fund the state's pension system by 2048. How does the math work there?
Well, one of the things that's happened in Illinois over course of many decades was that pensions were underfunded. And about 5 to 10 years ago, the state of Illinois, along with large cities such as Chicago, started to ramp up their contributions to increase the funding levels for their severely underfunded pensions. The reason it matters is that it is a very large portion of the municipal budgets. In Illinois, for example, $1 in $5 maybe goes towards pensions in terms of the overall budget. So it's a big chunk. Now, this is something that the governor has been looking at since the beginning of his first term. He's currently looking to for voters to return him back to the office for a third term. Now, what he is proposing is that leveling up that mandate from reaching 90% funding in 2045 to fully funded in 2048. To put that in context, these pensions are currently funded at below 50%.
All right.
Good luck.
Yeah, exactly. Good luck with that. Shruti, thank you so much. Shruti Singh is our municipal finance reporter joining us from Chicago with the latest from the muni market. Paul?
All right, very good. We got the Olympics cranking up here, opening ceremonies today. I was watching some of the stuff last night. I'm all fired up for the luge and the skeleton. But there's some issues going on there. So the ceremonies are today, but a quiet crisis is looming due to dozens of Olympic sports being cut from college athletic departments. And what does that mean for the future of some of these sports here in the U.S.? So let's go to our Adam Mintner. He is the opinion columnist for Bloomberg News. He's joining us via a Zoom from Minneapolis. Adam, which sports are folks most worried about here?
It's a range of them that are connected to the NCAA. So swimming and diving, wrestling, lesser, lower profile sports like men's gymnastics, men's volleyball, all sports that have had big time NCAA support over the years. We're seeing schools cut funding for these sports, which previously had been critical to actually supporting them as U.S. Olympic teams.
Paul, I got to tell you a story. My neighbor, the kid won a scholarship to a school down south for swimming.
Yep.
All set to go. It gets a word from the coach. The swimming program's been cut. It's just like, what do you do at that point?
That happened. So, Adam, is this tied to the name, image, and likeness kind of situation where all the money that kind of goes to football and basketball?
Yes, that's exactly it. And it since 2021, NCAA athletes have had the ability to earn money. And as of this past season, schools have been paying athletes directly, revenue sharing, to find that money because they can pay up to $20 million a year. Just last season, they're taking money from programs that we consider niche sports that don't make a lot of money. Again, men's swimming and diving, women's swimming and diving, these sports and cutting them. And so you're seeing exactly what was just said. You're seeing athletes cut, entire programs cut, and that cuts off the pipeline, one of the traditional important pipelines for Olympic athletes, both at the Summer and Winter Games.
In your column, you talked to us about curling. They don't have any institutional backing. We have some success in curling.
They do not have institutional backing, and they've done spectacularly. In fact, they're doing really well at this Olympics. Though the opening ceremonies haven't started yet, the men's and women's mixed double team is undefeated, and they look to be pretty close to breaking into the medal round. The way they've done that is they have a system of independent clubs. They have a system of independent championships, starting with an under-18 championship, and they have built up their own infrastructure to create elite athletes beside grassroots athletes, and they they kind of feed into each other. It's a low-cost method of bringing elite athletes up to Olympic level, and it wouldn't work for every sport. It wouldn't work for luge. I mean, there's fewer than 20 luge tracks, bobsled tracks in the world, but you can build clubs for sports in other places. It could be wrestling, it could be track and field clubs, it could be swimming and diving clubs, and curling has proved it works.
Well, I'm wearing my Duke pullover today, so the model that I'm familiar with in some of these bigger schools is football, and in the case of Duke, basketball. They fund everything else, and that's kind of always the way it's been. Why does that model not work?
Well, it's as we were saying earlier, it was a great model for the years that it worked. It funded everything, as you said.
Yep.
But again, schools now are allowed to pay their athletes revenue sharing up to about $20 million. Next year, it'll be a little bit more. And that's a lot of money. And it's for schools that want to be competitive in football and basketball, that's not voluntary. If you want to be competitive, you need to be offering that money to your football and basketball players. But where that money comes from is the real issue. And it's coming from, swimming and diving programs. It's coming from track and field programs. It's coming from other programs that are not revenue generators, that are negative revenue, as the athletic departments call them. And so for these schools that look at football and basketball as sort of the front porch of their universities, it's a no-brainer. They're going to ensure that money flows into the big programs that aren't really medal contending U.S. Olympic programs, and it really hurts the development prospects for athletes in lesser sports like swimming.
Is there any solution here being talked about?
There really isn't. I mean, there's been talk of action at the congressional level, giving the NCAA antitrust protections so that they could actually mandate salary caps and then allow for more money to flow into these niche sports. But that's going nowhere in Congress. There's lawsuits. That's a crapshoot. And so, that's kind of why I took a look at curling as a model. Is these clubs have been really successful, and they work as well in track and field and wrestling. Not, there's still robust NCAA programs, but it's an option, and I think it's worth looking at.
Very good, Adam. Really fascinating stuff here tied to the Olympics here. Adam Minter, he is opinion columnist for Bloomberg News. I know at my undergrad, University of Richmond, they made the decision to cut men's soccer so that they could fund men's lacrosse, and it's been a huge success because lacrosse is so popular in many parts of the country, and there's a lot of money behind lacrosse, and a lot of families will do anything to have their kids play lacrosse, and its passion is unbelievable.
And the YMCA has taken up a lot of the slack at swimming. I know that.
Yes, yep, absolutely. So we'll see how that plays out. A lot of changes in collegiate athletics. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. All right, let's go right to a Bloomberg Business Flash. John Tucker's going to lead the way here.
All right, we are higher, Paul. Renewed wave of dip buying, spurring a rally in tech stocks. Volatile week for stocks, ending with risk on. So much risk on that the Dow Jones Industrial Average is up 948 points, up close to 2%, 49,860 points right now. And Paul, that is an intraday record.
Yeah.
Helping
50,000 watch, by the way.
Well, not too far away. Helping push it higher. Shares of NVIDIA among the most active. That up close to 7% right now. And Amazon shares suffering after announcing that record spend on AI stuff. Meantime, Veronica Clark of Citigroup Global Markets focused on next week's delayed jobs report.
We are expecting seemingly stronger job growth in January. We're at 135,000. Obviously would have gotten that this morning, another jobs Friday that wasn't. But I would take that number with a lot of caution. There has been a very clear pattern of residual seasonality around December, January, start of the new year.
And right now the S&P 500 up 103 points. That's a rise of 1.5%. At 69.01. The tech-heavy NASDAQ 100 up 407 points. That's a rise of 1.7%. Again, the Dow intraday record here, 939 points higher, up 1.9%, 49,849. The ice, snow, bitter cold stressing all of America's grid in recent weeks. But you know what's taking the place when the power goes out for a lot of people?
What's that?
Your car. Electric vehicles have started to fill the void as emergency power sources. This according to Cox Automotive. Drivers have purchased about 630,000 EVs that discharge electricity at levels strong enough to power a home or an apartment. So you can plug your house into your car, I guess. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Paul.
All right, John. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and also streaming on Bloomberg.com/videos here. Bitcoin ETFs finally faced their first real stress test, and investors headed for the exits. Since October 10th crash, U.S. spot funds have shed nearly $7.2 billion, with another $1 billion pulled in January. Wow, as Bitcoin slid below 80,000. Eric Balchunas joins us here, senior ETF analyst for Bloomberg Intelligence. Eric, does that surprise you that gold ETFs were just like everybody else and were selling? Bitcoin ETFs?
Yeah, that was James's note. There was a touch of sensationalism in that note. I told him about it. We're trying to get reads, Paul. So
yeah, I know.
Anyway,
I know the game.
So you know the deal. So if you look at the assets, it is a lot. $7 billion is no joke. However, that's only about 6-7% of all the assets. So you could argue that over 90% of people stayed in.
Okay.
Judging other sell-offs that are similar, like one time gold, GLD, went down 40% in 6 months. It lost 33% of its assets. So there's been some, cases where more people leave. Then there's also been cases like ARK where more people actually stay than we thought. So generally speaking, though, it doesn't really surprise me. I think many ETF investors, this is a tiny allocation. This is a little hot sauce on an otherwise very boring Vanguardian type portfolio. For crypto people, it's more brutal because it's their whole deal. It's like their whole life. For the average ETF investor, this is a speculative dash on top of a meal. They probably expected it to go up and down. However, it doesn't take the pain away. You'd rather it go up. So we'll see what happens. But I would say, 7-8% of the assets leaving is pretty good, comparatively speaking. We'll see where, a little more, we could see a little more come out.
And we see Bitcoin, as John's been reporting, up 10.5% today, $6,600 on the upside. Now sitting just below 70,000. Yesterday or earlier this morning, we were at 60,000. So just a huge, huge move there. And so, Erica, is the expectation that most ETF funds, how sticky in general are ETFs in any particular security? Is it any different than a mutual fund, would you say?
Very different. And I'll tell you why. ETFs, you had to find an ETF.
Yep.
ETFs do not pay anybody to sell them. So basically, in the mutual fund world over 50 years, brokers were given loads, right? They were given money to put investors in the fund. And a lot of those funds had a lot of costs. They underperformed. And so people kind of had a bad taste in their mouth. ETFs come out. They're all priced at the institutional class level. So they're very cheap. And you have to go find them, right? So typically, if you find ETFs, you're like a with it investor. And they generally are stronger hands, even in the stock market sell-offs. Like, how about the last 12 months, like with the tariffs? Equity ETFs continue to take in money. So they're very hard to perturb these investors. I've always thought they're probably the strongest hands or the wisest investors out there. We could debate that, but the flows show they're pretty sturdy. There are things they will leave, though, like thematic ETFs come and go. So it's not everything across the board, but generally speaking, if they commit to something, they're pretty reliable.
If I'm an RIA, what is my incentive to put my clients into ETFs?
Yeah, this is a great point, and this is the reason ETFs are so popular. Advisors used to get paid. They used to get that money from the mutual fund, a commission. Now they scrap that model and they get a percentage of the client assets. So if you get 1% of your client's assets, all of a sudden the fees come out of your money too. So you're on the hunt for the cheapest stuff all of a sudden. So it does put the advisor more shoulder to shoulder with the client. And that's called the fee-based model or fiduciary model. And that is almost perfectly correlated with the rise of ETF assets. And we've tested this across the world because it doesn't happen as much in other countries. But once you get those fee-based advisors, ETF assets will follow.
Hey, Eric, John Tucker here. I just wanted to ask you a quick question about the comparison between Bitcoin and gold ETFs, because a lot of Bitcoin investors said it was what did they say? It was the gold,
digital gold or something?
The electronic
digital
gold Bitcoin. What's been the performance difference between a gold ETF and a Bitcoin ETF?
Yeah, well, in the last year, it's no contest. However, let's look at 2023 and 2024. Bitcoin was up 450% in a 24-month period. Gold was up like 20% or something. So, it depends on when you look. Go over 5 years, they're about even. So it's, I always thought gold and Bitcoin are a little like the Michigan-Ohio State rivalry. They hate each other. It's like real angry emotions between the two. And whenever one wins, the other spikes the football. Right now, gold is having a nice run in that sort of rivalry. But I think they're both useful. I always thought Bitcoin is like teenager gold. Gold is 5,000 years old, right? It's quoted in the Bible, right? Bitcoin is 17 years old. It's literally a teenager. And if you know 17-year-olds, they're very volatile. So that's how I see the two of them. So I would look for anybody who's looking for a debasement trade. They both can work, in my opinion, but one is going to have a lot more volatility, both in the downside and the upside. And I think that's the choice investors have to sort of like weigh.
There's no reason to believe this volatility that we've seen, in the recent months in Bitcoin will impact flows into like the IBITs of the world.
Yeah, it will. I mean, the more something's down, the less fish it attracts, right? If it goes up, it just, I don't know, price informs narrative. And so right now, I just think you want to hope to have like no flows. If it starts going up, you'll probably see some inflows come back. But, as I was telling somebody, the Qs launched to 1999. And Paul, I think you're old enough. I'm old enough to remember. I think you're still in your 20s. So,
sure.
But I'm old enough to remember how bad the dot-com bubble was. So the Qs took in like a bunch of money, was up 100% in its first year. And then boom, that hit and it went down 50% in a year.
Yep.
Then it didn't return anything in the 2000s. Look forward today, it's like the fourth biggest ETF. It's been up a ton. So I think it's a long road for these things. And I think IBIT with its liquidity, BlackRock, it's going to be here and it's going to be available for people when Bitcoin's having a good time. It'll take inflows. When it's going down, it'll probably see some outflows. That's been the tradition with ETFs. And I think this will be no different.
I learn something every day, every time I talk to you, Eric. Thank you so much for giving us a couple minutes of your time. Eric Balchunas, Senior ETF Analyst, Bloomberg Intelligence. Folks, if you want to learn about ETFs or just get smarter about ETFs, and I'm in that camp because this is a new asset class, read Eric's stuff. It is unbelievable. He and his team, they just kind of lay it out for you so you can really understand it and what the puts and takes are for that. Atlanta Fed President Raphael Bostic says it's important to keep interest rates at a level that returns inflation to 2%. Bostic, who is set to step down from his role at the end of the month, adds that he is, quote, cautiously optimistic and, quote, about the economic outlook this year. He spoke earlier to Bloomberg TV's Mike McKee in an exclusive interview on Friday about the economic mood in his district. Here's some of those comments.
For today, I think most businesses and most households are not thinking that the worst of the possible outcomes are going to happen. They're not sure they can get to the best ones, but everyone's trying to find a steady state where they can get through. So I think the sentiment is one of cautious optimism, but I'd put emphasis on the cautious as opposed to the optimism. I think people are really trying to wait and see what happens.
Well, what do you think that means for the economy?
Well, I think it means that the things that we've seen for the second half of 2025, we will continue to see through 2026. And I've talked to a lot of folks over the last 6 weeks or so, and they said, we think our experiences in October, November, December are likely to move on. And then there are some reasons why they think it might actually get stronger. The tariffs, people have gotten used to those. And so those effects will have run through by the middle of the year. We see some of the stimulative aspects of the tax bill last summer. Those will be coming on board. And if consumers start to feel like there's more certainty, then I think businesses think there's some upside potential in the economy.
Well, this last week, we've gotten a lot of bad news on the employment front with ADP and Challenger and the other numbers that have come out. Does any of that, you don't have another meeting to vote at, but does any of that give you pause about the Fed pausing at this point?
For me, no. I think we've been in a situation where inflation has been too high for too long. And by many readings, it's been kind of marking time, has been at a plateau well above our target for the better part of 2 years. That's not acceptable. And for me, I think we can't lose sight of the inflationary concerns. The labor market is very turbulent right now, and some of it is because there are some big structural things that are happening in the economy. When I talk to businesses, they're reluctant to hire entry-level people at the same ways that they did before, because they think things like AI can replace that and they can deploy resources for other things. And I'm hearing that kind of reticence. There's also the reality that during the pandemic, a lot of companies ramped up because the demand ramped up, and they've been slower to right-size. We see a bunch of that right-sizing happening as well. And then we have issues around the labor supply and whether the immigration shifts are going to be temporary or permanent. And if they're permanent, then we're going to have a lower steady state job creation. So for all those reasons, I think it's very hard to make a clear statement. And then, of course, we don't have a jobs number today, right? So we're not getting the data in a timely basis. My team tells me it'll be April or May before we start to be able to draw clear signals from the data to really understand what's going on.
All right, that was Atlanta Fed President Raphael Bostic speaking with Bloomberg's Michael McKee on how his part of the world is down there in the Atlanta Fed area. Well, it is here February time, and on Wall Street, that is bonus time, folks. And
you want somebody's attention on Wall Street? Say, bonus.
Bonus, exactly. To be honest with you, having worked on the street for 30 years, the bonus discussions around the water cooler start right after Labor Day. And you start talking about what the bonus pool is, and then you start cornering your manager. And from September right up until year end, because that's when the bonus pool kind of gets decided. And you say, you put, hey, good deals, good trade, all that kind of stuff. And so it starts working right after Labor Day. That's how the season works. This year is going to be a good year. Goldman, JP Morgan bankers see bonus pools rise at least 10%. That's pretty good. Catherine Doherty joins us, finance reporter for Bloomberg News. This is the big take story. And not surprisingly, it is like one of the most read stories on the Bloomberg terminal today, because who is our readership? It's the folks that get paid by Wall Street, Global Wall Street. Catherine, talk to us about kind of the bonus environment these days for Global Wall Street.
Yeah, so, 2025 ended on a strong note.
Yep.
And the year ahead looks to be the momentum in terms of deals and trading. Both of those things is feeding into that bonus pool that you talk about. So in terms of the trading desks and M&A specifically, M&A has been, for investment bankers, the tepid environment that payouts have not been terrible, but you haven't seen this double-digit rise in that part of banking in a few years. Really, 2021, 2022 were like the banner years for investment banking. Now we're starting to see more momentum that bankers are getting paid for the deals that they're putting the time and energy into. And for trading, volatility has really driven up revenue across the big banks. They're fulfilling more client orders, and because of that, the trading desks are getting paid for it.
I need numbers. Like, give me an average, and then for a rainmaker like Paul, what would it be?
So average 10%, and we've been reporting for specifically JP Morgan, Goldman, Bank of America. Now, within those banks, there's some variation. We were trying to find kind of the general average. And for the rainmakers, to answer your question, some of those are going up to the 20 to, I had heard some rumors of 30% for the like real deal makers,
give me like a
haymakers.
dollar figure though.
So, I mean, these bonuses, it really varies by bank. But
Sure.
If you think about the base salary, it's the bonus on top of your base salary that usually is the sweeter part of payout. It's going to depend on what stage of career the banker is in. If they're further along, it can stretch into the millions of dollars. And it's the bonus that could be the millions part and not necessarily your base salary. So again, that's the performance based. How did your year end up? And then your salary is just the thing that's on the bottom of it.
What has changed since my day was my bonus was 90 to 95% of my year-end comp, my total comp was my bonus. So your salary was like 5-10% of your total take. Now that's changed. It's a higher percentage now.
Your salary was your beer money.
Exactly.
Yep.
It's exactly right. But you try to live on your salary and you save your bonus. That's what. Or if you're other way, you just blow your bonus. But with 4 kids, I was in the save mode. But has that changed? Is there a higher base now these days? Maybe a lower percentage?
I do think that, I mean, that percentage that you just shared, I think the percentages, yes, have grown where bonuses are not 95% of your pay. That being said, the shift is still towards bonus over salary for many of these firms. And again, that is why there's the incentive to work hard, that phrase of eat what you kill.
Yep.
Is the bonus also a retention sort of thing, that retain your talent? You know, you don't want to lose this guy or woman to some other firm.
So that's a huge, that's like the fine line that the banks need to walk, is you want to pay your best talent, but they're also under a lot of pressure to keep their expenses in check. When these are public companies, they're reporting to their analysts and to the investor community and saying, hey, this is how much money that we're making. The profit that the banks made in 2025 was the strongest that we have seen in a while. So presumably they should be able to pay out their people for it, but they don't want to pay out so much that then their expense line is going to be under scrutiny and they're going to be held to a higher standard in future quarters, where they're going to start answering questions like, why is the expenses much higher than you projected or you have talked about in previous quarters.
I'm going to develop an AI model to come up with the calculation for bonuses.
I'm sure that this is something that, they've already implemented for that.
For the junior bankers listening out there and watching, here's the strategy. You go in with your deal sheet. This is the fees I generated this year. You got to pay me. As more important than that is going with the deal sheet for next year. These are my anticipated fees that I think I'm going to bring in. And you don't want to lose me. You don't want to make me unhappy, because this, I think I can bring in.
It's all about the year ahead.
And that's how you do it. So real quick, 30 seconds. The European banks don't pay as much as the U.S. banks, right?
Not typically, but that's just because when you think about the U.S., you have the New York market, so you're going to see higher salaries. And the U.S. banks, I think, are on a stronger foot right now in terms of the profit that they're pulling in. So those are the kind of the things you need to think about.
All right, Catherine, thank you so much. We appreciate that. Again, and Catherine Doherty, finance reporter for Bloomberg News. She knows how to end the week strong on readership. Write a story about Wall Street bonuses. That's how it works. And it's good stuff in this story. It's going to be a good year for the Wall Street folks by and large. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up right now. John Tucker, thanks for your assistance today. We're going to have more Bloomberg Radio coming up. This is Bloomberg.
is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. The White House calls complaints about a video posted today by President Trump fake outrage.
The video depicts former President Obama and former First Lady Michelle Obama as apes, and President Trump is king of the jungle in a takeoff from The Lion King. NAACP President Derek Johnson called the video, quote, disgusting and utterly despicable. House Minority Leader Hakeem Jeffries said, quote, Donald Trump is a vile, unhinged, and malignant bottom feeder. While Tim Scott, the only black Republican in the U.S. Senate, called the video, quote, the most racist thing I've seen out of this White House. He urged the president to take it down. Linda Kenyon, CBS News, the White House.
The Obamas today posted a social media picture of that couple dressed up after Obama accepted his 2009 Nobel Peace Prize. Just in, actor Timothy Busfield has been indicted in a New Mexico child sexual abuse case. Now to Arizona and a second video plea from the children of Nancy Guthrie.
Whoever is out there holding our mother, we want to hear from you.
She's 84 years old.
The mother of TV's Savannah Guthrie has been missing since last weekend. CBS's Mugo Odigwe.
KOLD, the CBS station in Tucson, was one of the media outlets that received the ransom note on Monday evening. The station says the FBI confirmed the note offers another deadline of 5 p.m. on Monday the 9th. Authorities have not confirmed if the ransom demand is legitimate.
The U.S. has a Libyan man in custody in connection with the 2012 Benghazi attack that killed 4 Americans. FBI Director Kash Patel.
As a young prosecutor at CTS in the National Security Division, I worked on the Benghazi case. This was very near and dear and personal to me. We lost 4 brave Americans in Chris, Sean, Kyle, and Steve. And we can never, ever, ever forget them.
The man said to be the mastermind of the attack has been in a U.S. prison for more than a decade. Nearly 2 weeks after a massive ice storm in the South, CBS's Allison Keyes tells us a lot of people are still suffering.
More than 19,000 people in northeast Mississippi still don't have power, and some say they've been told it will be out for at least another week. One family in a town 20 minutes south of the University of Mississippi says it is struggling to pay for propane and boiling water to keep warm.
NFL Hall of Famer Sonny Jurgensen has died at 91 after a long career quarterbacking Philadelphia and Washington. He was a game analyst on CBS.
Look how quickly he throws the ball. Right behind the linebacker, nobody covering.
And later behind the mic for Washington broadcasts up until 2019. The Dow is up 960. This is CBS News. Timothy Busfield, facing criminal charges and just indicted, as we reported, has been replaced in a TV guest role.
Timothy Busfield's shelved episode of Law & Order Special Victims Unit has a new air date and a new guest star after the actor was charged with child sex abuse crimes in New Mexico last month. The Hollywood Reporter says the scenes have been reshot with Dexter star David Zayas in Busfield's previous role as a judge. The episode that was set to air January 15th will now run February 26th. 68-year-old Busfield was released from jail pending trial after he pleaded not guilty in connection with allegations made by 2 child actors. Deborah Rodriguez, CBS News.
A Phoenix jury has ordered Uber to pay $8.5 million after finding it liable in a lawsuit brought by a woman who said she was sexually assaulted by a driver. Steve Kathan, CBS.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Iran says we're off to a good start. Welcome to the Friday edition of Balance of Power, as Tehran says it agreed with the U.S. to continue talks to de-escalate and avoid a military confrontation. We're going to get the latest in just a moment from Bloomberg Washington correspondent Tyler Kendall with news that construction is now halted on the Hudson Tunnel project after the Trump administration cut off funding. We'll have details with analysis ahead this hour from our political panel. The Department of Homeland Security runs out of money 1 week from today if lawmakers cannot reach a deal on ICE restrictions. We'll talk that out with Bloomberg's Megan Scully. And as Bitcoin bounces back today, we'll get into it with Bloomberg's Tim Stenovec. It's looking pretty good. In fact, Charlie Pellet will tell us what's happening right now as we start with a look at Wall Street. Charlie, where'd all the bears go?
Very good question. What a dramatic shift from this time yesterday. I got you covered on Bitcoin and the markets down to double decimals. Let's begin with Bitcoin, up 10.57% right now, advancing to 69,757 on Bitcoin. Dramatic turnaround there. Indeed, as with much of the market, a renewed wave of dip buying lifted stocks. We've got the S&P up 103 now, back above 6,900, 6,901 where we stand. That is a gain of just about 1.5%. The Dow up 2% now, up 983 points on the Dow. NASDAQ up 362, up by 1.6%. The Russell 2000 index of small cap shares outperforming, surging 3.3%. The 10-year at 4.21%. With the 2-year 3.50%. Spot gold up $177 the ounce, back at $49.56, surging 3.7%. Silver turning around, up by 8.1%, $76.65 for an ounce of silver. West Texas Intermediate crude up 1.5%, $64.23 a barrel. And Bitcoin now up 10.6%, 69,763. Four of the biggest American tech companies, Alphabet, Amazon, Meta, and Microsoft, together have forecast capital expenditures that will reach about $650 billion in 2026, all in pursuit of dominance in the market for AI tools. Rick Reeder is Chief Financial Officer for Global Fixed Income at BlackRock, and on Bloomberg Open Interest this morning, he said we are in uncharted territory when it comes to this kind of spending.
You know, I chair the board of, we have 14 charter schools in Newark, New Jersey, and we just had a discussion this week at our board meeting about what is our curriculum going forward. How does AI evolve how we teach kids? What are the disciplines we're teaching our kids for going forward? How do we use AI to augment a traditional teaching process? This is all new territory, and this is all new land in terms of where we're going.
BlackRock's Rick Reeder interviewed on Bloomberg Open Interest. Amazon, after last night's earnings report, now down by 7.7%, among other names spending heavily on AI. Alphabet down 2.7%, Microsoft up 0.9%, Meta Platforms down 1.8%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie. Happy Friday. Charlie Pellet with us for the duration of the program, live from New York, and he'll have more on the markets in about 15 minutes' time. You made it to the threshold of the weekend. Thank you for spending part of it with us. On the Friday edition of Balance of Power on Bloomberg Radio, streaming live on YouTube. Always search Bloomberg Business News Live if you want to find us here in the studio. Watching us live, always on Bloomberg Originals as well. Big weekend. You got your chicken wings and chili ready, I hope. Of course, we're going to start with the Olympics, then we'll resolve to the Super Bowl. The president will not be present for either of them. He's headed to Mar-a-Lago after a signing session in the Oval Office this afternoon. And of course, we're going to be talking about the politics of both of these events. J.D. Vance, Marco Rubio are over in Milan watching the Olympics here, and we're looking at a lot of split screens of the two of them pretending to have fun together. The big party at Mar-a-Lago, Super Bowl party, you know, will generate some news on Sunday, and exactly which halftime show is on all of the TVs. It's part of the reason the president says he's not going this year, right? Is the Bad Bunny thing, so he'll have Kid Rock on, I guess. The alternate Turning Point USA halftime show. To which I say the Puppy Bowl gets no respect. Let's turn now to geopolitics. We're going to start here. We've got news on the tunnel project in New York. We've got news, at least kind of news, on Iran. It's one of these agree to continue meeting situations is that true? There's adult dogs in the puppy bowl this year? I hadn't heard that, Elizabeth. Meetings went to a different venue between the U.S. and Iran, settling in Oman. That was the request by Tehran. And Caroline Levitt, the press secretary, weighed in on this yesterday. Let's listen.
The president has obviously been quite clear in his demands of the Iranian regime. Zero nuclear capability is something he's been very explicit about, and he wants to see if a deal can be struck. And while these negotiations are taking place, I would remind the Iranian regime that the president has many options at his disposal, aside from diplomacy, as the commander-in-chief of the most powerful military.
Remembering Steve Witkoff and Jared Kushner are at the table here, right? Talks in Oman with Iranian officials at what is a clearly delicate moment here. A lot of folks think that flotilla we've got off the coast of Iran is there for a reason. And Donald Trump has a history of using the firepower when he assembles it. So let's see what we're hearing from the White House. Bloomberg Washington correspondent Tyler Kendall is with us here. We're hearing signs of, cautious optimism, Tyler, but then you see the USS Lincoln pointing straight at Tehran. I guess we'll have these two parallel actions for some time. What are we learning about talks today?
Right. So we've yet to get the readout from the U.S. side, but we have been hearing from Iran. And as you framed, they're essentially agreeing to more talks. These were talks about having additional talks. Iran said that they went very well. It was widely perceived as a really positive development. We saw oil prices fall, for example, after soaring this year, in part due to just what has been escalating tensions in the region. But earlier this morning, it almost felt like the bar was being lowered. We heard from Iran that this isn't going to be an end-all resolution. I don't think anybody thought that that was going to happen. They said that this is all about the broader issue. They're not going to get into finer details, which sort of tracks and makes sense, right? Because we actually went into today with, I think it's fair to say, contrasting parameters from each side about what was going to be discussed. First, the venue changed, Turkey to Oman, but then it appears that Iran had gotten what it wanted, which was for this to be bilateral talks only focused on its nuclear program, whereas we know the U.S., as said as such from the Secretary of State Marco Rubio this week, that they want to see those talks really expand. They want to talk about Iran's ballistic missile program. They want to talk about those proxy militia groups that Iran props up in the region. They want our regional partners to be involved in these conversations as well, to talk about some greater stability in the Middle East. And Iran, as of now, it appears, got what they had wanted, which is for this to be framed solely between the U.S. and Iran when it comes to their nuclear program.
Really interesting, Tyler. So to agree to meet again, I guess, is a good sign. But there are questions about timing here as well, and whether the president's going to put some kind of ultimatum on this conversation, knowing that it's directed toward the nuclear program. We're also starting the Olympics this weekend. Does that buy Iran a couple of weeks?
Perhaps. I'm not sure what the calculus would be there, but I can tell you that our analysts at Bloomberg Economics actually describe these talks as a stalling tactic. The White House itself has long said that diplomacy is always on the table, but they have also said there is a range of options on the table. President Trump himself hasn't shied away from that threat that there could be strikes, and Bloomberg Economics right now is forecasting that a strike on Iran by the U.S. is actually likely, considering that we've seen such a buildup in U.S. military assets in the region. Now we've seen this armada, essentially, the USS Lincoln Carrier Strike Group. That doesn't necessarily mean that there's going to be a big attack. There are a lot of different scenarios on how this could play out, but we're hearing a lot of talk about potentially a targeted strike. But of course, none of this has happened yet. We're just sort of forecasting what could potentially happen. But it's important to note that that possibility really hasn't been taken off the table. And in fact, Bloomberg News was reporting earlier this morning, super tanker operators are now speeding their vessels through the Strait of Hormuz on fears that we could see escalation, since earlier this week, Iran had targeted a U.S. flagged oil tanker in the Strait of Hormuz. No one was harmed. They had backed away. But we know that this is a critical waterway that Iran has previously threatened. Well, it's something that we're going to be watching through the weekend. And that analysis from Bloomberg Intelligence, I'm really glad that you mentioned, because they are usually right, I have to admit. And they're a really smart team watching this from a lot of different angles. Tyler, we've got a breaking story
that's coming out of the administration that we're both learning about here together. White House exploring opening an antitrust probe into home builders. Did this just go red here, James? This is a big one. Exploring opening an antitrust investigation into U.S. home builders as they sharpen a focus on tackling the country's housing affordability crisis. If you're with us on YouTube, you're looking right now at the reaction here. Toll Brothers is holding up, but D.R. Horton, rather, is down 1.5%. Lennar is down 2.5%. And this could just be the beginning if we have an administration that's going to be turning the screws here on home builders. The Department of Justice could open this probe in the coming weeks, according to people familiar with the discussions. This is just now happening. Pulte now turning negative down to its low of the session, down a little more than 1%. Tyler, this would not be the first time that this administration tried to get to the housing market, having recently proposed, the president at least through executive action, banning institutional buyers from owning single-family homes.
Well, actually, you'll recall the president, through that executive action, actually asked the Department of Justice and the Federal Trade Commission to look into potential antitrust violations when it comes to institutional investors in this space. So this sort of does track. I think it could be fair to say that perhaps we did see something like this coming, could have been in the pipeline. Interesting reporting here, though, to frame this in the context that the White House has been really trying to refocus the narrative when it comes to affordability.
Yes.
And we know that houses, the cost of homes and housing has been a huge focus. We heard it yesterday during the Treasury Secretary's testimony on Capitol Hill. This is an area that the president really wants to focus on. In fact, it's a plank, you'll recall, of President Trump's campaign. There was this whole, rollout of what lowering home prices could ultimately be, and it appears that this is the route that he's trying to take as we head into the midterms.
Really interesting. This is one that's going to be perking through the day. A possible antitrust probe into home builders from the White House. We've got less than a minute, Tyler. I thought we'd be talking about this a lot more today. The New York-New Jersey Hudson Tunnel project is being halted after the White House pulled funding. Is this officially over? This is a $16 billion project with funds already allocated.
Right. So this today was the deadline for them to have that funding reinstated by the federal government. You will recall this is funding from the bipartisan infrastructure bill that was passed in 2021. And President Trump halted it back in October when we were seeing the start of the government shutdown. I know we're almost out of time here, but as of now, President Trump is saying he will not release those funds, reporting he asked for Dulles to be renamed in order
Dulles
to get
Airport.
them named. Yep.
And Penn Station.
And reporting that Chuck Schumer said no. Of course, these are his constituents in New York.
I wonder
that
when
are
the
being
last
impacted.
time was Donald Trump was in Penn Station. We're bringing hula hands back, baby. That's 1,000 jobs. We'll have more on that story. Tyler Kendall, thank you. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Trump administration officials are said to be exploring opening an antitrust investigation into American home builders as the White House sharpens its focus on tackling the country's housing affordability crisis. Now, sources tell Bloomberg one potential focus is on how information is shared through an industry trade group called Leading Builders of America. Officials are said to have grown concerned that the trade group, whose members include Lennar and D.R. Horton, could be used to restrict housing supply or coordinate pricing. Now, shares of the luxury home builder Toll Brothers, they are remaining higher. Other home builders are declining. Toll right now up 0.7%, but among those home building names that are declining, D.R. Horton down 2.8%. Pulte Home is falling by 0.9%, and Lennar right now, Lennar is down by 1.8%. All of this as stocks trade very close to session highs right now, with the S&P above 6,900, up 102 points. That is a gain of 1.5%. The Dow up 955 points, up almost 2%. We've got NASDAQ up 369, up 1.6%, with the Russell 2000 index of small cap shares surging now by 3.2%. The 10-year, 4.21%. The 2-year, 3.50%. Gold is up $179 the ounce, up 3.7%. Silver up 8% now, 76.63 on silver. And Bitcoin surging now by 12%, 70,681 on Bitcoin. Our Tim Stenovic will have a whole lot more on crypto coming up in just a moment. Briefly, ExxonMobil and Chevron expanding production in nations tied to OPEC. ExxonMobil up 2.2%, Chevron up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Okay, Charlie, just don't tell me it's a dead cat bounce. I keep looking around for headlines. I haven't seen any analysts use that term yet. Seems like a pretty legitimate bounce back here. My God, the Dow's going to be up 1,000 points in a minute now. The S&P 500 up over 100 points. We will take it. And as Charlie mentioned, Tim Stenovic's going to join us a little bit later this hour to talk about this incredible recovery that we're seeing. It's an ongoing recovery, I realize, in Bitcoin. My gosh, up 12%. This is quite remarkable, and it feels a lot different than yesterday. The program brought to you by the word cromnibus. And if you're old enough to remember, this is history repeating itself. We spent some time yesterday with Patrick McHenry, the former Speaker pro tem, of course, now free to speak as a Bloomberg Politics contributor, talking about this heated debate over the Department of Homeland Security. You know, it was 1 week ago we were up there in the Senate talking about the government shutting down, and 1 week from now we might be doing that very same thing, unless we're in the House. But the problem is that these 10 demands on restrictions surrounding ICE are running into a wall with Republicans when it comes to demasking and some of these other things. So could we, in fact, have another world in which we're living under a cromnibus? Let's bring back Patrick McHenry from yesterday.
Makes me feel like we've gone back in time.
Okay.
Because when President Obama had his approach to immigration, which was DACA, Republicans in the House said, we don't want to fund DACA. We don't want to fund your immigration policy. So we funded all of government except for the Department of Homeland Security. And it was called the CR Omnibus, the Cromnibus.
Yeah, the Cromnibus.
Taking you, it's a way back machine.
This is
right?
amazing. Yes.
So
it happens
we
again.
are coming back around, and now it's the left saying they don't want the rights immigration policy.
Yeah.
And nothing is new again.
Nothing is new again. The cromnibus is not some sort of hybrid pastry. As Mr. McHenry just described, I plugged it into Gemini, a cromnibus, a $1.1 trillion federal funding package passed December 2014 to avoid a government shutdown. Close your eyes and imagine this next Friday. It combined a long-term omnibus spending bill for most agencies with a short-term CR for, yes, Homeland Security. Megan Scully remembers the cromnibus, and I wonder if they've already written the story for next week. She runs our Capital Influence team here in Washington. The big question, of course, is will Homeland Security shut down next week, or will we have something like this?
Well, first of all, I don't appreciate you aging me on your show. But it is just the Department of Homeland Security, we should say. The rest of the government is funded under the deal that was struck at the very last minute last week. But I think that Republicans in the Senate in particular are saying the only way to get a deal here is to extend this short-term funding a little bit longer, essentially buy more time. They're going to need 60 votes to do that in the Senate, though, and they're going to need a majority in the House. So they're running up against really fierce opposition from Democrats who see this as their leverage to get their demands regarding ICE, taking masks off agents and such through. So it's going to be hard to see how this really shakes out here in the next few days.
Well, that is a little bit scary, knowing that the two sides seem to be oceans apart on things like demasking. What do you think of this list of demands? What are you hearing from your sources on whether that goes anywhere? Are any of these elements going to be in a piece of legislation?
Well, Republicans yesterday said it wasn't even the beginning of negotiations for them, that they saw this as a wish list, sort of an aspirational goal by Democrats. But, in any negotiation, Democrats are shooting high in their first offering. So Congress is gone. It's the weekend, after all. So they will be back next week, and I think that we will certainly get a better sense of where they are. What we'll be watching, certainly, is where things stand come Monday. We have a lot of, there will likely be protests throughout the weekend regarding, ICE across the U.S., and then you have Bad Bunny's Super Bowl halftime show and the counter-programming from Turning Point that the president will be tuning into. So the fever pitch surrounding this issue isn't going anywhere anytime soon. And whether that is something that keeps the two parties apart or if it's something that potentially fuels a compromise, I don't think we're quite there yet. They don't get to the compromise position on the Hill until they're up against the deadline.
So we'll be meeting here at this time next week.
Absolutely.
I've heard from a number of folks on the Hill talk about maybe there is some sort of offering that Republicans could make to avoid some of these. We have body cameras, as Kristi Noem has already said, offered by the Republican side. What if Kristi Noem was offered? And then we can get to some of these other. Could there be a compromise with a move like that?
We're not seeing any indication
change at the top,
that could happen. The president obviously has put Tom Homan, his border czar, into Minneapolis, which has basically sidelined Noem there. He's stuck with her through this, though, at least publicly. I think Democrats, though, want something in law. Some kind of executive action, be it a change at the top or an executive order. Their signaling is not sufficient. They want something that will withstand the test of time.
Got it. Megan, thank you so much. Knowing you were a young intern when the Cromnibus happened, that makes Megan about 25 years old today, so we appreciate your aging with that. Cromnibus, hashtag Cromnibus. Look it up if you don't remember. I'm Joe Matthew in Washington. Great to have you with us on the Friday edition of Balance of Power. You've been hearing about the bounce back on Wall Street. That includes crypto, Bitcoin. Look at this, up over 12% now. Just about to hit $71,000 a coin. Overnight, it fell to 60. Is that the floor? I wonder if Tim Stenovec is looking at it that way. He joins us now live from World Headquarters in New York as not only one of the forces behind Bloomberg Business Week Daily, but he's also the host of the Bloomberg Crypto Show. And so we're seeking wisdom here. Tim, it's great to see you. You were a voice of reason at a very scary moment for a lot of crypto investors last evening. Now it's party time today. Is this a technical bounce? What are you hearing?
Well, that's certainly what it seems like. I mean, because Bitcoin doesn't have any fundamentals, technicals is kind of all we have to go on. And round numbers are kind of technicals when it comes to Bitcoin. So some analysts are pointing to that support that we saw at 60,000 as being that level for a bounce. But look, it's a risk on day. You were just talking about the equity markets and the rise that we're seeing in equities today, some big names notwithstanding. Maybe people see this as, okay, well, it was sold off enough and there's an opportunity for us to buy here because we see value in this. But as difficult as it was to explain yesterday's decline, Joe, it's as difficult to explain as today's increase in the price of Bitcoin.
Wow. Well, that's a little bit scary because part of the justification for what happened yesterday, part of the explanation, and you please add more color to this if you can, was that there was a deleveraging on the S&P 500, that people needed to sell stocks and undo leverage on that side to cover their losses in crypto, and that became a vicious cycle. Is that happening in reverse today, or is there in fact a change of sentiment here when it comes to Bitcoin specifically?
Well, it seems like there is a change of sentiment, at least with what you see in terms of buying today. But that sentiment is really across the board with different cryptocurrencies. Ether's up more than 12%. XRP, which is Ripple's cryptocurrency, that's up more than 30% right now. You have Solana up 11.8%. So there's a lot of bullishness happening, but this is coming from a place where there was a lot of selling off, and there has been a lot of selling off. I do want to remind everybody, Bitcoin was, north of $125,000 per Bitcoin. That was back in October of this year. So it wasn't that long ago, and it's still down, more than 35%, close to more than 40% since then. I do have some numbers for you, Joe, about those bullish bets that were unwound. In the last 24 hours, this is according to data from CoinGlass that's cited by Bloomberg News, about $2.1 billion of bullish bets across all cryptocurrencies were liquidated. At the same time, investors pulled $434 million from U.S. ETFs for Bitcoin on Thursday. I'm looking forward to getting the data for today and seeing if, that much was put back in. We'll have to wait and see.
Right. That is fascinating. You think about the folks, Tim, who bought into crypto after Donald Trump got elected, because that was the promise. I mean, even this is what Michael Saylor was talking about on the strategy call last night. This is about President Trump, his embrace of crypto, making America first in the crypto space as America's top regulator. This is something you can bank on. And they're underwater now, having watched this go to the moon and back over the past year. You talked to Paul Krugman about kind of the sentiment behind crypto and this idea of it being a store of value. It's a really interesting conversation on Business Week Daily yesterday. Let's listen to what he said.
A lot of people sold Bitcoin as being the next gold, and it turns out that in the face of doubts about stability, doubts about politics, the next gold turns out to be gold, not Bitcoin. I think it's a big wake up for people that maybe this isn't actually going to be an enduring asset. So. It's really, really hard. If you ask when people make price forecasts for Bitcoin, I always wonder on what basis.
Yeah.
It's not like you can do a price earnings ratio on this thing because there's no earnings, no services. It's all just pure faith. But it does feel like we're seeing a real crisis of faith right now.
So, Tim, if the next gold is real gold, what does that leave for Bitcoin? It simply trades with the NASDAQ?
That's everybody's trying to figure that out right now. I mean, it's not trading with the NASDAQ over the last few weeks. It used to do that, and we would see, risk-off days for Bitcoin when the NASDAQ was sold or oversold, but that hasn't really happened. I mean, we're close to all-time highs on, major equity averages right now. So the identity crisis is something that people have been talking about over the last few weeks, and I guess that's a big question moving forward. What is the purpose here of this cryptocurrency?
Yeah, right. Man, if you're asking that, we better keep talking. Tim, thank you. You've been great these last couple of days. Tim Stenevec on the program that follows this one, Bloomberg Business Week Daily, live from New York. Polymarket, 75 chance of Bitcoin hitting 75K in February, an 8% chance of hitting 50K this month. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher. We've got Bitcoin surging. Home building stocks are selling off. The home builders are lower on word that the Trump administration may be exploring opening an antitrust investigation into the companies amid rising focus on the nation's housing affordability crisis. Right now, we've got shares of D.R. Horton trading down by 1.9%. Pulte Home down 1%. Lennar lower by 1.8%. Toll Brothers now trading a little changed. They are up under 0.1%. We are seeing a renewed wave of dip buying that is lifting stocks, with the Dow Jones Industrial Average up 956. That is a gain right now of 2%. S&P 500 index back above 6,900, 6,902, up 104 points now, up 1.5%. The Nasdaq Composite Index up 1.8%. Nasdaq 100 Index up 1.7%. And the Russell 2000 Index of small cap shares up 3.2%. The 10-year at 4.21%, with the 2-year 3.49%. Gold up 3.6%. $49.52 the ounce on spot gold. Spot silver up 8.1%, $76.65 on silver. And West Texas Intermediate crude up 1.5%, $64.22 a barrel. Bitcoin now surging 12.7%, back at $71,100. Consumer sentiment improved to the highest in 6 months, largely propelled by wealthier Americans who've benefited from stock market gains. Now, that's according to the University of Michigan. Joanne Shu is director of surveys, and she's been looking at the politics of the results.
We've seen a partisan divide in consumer sentiment going all the way back to the Reagan administration, if not earlier. So it's always the case that if your party's in power, you feel better about the economy than if your party's not in power. But if we take away Republicans and Democrats and we only look at independents, we get the exact same national number.
Joanne Shu of the University of Michigan interviewed this morning on Bloomberg Intelligence. Recapping, the Dow pushing higher to a 1,000-point advance, up just about 970 right now, up 2%. The 10-year 4.21. Crypto, specifically Bitcoin, up 13%, 71,280. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Thank you, Charlie. Sounds a lot better than what we were talking about yesterday, that is for sure. And Charlie will have more on the markets coming up at the top of the hour, 1 p.m. Eastern, as we welcome our global television audience to the conversation. It's a nice looking market here. Crypto's bouncing back, stocks after a very difficult day yesterday, and we'll see if we can hold the gains as we move into the close. We do want to update a story that you've been hearing about today on Bloomberg by way of some of our newscasts. Some of our shows have been talking about this as well because it sparked quite a bit of outrage in political circles here in Washington. A White House official is now blaming a staffer for what they are describing as an erroneous post. Erroneous is the term here. A racist video clip of the Obamas that President Trump put on Truth Social. This is a video clip, a parody of The Lion King, in which the former president, former first lady are portrayed as apes. This is pretty tough stuff here. Drawing condemnation from the NAACP, Derek Johnson called it blatantly racist, disgusting, utterly despicable. Tim Scott weighing in, and this was kind of a breaking point here today in Washington. Of course, the Republican senator praying it was fake, he writes, because it's the most racist thing I've seen out of this White House. The president should remove it. Pretty stark words from the senator. We heard as well from Congressman Mike Lawler of New York, taking to Twitter, unsolicited here. The president's post was wrong and incredibly offensive, whether intentional or a mistake, and should be deleted immediately with an apology offered. I don't know if there's going to be an apology coming, but we can tell you that that post has been removed. If you continue to hear stories about this, there has been a move from the White House, in fact, responding to this criticism to remove the post. Not the best story of all the stories we're following today, but we wanted to try to bring you up to date on that. We'll have more on the Iran-U.S. talks coming up at the top of the hour when we spend some time with Bloomberg Washington correspondent Tyler Kendall, and Hagar Shamali will bring her insights into this whole process. As the delegation gets moving on to the Olympics, J.D. Vance, Marco Rubio are out there. Nobody's going to the Super Bowl after the president became the first president of the United States to go to the Super Bowl last year. And we're told it's because of the halftime show. So I guess Kid Rock's going to be on the screen at Mar-a-Lago, where the big Super Bowl party is going to be taking place. Democrats are not sure if they should party. Depends which one you're talking to after what took place in New Jersey. Progressives are pretty excited about it. This is a House Democratic primary, Mikey Sherrill's old seat, northern New Jersey, and remains too close to call. In fact, it's narrowed down to about 400 votes from what Megan Hayes just told me. Analilia Mejia on the precipice of a massive upset, having been outspent on a big level by other candidates and groups, was leading former Representative Tom Malinowski again by only about 400 points in this special primary. This is the 11th district, a margin of less than 1 percentage point here. The cross currents and where the money was going in this race is really interesting, because it may be that AIPAC, which put a boatload of money into this race, may end up with the candidate it does not prefer. As we assembled our political panel and two experts on campaigns, Bloomberg Politics contributor Rick Davis is here, our Republican strategist and partner at Stone Court Capital, alongside Megan Hayes, making a rare appearance on the early show. Megan is, of course, former special assistant to President Biden, our Democratic strategist, and great to have both of you here. Megan, how are we looking at this? AIPAC went after one candidate because he was considering conditioning weapons shipments. This is the former congressman, where Mejia was actually calling genocide what Israel was up to in Gaza. Did AIPAC misguide its money and its vote?
It seems like it was a miscalculation on their part, which doesn't bode well for their 2026 plans. But I also think it shows here that special interest really does play a part. But people actually who are voting aren't necessarily paying attention. So it's interesting that a very progressive candidate has rejected someone who used to be a member of Congress, and then also someone who is very well funded by a special interest group. So, they're only going to be in Congress for 11 months. There's another primary in June for the same seat. So it's kind of a moving target here in New Jersey. Obviously, the woman hasn't won yet, but it's really interesting to sort of see that people now are taking much more active note on who is influencing these elections and who they want to win.
Interesting. This is somebody who was endorsed by Bernie Sanders. AOC was on the big speaking tour with them. Could this then self-correct? Are you suggesting 11 months from now, if this isn't exactly what voters wanted?
I think it could self-correct. It also, these special elections do tend to turn out the base. You see that in Republican special elections as well. So it will be interesting to sort of see how this plays out for the primary again in June, and then, who gets to serve the first full term. Yeah, right. The United Democracy Project, AIPAC Super PAC, Rick Davis, put almost $2.5 million into this special election, attacking Malinowski. Is this just malpractice? How do you read the result here?
Look, I mean, sometimes you place a bet and it went right? They put a lot of heat on Malinowski, but in the reaction is they wind up with someone who's probably worse on their issues than Tom will ever be. Tom's got a track record. You know what he's going to get. He's been a congressman before. And as you point out, this is a huge success for, sort of the progressive wing of the Democratic Party. And really, that's the story here, is that here you had a pretty mainstream Democrat and Tom Malinowski, sort of an establishment Democrat. And everyone thought, oh, this is a done deal. And even at 9 o'clock last night, the DDHQ called him and said, hey, you're going to be the winner. And then an hour later, they called him back and said, hey, forget what we told you there. I mean, that is a campaign manager's worst nightmare. They start working on their acceptance speech. I can't imagine. Stop. So, look, I mean, I think this is where the energy of the Democratic Party is. And that's the cautionary note for the midterm. The only thing that can get in your way is to start posting up candidates that maybe have the potential of not winning. The reality is it's not a district a Republican can compete. And so Democrats are going to get what Democrats want. And in this case, unless there's some switch in Morris County where Tom Malinowski's numbers start to improve, which is his base, they're going to have their pick of the progressive on this election.
They did call this early in the wrong way. She posted the old Dewey wins front page of the paper. This is going to be interesting to watch unfold here because it's New Jersey. Just a couple of weeks ago in this gubernatorial contest, people were asking if this was a purple state. How do you describe it?
I mean, I think Rick was saying this is a very safe district for Democrats. So I do think what Democrats are going to turn out, that's a progressive candidate could win here. But I don't think that's a reflection of the rest of the country that we need to be worried about for the midterms writ large here, because I do think that there are going to be a lot of moderates that are in their final races that could beat Republicans in these swing districts. But I do think this is where candidate selection really matters. And this is where the parties really play an important role. And who you put up is really important, because the last thing you want here is for a moderate Republican to come in at the last minute here and then win again in November.
Well, just not too far from the 11th district, there's a tunnel project underway that has been halted. And I'm curious your thoughts on this, a $16 billion project that we've talked about before when the administration pulled funding or froze funding for. This is the Gateway Development Commission, the Gateway Tunnel. This would connect northern New Jersey with Midtown Manhattan. And the whole knock on it was that there was some sort of DEI that was seen as corrupt in hiring practices by the administration. Construction has been put on hold now indefinitely, with federal funding still locked up here. This is deadline time, and work on the tunnel is going to be stopped at 5 p.m. local time if the president does not restore funding that it cut off in October. Rick, I don't really understand the politics behind this, I guess, because I thought infrastructure, this is an already approved deal with monies allocated from the infrastructure law. I thought that was bipartisan. I thought this was something that D's and R's both supported, because the loss of this project will eliminate 1,000 jobs and threaten 95,000 others. How does this play politically?
This is a disaster for those people who have, Republican seats in New York and New Jersey. I mean, there are 3 Republicans in New Jersey and 5 in New York who literally just had their feet cut out from under them. I know that they've been expecting this for some time, but I think the people, canceling or suspending or canceling, I guess, this project understood the politics of it. I would be hard pressed to make an argument that these 8 congressmen can actually win re-election in a tough election year. I mean, this is such an impact to those states economically, jobs. It's a prosperity issue, just a thing Republicans want to campaign on. And just because of a grudge with these 2 states, the president has completely eviscerated this. So I don't care how many seats you've redistricted in Texas and any other state, you just gave it all back with this one decision.
So much for infrastructure being a bipartisan affair. There is some reporting after the president wanted his name on Penn Station, maybe in return for this. Like he wants his name on the stadium here for the Commanders. If you need the tunnel, why don't you just put his name on it?
Well, because I think that Schumer's not going to negotiate with someone who's asking for his name on Dulles Airport and Penn Station.
Dulles Airport,
who
yeah.
Also, the Penn Station already has a name on it, but that's beside the point here. But I do think that puts people, these members, these Republican members especially, who are running in a really tough spot. Do they defend the president being a total narcissist and only crazy about wanting stuff for himself, or do they defend their people who want this project? So they just got put in a really tough spot if they have to go against the president, because it's very clear the president only wants what's best for him, not the people of New Jersey and New York, or frankly, the members of Congress that are in his party. I know
we've got the Moynihan Hall. I'm not sure who would want to put their name on Penn Station at this point of the game here. Rick, I don't know how much time our audience has hung. I know Rick Davis knows the Red Caps at Penn Station. If that's the way it goes now, if this is the transactional world that we're in, Rick, why not put his name on the airport, the train station, and you get your $16 billion tunnel?
Yeah, look, I mean, that's what every world leader has learned, right? Is that you kowtow to the president. It's got nothing to do with the United States or their economy. It's just to get what they need out of the administration. And that's just a super dangerous thing. I mean, we are in a market economy. We should reward those things that generate value. And these are taxpayers' dollars. This is not Donald Trump's checkbook. And if he wants to give personal funds to put his name on a building in New York, he ought to do that, because Steve Schwarzman, all kinds of people do that all the time, and the recipients are happy to post that up on the wall.
Kennedy Center's the other one. When that is rehabilitated, the name will probably be prominently placed on the side of the building, assuming they do rebuild this. What happens in 3 years?
Well, if a Democrat wins, it will come right down probably at 12:01 on January 20th.
Executive order?
I don't even think it's within an executive order. I think someone just goes and takes it down, because you have to have Congress to pass legislation. It's still named the Kennedy Center. It's
Yes.
not Donald Trump just added his name. So it's all for naught. Like all of this stuff is just all fake, and it all just plays into his own vanity.
Some honesty from Megan Hayes. Rick Davis with us as well, our great panel with both sides of the aisle covered here. We'll have much more in our second hour as we welcome our global television audience to the conversation. Seizing on Fed independence. We'll get into this with some new comments from Raphael Bostic, and we'll spend some time as well with Hagar Shamali. U.S.-Iran talks underway today in Oman as they agree to meet again. We'll call that good news for now, and we'll have details straight ahead on Balance of Power, only here on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
We meet to meet again. Welcome to the Friday edition of Balance of Power. As Iran says it has agreed with the U.S. to continue talks to de-escalate and avoid a military confrontation. We'll get the latest in a moment from Bloomberg Washington correspondent Tyler Kendall with insights ahead from Hagar Shamali from Greenwich Media Strategies. Raphael Bostic weighing in on Fed independence, as we'll discuss with Bloomberg Wall Street Week host David Weston, and we'll have analysis from our political panel All after a look at Wall Street. Let's get up to date with Charlie Pellet at World Headquarters in New York. Recovery day, Charlie.
Indeed, we are seeing a renewed round of dip buying. The Dow, the S&P, NASDAQ, all pushing higher. I'm going to begin with Bitcoin because right now we have got Bitcoin surging by 12.1%, back above 70,717 on Bitcoin. All of this as the Dow now surges by more than 1,000 points on this Friday. We've got the Dow up 1,050 right now, up 2.1%, 49,958. Looking at a record on the Dow. We've got the S&P up 116, up 1.7%. NASDAQ up 455 points. NASDAQ is surging by 2%. The NASDAQ 100 index up 1.9%. And people getting back into small caps with the Russell 2000 index advancing 3.3%. Our Mag 7 index has turned around, up by 0.6%. The VIX now at 17. This time yesterday we had a VIX above 20. The 10-year yielding 4.21%, with the 2-year 3.49%. Gold is surging 3.8%. Spot gold $49.62 the ounce. Silver up 9.5%, $77.63 on silver. And West Texas Intermediate crude up 1.5%, now $64.22 a barrel. Again, Bitcoin up 12.1%, $70,700 on Bitcoin. Amazon shares are down 6.1% now after the company last night announced plans to spend $200 billion this year on data centers, chips, and other equipment. And homebuilder stocks are falling on news that the Trump administration is exploring opening an antitrust investigation into U.S. companies amid rising focus on the country's housing affordability crisis. Among some of the housing names selling off, D.R. Horton down now by 2%, Pulte down by 0.4%, Lennar down by 1.8%, the luxury homebuilder Toll holding on to gains of 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Charlie, thank you so much. Almost like yesterday never happened. Charlie will have more on this improved market today in about 20 minutes' time as part of our program. Live from Washington, thanks for being with us on the Friday edition of Balance of Power. As we survey the political landscape here at the threshold of the weekend with important talks underway in Oman. We talked about this yesterday as the venue changed from Turkey. U.S.-Iran talks aimed at a nuclear deal, or maybe I should say aimed at avoiding military strikes once again from the U.S. White House Press Secretary Caroline Leavitt spoke to this during the briefing yesterday. Listen.
The president has obviously been quite clear in his demands of the Iranian regime. Zero nuclear capability is something he's been very explicit about, and he wants to see if a deal can be struck. And while these negotiations are taking place, I would remind the Iranian regime that the president has many options at his disposal, aside from diplomacy, as the commander-in-chief of the most powerful military.
Remembering that Special Envoy Steve Witkoff and the president's son-in-law, Jared Kushner, are back at the table in this case, back at the table in Oman. And we're waiting for more details on what exactly was discussed or, in fact, accomplished, with Iran saying that the talks had a good start. We're agreeing to meet again. Bloomberg Washington correspondent Tyler Kendall is with us right now with the latest on this. Do we expect a readout, Tyler, or are we just watching Truth Social?
Well, at this point, we haven't heard from the U.S. side, but as you mentioned, we did hear from Iran, which essentially laid out that the talks agreed to more talks to come. They called this very productive, very good talks, in the words of the Iranian foreign minister. You mentioned Steve Witkoff and Jared Kushner. I will point out somebody else was there from the U.S. delegation, U.S. Navy Admiral Brad Cooper, the head of the American military's Central Command. That has led some analysts to say that was perhaps a threat of keeping in mind that military action is still on the table. The fact that such a high-level, high-ranking military official was there in person for these talks, because as you just heard from the White House press secretary, the U.S. maintains that while diplomacy is on the table, there are a lot of other likely actions that could also be on the table. In fact, our own analysts at Bloomberg Economics banks have said that they see it as highly likely that the U.S. could still strike Iran even as diplomacy moves ahead. And this was considered to be a welcome sign that we heard from Iran that they went well and they're going to continue talking. But we should also point out that both sides seem to have contrasting parameters heading into today. You mentioned the venue change, but also Iran was able to limit the scope of these talks, according to our reporting. Bilateral talks only focused on Iran's nuclear program, whereas, Joe, we know that the U.S. wanted to expand that out. They wanted to have Iran's ballistic missile program on the table, also talk about their support for proxy militia groups, not to mention that they wanted regional partners in the room, too, to talk about how there could be broader stability in the region.
And I guess the U.S. was urged by a number of neighbors in the region to acquiesce to Iran's demands in this case. Is the fear of a strike that high?
Well, if you look at some of the lead up to these talks, I think that did raise the prospect of fear. We've seen this massive buildup of U.S. military assets in the region. That is actually part of why our own analysts are saying strikes could be likely, because we've already seen this accumulation when it comes to like the USS Lincoln Carrier Strike Group and some more of this armada that is now assembled in the Arabian Sea. With that said, there's still a lot of options on what military action could look like. Just because there's such a buildup of power, that doesn't mean that there could be a large-scale strike. We could see targeted strikes, for example, and that will sort of play with the different scenarios that end up resulting from this, particularly when it comes to the oil market. How big this strike would ultimately be, if Iran retaliates in such a way that would hinder the oil market, such as closing the Strait of Hormuz as one example. There's so many different range of possibilities that could happen. But if you ask the White House, as you just heard, diplomacy is still on the table.
It's interesting to think that this started as a conversation about protesters. The president remember, help was on the way. He said that if they execute the protesters, the United States would strike. And he told reporters yesterday that we had their back. Are we talking about protests anymore at this point?
Well, so you're hearing the rhetoric from the president, but now it's starting to shift back to this has to be just about Iran's nuclear program. Yes. And we got a preview from an interview that's airing over the weekend with President Trump on NBC News, where he was asked directly, you've said that Iran's nuclear program was obliterated. Why are we still talking about this? And well, we know significant damage was made when it comes to their program. President Trump is saying that they have this intelligence that Iran is rebuilding in a different location. And that is why it appears that we've seen this ramp up of escalation and tensions in the region. As just this week, Joe, you know, the U.S. confirmed it shot down a drone that appeared to be headed for the USS Lincoln Carrier Strike Group. We also know that Iranian gunboats were trying to board a U.S.-flagged oil tanker in the Strait of Hormuz. So there has been just so much pressure leading up to these highly anticipated talks today.
Gunboat diplomacy, as we continue to hear. Tyler, thank you so much. Bloomberg's Tyler Kendall with us live in Washington. We're going to be hearing, of course, from the president, as Tyler mentioned, during the Super Bowl. That's part of the annual tradition. And it is expected that we might learn more when he is doing some signing later on today in the White House. There is an event in the Oval Office. We'll see if it's open to reporters. But we want to keep the conversation going here with Hagar Shamali, who knows a lot about this part of the world and has been a voice of reason for any number of conflicts that we have talked about in the last couple of years. Former director for Syria and Lebanon on the National Security Council, CEO, founder, Greenwich Media Strategies. Hagar, it's great to have you back as we watch the justification for military action evolve and then the parallel path of diplomacy. Which do you think is more likely?
Well, I certainly wouldn't discount either of them. Is, you know, and the reporter before mentioned that really is that just because there are diplomatic talks, it doesn't mean that military strikes can't happen. On the contrary, when it comes to the talks that are happening and apparently they've agreed to another round, it's the U.S. side that is much less likely to be certain to engage in a way that is going to get anywhere. And the reason for that is that the Iranian regime has proven time and again that it is not willing to actually negotiate regarding its nuclear program or anything regarding its ballistic missile program, its support for terrorism and its human rights abuses in a way that is actually going to work on a level that is where the U.S. administration needs it to be. I know that in the administration and in Washington, they would like to see nothing more than this regime to go. It just needs to be in a way that paves the path for something stable afterward. They don't want to enter into a situation like Iraq. They also don't want anybody, they don't want them to have a nuclear weapon. I don't love that the focus has become talk about the nuclear program. I think that's actually quite detrimental for a lot of reasons, mainly for the Iranian protesters. But that said, Trump has come out and said fundamentally, and this is fundamentally the issue for them, is if they appear to be rebuilding a nuclear program, if they appear to be intent on building a nuclear weapon, then that's really going to be the no-go for them. So I would expect some strikes. When or how is unclear, but it's clear to me that Armada is there for a reason. And also that if it doesn't happen now and these talks fall apart, those strikes are likely to happen at some point in the future. Just as, by the way, I believe the regime is going to fall at some point in the future because it doesn't have an economic leg to stand on.
Boy, that's really interesting. Where do the proxies come in with all of this, Hagar? Will we be getting Houthi attacks from Yemen if it appears that we're on the march to war?
Probably, but it won't be that different than what we've seen over the last 2 years. And this is why I'm a little bit confused by the pushback by the Gulf. The Gulf leaders who really weighed in heavily to make this meeting happen. It was originally supposed to happen in Turkey. As was mentioned before, it got pushed to Oman. It got pushed to terms that are much more favorable for the Iranian regime in terms of what they wanted. And that's the Gulf leaders that really pushed the U.S. administration on that. And some of that is because the Gulf really prides itself on a general state of stability. And it's why they didn't like when Israel struck Doha, for example, right? They really view that as this is a bastion of stability in this region. This is what has led to our success. And so we don't want this kind of upheaval and instability. But the fact is that over the last 2 years, every time you've had ramp up or tensions that have increased or actual kinetic action, the fact is it's always been very limited. These are limited military operations. There have been threats. The U.S. has very successfully pushed back or prevented those threats or protected against them. And by the way, this comes at a time when the Iranian regime has never been weaker. We and the Israelis literally own their skies. They have no defense missile capabilities anymore. And they also have, if their nuclear program hasn't been obliterated, a large chunk of it has been destroyed. And so to speak as though the regime is in any way in a position of strength, I find very disturbing. And we should certainly not let the regime feel that way. But I do understand the argument that whatever we do in Iran, that we want to make sure that if the regime collapses, that the IRGC doesn't take over, because then it would be markedly worse. And I understand that argument, and I do think that that's something that's manageable. But that's where I see when I hear that talk, I'm not as worried about those threats. They've come up, we've managed them before. Now would be no different.
We're hearing from Jennifer Griffin at Fox that Iran says the talks lasted 8 hours. Hagar, is that encouraging? And why haven't we heard a readout from the U.S. side?
Well, 8 hours is encouraging. It's not surprising for talks of this kind and the amount, the extent to which they need to discuss. The Iranian regime is showing that it absolutely wants some kind of deal. And the reason is because it does feel as though it's really crumbling. And so now they're desperate. But in terms of a readout from the United States, this administration, in particular, the Trump administration, when they pursue their talks, I have found that in general, as a pattern, they don't tend to share too much with the public because they don't want the public in general, whether it is the regime that's listening or us sitting in the United States, understanding their next move, analyzing the next move, knowing what it could be. That unpredictability serves in the interests of the administration. And so I don't expect us to get much of a readout beyond what we know now, which is that there will be talks again, that the U.S. reserves the right for kinetic action, that they're going to continue sticking to their demands. But I don't think we're going to get much detail beyond that.
As a former diplomat, I wonder your thoughts on Steve Witkoff and Jared Kushner being at every table, whether it's talking to Vladimir Putin or, in this case, face-to-face with the Iranians for 8 hours. Are they the right people to be in this room?
This is the second time I got this question today. The thing is, it's not really my place to decide whether or not they're right or wrong. The fact is that President Trump really depends on them and has given them this mandate, and Steve Witkoff in particular, right? I mean, Steve Witkoff is officially with the administration as a special envoy and has already brokered deals. I mean, the Israel-Gaza one with Jared Kushner, of course, is a success. However you want to look at it, the war ended and the hostages were released. So they were able to achieve success there. They were not able to achieve success yet, at least, on Russia-Ukraine, and actually made some missteps there that Secretary Rubio had to kind of clean up and fix. And so it remains to be seen what they're going to be able to achieve on this one. I will tell you that this corner of the world, understanding the regime, its history, how it came to power, what its foreign policy objectives are, and that it is a regime that will never change its foreign policy objectives. It is fundamental. Pursuing terrorism and its nuclear program is fundamental to the regime's existence. Why? Because when it came to power in 1979, it came to power arguing that they needed to fight the West and the quote unquote oppressor, and that Islam was the way to do it. And that is why the way they fashion their support for terrorism, their Islamic extremism, their oppression is literally fundamental to their existence. And that's why no deal has ever changed their behavior. And you do need real experts of the region to understand that. But that said, I also think there's always value in having perspectives of, business people and the way they pursue deals. I do think that can be helpful. At the end of the day, it's, Trump has definitely, he has a lot of faith in Witkoff and has had that faith over the last year or so in these deals. So it'll remain to be seen, but I really don't think it's them alone anyway.
Yeah. I don't mean to sound too old-fashioned, Hagar, but I'm just wondering if there's anything left of the old Olympic truce. Opening ceremonies are taking place today. Doesn't that call for a halting of hostilities around the world for the next couple of weeks?
If only, Joe, we lived in a pacifist world where nefarious actors weren't seeking war all the time. I wish that were the case. I will tell you that the thing that I think is the point that's being missed in what I see in the talks regarding the regime, regarding its nuclear talks, is really the fact that when I say that this regime has no economic leg to stand on, I cannot emphasize that enough. One of its major banks blew up in December, Ayanda Bank. That is what led to mass inflation, and the Iranian regime absorbed the bank, printed money, led to mass inflation. That is what led to the protests. And there are 5 other banks that are about to implode in Iran. And unlike the United States, when this happened in 2008, we're the United States. We were able to take care of that and fund that. Iran can't. And so this regime could very well fall regardless of kinetic action. And so the conversation needs to be about, what do we do with the day after? How do we ensure that there is a stable transition, that the IRGC doesn't take over? Because when they're not going to be able to pay their own people, that's really when you see the potential for regime collapse. And that is an opportunity for the entire world. So that's the conversation I hope they're having. And I know that the administration is interested in the regime no longer being there. So that it's going to be, we'll see. But that said, sure, all of this leads to peace is what I would say, Joe. The regime falling, however it happens, leads to peace.
The view from Hagar Shamali. Thank you, Hagar. It's great to have you with us as part of the conversation today on Balance of Power. We'll let you know when we hear from the White House on that 8-hour session. I'm Joe Matthew. This is Bloomberg.